3% and 2.7 for the year. Is that?
That is exactly what I have, Joe. Do you want to do the rest of the core?
Slept shit out of him,
We've
Joe.
got a lot of stuff going on. If you don't need, if that's all, you can just.
Yeah, I mean that's fine. But here's the thing.
Slept shit out of him, Joe.
Making noise.
I would.
Computer.
Don't take
It's
that.
making some noise.
Yeah.
It's thinking.
I'll quiet it here.
He's a liberal.
You could
He's a Russian.
choose before you come on.
I didn't know you were going to be.
He's a Russian spy.
Are you a little nervous this morning? Are you on?
Am I ever nervous? Am I ever nervous after 30 years?
But Joe, a lot is writing on this inflation number, which comes out. We have fears that inflation is stalling, and questions about whether the Fed is at or near the end of this round of rate cuts. Here's the number: 0.3.
You can't believe it. Oh.
Said up from 0.2, and the core also 0.3, unchanged from the last month. There's 2.7, which, by the way, I heard in the last hour.
Well, I'll be
that's
back.
not really
Y'all take
missing,
care.
because you kind of take off a half a point on the headline of CPI there. It's the core that remains kind of stuck above or higher than the Fed wants it here. The
Jingle bells, jingle bells, the robin laid an egg.
1, 2, 3,
I am heading to my other job and I'll be back at open. Oh, jingle bells, jingle bells,
we had in the middle of the summer
jingle all the way. Oh, what fun it is to ride in my Passat.
Rate down to reflect the past progress with inflation, suggesting the Fed is looking through at least somewhat the current data, and that's what the market looks to be thinking as well. Ahead of the number, there's an 85% chance of a cut next week, followed by a pause next month, in January, and then a 2/3 probability of another cut coming in March, and then a little bit more in May of the same quarter point cut. All that said, there is a vocal contingent out there that thinks the Fed is wrong to be cutting here, with the economy strong, unemployment low, inflation progress stalled, and uncertain, potentially inflationary and or stimulative fiscal policies on the way. Question is, how many Fed officials see the world that way? I think that you see there's a couple, maybe.
They all know in the back of their mind that that's something that is voiced by other people. They may not agree with it, but certainly isn't clear cut. Especially with, we don't know, we were talking earlier about, there are 4 really huge uncertainties starting in January 20th, whether it's the immigration and what happens, whether it's extension of the tax cuts, whether it's DOGE and what happens
with government efficiency and spending.
And then tariffs on top of all. So how can you possibly know what to do with interest rates or where inflation is going when you have no idea on any of those?
Okay, but what do you think about a Federal Reserve that is essentially supposed to be apolitical, prospectively doing policy based upon things that might or might not happen?
I think
is that not interfering in the political
they
process?
need to look at if they got a dual mandate. I think that inflation is still a risk. We'll see today. But if they know for sure that the labor market's softening, then I could understand a cut.
My concern is that the Fed and even most economists have no idea how this stuff plays out. Even if you know what the policy
you don't even know if we're in restrictive mode right now anymore, do you?
I think we're in restrictive mode.
I thought some people were even questioning
some
that.
people question that, but I think it's still pretty evident that it's, to some extent, the Fed is restrictive. And
where do you see that in the stock market or anywhere else?
You don't see it in the stock market. You see it in some of the rates being paid. For example, this NFIB survey, they were 8.8% is what small business is paying for loans right now. Your credit card loans, your mortgage rates, those are restrictive.
But if you would think inflation, we're not at 2, we're 35% above 2.
Right.
And it could come back. And if wage gains continue, and we were just talking about the port strike on January, or not a strike, but there's negotiations.
Can I say one thing before we go, which is smart investors know this. You got to take today's CPI together with tomorrow's PPI to get the calculation for the PCE, which is the thing the Fed follows.
Right.
So today's hot CPI is supposed to be a little cooler tomorrow in the wholesale numbers. Okay. So smart people know that it's a combination.
See, I didn't know that.
I wasn't trying to say.
Well, that's kind of what you're saying. You're saying if people other than you are thinking about, it's okay. All right. You're getting me for what you're getting back at me for what I said at the beginning when I was going to let you just.
I'm not getting back at you, Joe. I was trying to be.
It's nice to see you, sir.
You'll be back, won't you, at 8:30?
I don't know now. Maybe not.
We could probably handle it.
No. We can't handle it. We need the professor. We need the professor. Coming up, Lead Edge Capital founder Mitchell Green's in town. He's going to join us to talk AI and tech IPOs. And then later, President Biden promoting his economic success in a speech yesterday at the Brookings Institute. White House economist Jared Bernstein is going to join us to discuss that and more. Squawk Box rolling on.
Warranty.
Welcome back to Squawk. IPOs in 2024 so far have raised now more than double since last year's listings. And another tech company going public tomorrow joining us right now on the IPO window, and so much more that's going on in tech and everything else. Mitchell Green is here. He's the founding partner at Lead Edge Capital, which is now invested in companies like Uber, Spotify, and Alibaba. Year's almost over, my friend.
Almost over.
It's almost over,
time.
but this is almost vacation time.
They're going to get one more in.
They're going to get one more in, but the question is, what do you think 2025 really portends here?
It's going to be better than 23, better than 24. It's not going to be a blockbuster year.
It's not.
I don't think it's going to be a blockbuster year. I think the issue you have, and if you actually look at the data, we had looked at it at our annual meeting like a month ago, and I think there's been about 10 tech IPOs over the last 12, 18 months. And 9 out of 10 of them were above the IPO price at a pretty good amount. I haven't looked at Reddit in the last couple of weeks, but that thing had like Sword and ARM and a bunch of these other things. The biggest issue you have is the best companies raised so much money in 20 and 21. They effectively completed IPOs already.
As private businesses.
As private businesses,
yes.
Correct.
And therefore, you're going to get into the same kind of situation that Stripe is in today?
Correct. I mean, companies such as Grafana Labs, who just did a big secondary that was announced, Stripe. If you think about it, between 2005 in 2019,
Right.
when a tech company went public, it would raise $100 to $500 million. Okay, forget Alibaba and Facebook
Right.
and some of the giant ones. Well, now fast forward to 20 and 21. How much money did companies raise? Like $100 to $500 million. You have companies that have 300 million on the balance sheet, like the best companies, which there's probably 10 to 15 stripes. If you ask the bankers at Goldman Sachs or Morgan Stanley, you'll get there's 10 to 15 companies like a Stripe or like a Fauna or things like that. Now there are hundreds of other unicorns that raised that are 100 to 250 million of revenue.
Right.
The issue is they're not growing that fast, and they're all negative 10 to plus 10% operating margins. And if you look at the way public companies are trading right now on the rule of 40, which is take the revenue growth plus the EBITDA margins. If you grow 50 and have a negative 10 EBITDA margin, your rule of 40. But what you
Explain that again. The
Yeah.
rule of 40 is
So rule of 40 is a metric that a lot of investors use to just describe like what is a good business. And a good business, people like to say, is rule of 40. And what that is revenue growth rate
Right.
in the current year plus your EBITDA margin. So if you are a rule of 60 business, if you have 40% growth
right.
and 20% EBITDA margins.
Okay.
You are a rule of 0 business if you have 30% growth rates and negative 30% EBITDA margins. What you have a lot right now, and a bunch of these like unicorn companies that raised, look, they all missed their financials they originally thought they were going to hit. And so you have a bunch of businesses growing 20-25% a year that have negative 10 to positive 10% operating margins. And so you got a bunch of businesses.
Rule of 0.
Rule of 0 to rule of 10.
Right.
Those businesses, if you look at the way they trade on the public markets and just look at how like segment all the software companies by rule of, start at like rule of 90, and like the Datadog, Snowflakes of the world, and take them down to rule of 0, it is directly correlated with very high correlation. And a rule of 10, rule of 20 business trades on average 2 times revenues or something.
So do those become zombies? Do they become acquisition targets? Do you
Zombies for a while. At some point, they will become acquisition targets. The challenge for them is, not challenge, is they have so much cash.
Right.
They themselves have hundreds of millions of dollars often on the balance sheet, and venture capitalists and private equity investors love to just waste their time and sit on boards forever. Why take the mark and sell it at half the value you have it marked at, when you can just sit on it and try to convince your investors for a decade that like, oh, it's worth what it is, and try to grow into the valuation. There's all these people like want to, it's hopes and dreams. It's like, oh, we're gonna make this one change and then it's gonna grow again and we're gonna take it public. Yeah, the amount of companies that re-accelerate after they get to like 10 to 20% revenue growth is so rare. And then I think the other issue with the IPO market is you get the venture funded companies, and then you have the big buyouts.
Right.
The companies that Hellman Friedman or
Yep.
Blackstone and Ares and Apollo own. They all have lots of debt on them. They don't grow that fast. And third, they own the whole business. So when you take them public, you get it. Like we were an investor. We do some stuff on the public side, and we owned a business. It's publicly disclosed in structure that Thoma Bravo had taken public.
Mm-hmm.
It went public. Post deal, they owned like 90% of the company or something to that effect. If you're Fidelity, Wellington, T. Rowe, please explain why you want to buy a position down from 90 to 80 to 75. You have like a wall of selling in front of you. And so the challenge becomes just getting these big institutions interested in wanting to buy the positions
Right.
and like massively concentrate. I think it's a
Okay,
big issue.
more broadly before we go, what is your sense? Just the market has moved. Obviously, it's been a huge move this last year,
God bless Donald Trump.
right?
Yeah.
And my question is, if we have this conversation again, same time next year, where do you think things stand? Do you have any?
We're not experts in the market. You have like Steve Cohen or Paul Tudor Jones giving and things like that. The economy is pretty darn good. Our companies are hitting numbers. If I talk to colleagues at private equity funds and venture funds, things are doing well. There's still, I don't know what the concentration. You've had, I think, more of a rally in the last 4 or 5, 6 weeks in small cap companies, so that's started to adjust. But look, I think Warren Buffett has like this like ratio he uses of like market cap to GDP or something, and I think it's pretty high. So look, what I do know is that markets don't move. Markets move in the ways that cause the most amount of pain to the greatest number of people. People appear to be pretty bullish right now if you look at like leverage ratios and on hedge funds, and things like that. And you're probably one geopolitical event away from something big happening, but who knows? I have no idea.
One geopolitical event away.
Mitchell, those look like Taylor Swift bracelets.
They are Taylor Swift bracelets. I have daughters who are giant Taylor Swift fans. Did you go to a concert?
Of course, but I haven't made those, but I have seen people make those, and they made me one that said, I think mine said Red because I like that song or something. Yeah, and the tour just ended, so that really is.
They are Taylor Swift bracelets, yeah.
For your daughters.
For daughters, yeah.
For your daughters. Okay.
My daughters, yeah.
Yeah.
Still wear them. Make them happy.
Whatever you say. Okay.
Amazing phenomenon.
Mitchell Green, one of the
Unbelievable.
great Taylor Swift fans of our time. We appreciate you being here. Everybody's a fan.
Mitchell Green.
Everybody's a fan.
Still to come. Stocks on the move this morning. Up next, though, as nuclear power comes back into vogue, a lot more uranium is needed. CNBC's Pippa Stevens traveled to northern Saskatchewan. She did, for a look at the world's highest grade uranium mine.
1,600 feet underground is the world's highest grade uranium deposit. We got an inside exclusive look at Cameco's Cigar Lake mine. The details up next on Squawk Box.
Nuclear energy, seeing renewed interest, fueling demand for the uranium that's behind all the reactors. Our Pippa Stevens, I don't know what happened. Who'd you make mad, Pippa? She is in northern Saskatchewan with a look at the west. You're gonna have to tell us how you even got there. What was involved, Pippa? But actually, it looks pretty cool. What you did up there.
Yeah, good morning, Joe. So we're at Cameco's Cigar Lake mine, and this site alone supplies about 11% of global annual uranium demand. And we got a look at the one-of-a-kind drilling process the company developed in order to access this high-grade ore. This is the jet boring system that was developed for cigar lick, and this is the only place in the world where this type of machine is used. And the reason is twofold. The first is that the sandstone above the uranium-rich ore is unstable, so they can't access that uranium from above, so they had to do it from below. The second reason is that this is the highest grade uranium deposit in the world, and so you can't have people in close proximity to that uranium, which is why they developed this JBS system. Now you see that orange drill bit, that is drilling up into the ground and accessing the uranium-rich ore body. Then you see these pipes. Those are inserted in order to bring all of that slurry back down before it is sent for processing. And you can see here that this area has already been partially drilled because of those concrete-filled backholes where the JBS system has already accessed the uranium-rich ore. Now, we went all around this mine, and this is not an easy operation to get up and running. It took about a decade to come online from first construction to first production. And so looking forward into the future, some are saying that with all this renewed interest in nuclear energy, demand might start to outstrip supply.
We've never seen supply-demand fundamentals like we're seeing today. And you know, all of the drivers, we're talking about decarbonization, electrification, energy security, and now big data, the hyperscalers coming looking for clean electricity, and they're all looking at nuclear, and I've never seen it like this.
And I gotta tell you, Joe and Andrew, it's really pleasant down here. It's relatively balmy, 40 or so degrees compared to outside where the real feel is negative 25.
I'm wondering, I don't want to know why it's warmer down there, but you can't get anywhere near there, near the uranium, right? I mean, the REMs must be unbelievable in terms of the radioactivity. I mean, just doing this, there's so many logistical concerns. Did you fly, where'd you fly into, Pippa? Did you go into Saskatoon or, and then you had to take a smaller flight?
That's correct.
You did, and then a smaller...
That's correct, we flew from Saskatoon. Yes, we flew from Saskatoon, then took a smaller flight up to Cigar Lake. We're about 660 kilometers north of Saskatoon. And Joe, to your point, there are concerns because this deposit, the concentration is 17%. That's about 100 times greater than your average uranium deposit. And so that is why the company developed the specialized jet boring system so the workers don't get anywhere near that radioactive ore. And I got to tell you, I'm wearing a dosimeter right now, and the reading is, 0.66 microsieverts. That's the same as what you get background radiation walking around in your average life. And I'm right in the middle of this uranium mine, so this operation is entirely safe.
Do you have any, okay it is, but do you have like a little film thing that measures how many, whether you would get more than you're supposed to get? I used to have to wear one in a P3 lab because of radioisotopes, but do you have anything measuring the amount of radiation you're getting right now, Pippa?
Yep, so right now I'm getting 0.66 microsieverts, and since I've been here the last 24 hours, I've gotten a total of 4.9 microsieverts, and again, that's the same as what you get as background radiation. All of the employees wear dosimeters that are monitored on a monthly basis, and all of that is very highly regulated. They also do urine analysis, and so they take these concerns very seriously.
No kidding. Wow, that's fascinating. You probably wanted to do this. I was kidding. If someone tells you, yeah, I've been assigned to a story up in northern Saskatchewan, but this is actually very cool. And kind of, it's not quite a Miami Beach, Basel art show assignment, but very interesting, Pippa. Thank you.
It's a good one. It's a good shot.
I'm not going 1,600 feet down.
No.
And I don't like up or down. I don't like places where you can't breathe, either like outer space or down in the underwater, right? I'm a wimp.
I can't breathe right here. Coming up, a look at the stocks moving in the pre-market, and then we're going to talk to White House Council of Economic Advisors Chair Jared Bernstein. He's going to join us to talk about President Biden's economic record. Don't go anywhere. Squawk Box coming right back. Take a look at the futures right now. Dow up about 7 points. You look at the NASDAQ up about 43 points. The S&P 500 up about 8.5 points. Want to get straight over to Dom Chu, who's got a look at this morning's pre-market movers. What's on tap, Dom?
Hey, good morning, Andrew. Good morning, Joe. So we'll start off with shares of Dave & Buster's on the fun and game side of things. We're talking down right now about 14.5% after reporting disappointing quarterly results after yesterday's closing bell. Sales growth at established locations also came in below expectations, those so-called comp store sales. The company also announced the resignation of CEO Chris Morris. Current board chair Kevin Sheehan will serve as the interim CEO until a permanent successor is found. So Dave & Buster's down big. GameStop, meantime, is higher right now by about 2.5% after reporting a mixed third quarter yesterday. The original meme stock reported better than expected profits, helped along by cost-cutting initiatives. The gaming retailer also announced the completion of its at-the-market stock offering program for the quarter. It said it doesn't expect any further similar stock sales for the remainder of the current fiscal year. It's now, by the way, holding more than $4.5 billion worth of cash equivalents, and marketable securities. And we'll round out things with shares of Boeing, a Dow component, moving right now up about 0.5% after J.P. Morgan named it a top pick, citing Boeing's built-up inventory after, quote, minimal deliveries this year. The news comes after reports yesterday that Boeing restarted production of its popular 737 MAX jet. The aerospace giant has, of course, had a very tumultuous year that was plagued by safety concerns and that machinist strike. Those shares are down about 37% year to date. Now, for more on that and other top analyst calls of the day, just head over to CNBC Pro over at cnbc.com/pro. Subscribers get the full detail of all those big calls of the day. Andrew, I'll send things back over to you guys.
Okay, Dom, thank you for that. Nice to see you. We'll see you in a little bit.
Up next, White House Council of Economic Advisors Chair Jared Bernstein is going to join us. And then in the next hour, reaction to the data point of the morning, November CPI. It's the latest test for the Fed and its continuing fight against inflation. Former Federal Reserve Governor Fred Mishkin will join us. Actually, his name's Rick, but who's counting? Squawk Box, be right back.
diseases.
Welcome back to Squawk Box. In a speech at Brookings yesterday, President Biden addressed his economic legacy when he leaves office next month, saying the following. He said, quote, "I came to office with a different vision for America that's been consistent with my record, good, bad, or indifferent, since I've been a senator. Grow the economy from the middle out and the bottom up. 4 years later, we have proof the playbook is at least now working." Join us right now with more on the president's economy. White House Council of Economic Advisors Chairman Jared Bernstein, good morning to you. I'd love for you just to try to assess, and I read the piece in the Times where you did an interview about this. If you could assess how history will look at the Biden economy, but also in the context that clearly Biden lost, I think largely, for better or worse, on the economy.
Well, thank you for inviting me to talk about the president's legacy. I think history will remember this administration and the president's economic policies really quite favorably, especially when you consider a set of foundational investments, standing up domestic industries, production in many of the products that are going to dominate the future, whether we're talking about EVs, electric batteries, clean energy production, of course, semiconductors, bringing that production back to our shores. We now have $1 trillion of private investment flowing into those areas, building thousands of factories across this country. And a lot of that is foreign direct investment as well. Countries, and the president talked about this in his speech yesterday, countries like South Korea and Japan deciding to build plants here. If you then add the infrastructure work that, of course, has been neglected for so many years, the disinvestment that preceded us, I think history will look very favorably on how those investments play out.
So, Jared, I don't disagree that history may look fondly upon this period on a relative basis to what had obviously happened during COVID and the like. My question, though, to you is this. Politically, the game, and I don't want to even call it a game, but if you're one political party or the other, is to stay, is to win and effectively stay in power. Not just to stay in power for the sake of power, but for the sake of being able to actually see through the policy choices that you begin. And the truth is, a number of the policy choices that have been made in the last 4 years may ultimately get unraveled in some kind of way in the next 4 years. And so my question is, if you could do it again, what would you do differently?
Well, first of all, let me just start by saying that some of that unraveling might be a lot harder than you think. I don't care if you're a D or an R, if you have a set of computer fabrication plants in your backyard that's already employing thousands of construction workers and soon will provide jobs for manufacturers where non-college educated workers can make $100,000 a year. The president covered this in his speech yesterday also. I think you're going to be pretty hesitant to take that down. And in fact, Republicans were already sending letters to the incoming administration saying, don't do that, don't go there. Also, think about some of the cost cutting around the health measures that we've passed to cut costs of prescription drugs, insulin, and so on. But look, you make a fair point. I mean, winning is definitely one way to keep yourself able to keep being able to generate this kind of progress. And we faced a lot of headwinds in that regard, not least of which, of course, was the elevated price level. That was a global problem, one that's hurt.
But Jared, do you think if you could go back in time and you could advise President Biden from the beginning, is there something you would have said that would have been different? What have you said? I'll give you some examples. Would you said, you know what, actually, the sort of regulatory posture that the FTC and the DOJ are going to take towards companies, that's not going to work in this environment, given how far down the rabbit hole we are here, and where inflation and so many other issues are a factor. We need to unleash the business community in that regard. You may say this is a terrible idea, by the way, because you could argue competition may help with inflation and the like, but on a short-term basis, I'm just questioning some of the scenarios. Would you say, you know what, maybe we wouldn't do the full package in terms of how much money was going to go to the Inflation Reduction Act? I just wonder whether if you could go back in time, get in the time machine, what you would have done that would be different today?
Well, I think in every case you're raising, as you yourself just suggested, there's two sides to that issue. So, for example, if you did less on the rescue plan, our economy might not be the envy of the world that it is when it comes to innovation, productivity, growth, job creation. I just came back from Europe, and trust me when I tell you, they're looking at us and trying to figure out how we got where we are relative to where they are. In terms of how businesses have done, perhaps you have a point, but on the other hand, we're seeing highly profitable businesses that are fueling a stock market that's at record highs, helping 401ks stay pretty healthy as well. So I think if you look at the record, and I actually heard you tick through some of this yesterday, Andrew, the record speaks for itself, and it's extremely strong. We were hit, as were incumbents across the world, with a global inflation. And those elevated price levels in a world where people could still remember what things used to cost, despite our work to help lower
Jared,
costs.
I don't disagree, but I'll just say politically. Look, here's the political question. The political question is, yes, I do think if you go back in time and rethink the regulatory posture, the business community, which clearly turned on this president, might be in a different place, right? You go back and look at how an Obama or a Clinton dealt with the big tech back in the day. You had a situation where they would praise tech publicly and then bring them into the White House, have conversations with them in private and give them a hard time. I don't know if that's the right approach or the wrong approach.
Here's my view on what you're asking.
And then I'd go to the Elon Musk of it all. The truth is that Elon Musk should have and could have been, I would have thought, a Biden supporter, a natural Biden supporter, but the administration almost purposely tried to use him as some kind of boogeyman to use against the unions.
I don't think
and
any
in fact,
of that
it turned him in to not just a Trump supporter, but one of the most vocal and wealthy and big spenders against your own campaign. And so to me, I look at those things and say, if you could go back in time, if you were advising him then, you'd say, okay, let's rethink this.
No. So look, let me start with a seasonal reference. If ifs and buts were candy and nuts, then every day'd be Christmas. So you've given me a lot of sort of counterfactuals, things that could have gone this way and could have gone that way. I would stipulate that none of those would make a difference in the political outcome. I mean, there's no way of knowing that, but all of the things that you're mentioning to me sound like pretty small potatoes at the end of the day when it comes to what people were experiencing in the economy. And I also think if you go down that rabbit hole, you kind of lose the thread of what we're trying to talk about in the last couple of days. I mean, this legacy is important, not just because we want the world to know how we got to where we are and how middle-out, bottom-up growth is a much more effective set of policies than trickle-down economics, but to also make sure folks realize the seeds that we've planted for foundational transformation of this economy for years to come. This is the economy that the incoming administration is inheriting, and it is the envy of the world. And if they nurture those seeds we've planted, we're going to have a much better economy than if they don't. So rather than the ifs and buts, I'd rather look at where we are, where we're headed, the legacy of this president, the foundational investments he's made, and the bottom-out, middle-out growth that got us to where we are today.
Jared, I guess the way that, in a nutshell, the way I'd maybe say that, and we're still arguing about Reagan. I argue all the time about his legacy, Bill Clinton's legacy, and depending on your partisan lens, how you view what happened. But I guess that to push back on some of the things you said, we were in a supply-constrained world post-pandemic. The additional stimulus that many people now agree probably was over the top caused 40-year highs of inflation to come back. It may have been global, but it did happen here. Okay, but it's still, we spent a lot of money here. We're still spending, we got a $2 trillion deficit, which is double what it was pre-pandemic. So we're still spending too much. So that caused inflation to go to 40-year highs and ate up all the wage gains that you worked so hard to get, so that no one felt like they were getting ahead. Everybody felt like they couldn't make ends meet. And it resulted in losing 7 swing states, 312 electoral votes, losing the popular vote, and actually losing the House and divided government. So, you can put as much lipstick as you want on it, but that's what the jury of the American people decided on the economic record.
You definitely make a fair point, okay? So, and I am acutely aware of the outcome of this election. So I hear what you're saying, Joe. At the same time, we need to check some facts here because I still think facts are important. In fact, Reagan, I know someone you greatly admire, has said, facts can be stubborn things, but they're still facts. So in fact, real wages are up for the past year and a half. Real wages have beaten
price. It was
price
a 4-year presidency, Jared.
Since the president got here,
are we finally back to above where it was when he took office?
Hold on. Let me have my say here. Since the president got here, real average incomes are up almost $4,000.
That's not wages, Jared. That's incomes. That's from the stimulus. That includes the stimulus that people got in post-pandemic.
I took the stimulus out of that calculation. It includes jobs, wages, and other income sources, but not the stimulus. So look, we can have that argument all day. There's no question that there were economic headwinds in people's minds as they went to the polls. You are right about that. But there's also no question that this president presided over 16 million jobs created, the lowest average unemployment rate of any administration in 50 years, a record 20 million new business applications, the smallest racial wealth gap in 20 years, more Americans with health insurance than ever before. We talked about the stock market a minute ago, and $1 trillion in private investment flowing into this country to stand up foundational new investments. What you said is true, Joe, in terms of the political outcome. It's undeniable. But what I'm saying is also true, and I think we have to square both of those realities.
I hope we needed infrastructure. Obviously, it's been neglected for a long time. I want some of the industrial policy to work out in terms of bringing important industries back here. I don't know if we can pick winners and losers. I'm thinking about Intel. Was that the right company to get all the money? We won't know for a while.
Well, something the president said in his speech yesterday, we now have the top 5 chip manufacturers investing in this country. It's the first time it's ever happened. I think that's a great sign for the future. And again, the incoming group needs to take care of those investments, needs to nurture them, as well as the cost-cutting measures we've implemented to try to help people with the high price levels they face. So a lot of this...
Well, I know how hard you work. I know how hard you worked and how hard the whole team worked, and obviously there's certain things that are, like you said, that are indisputable. The stock market, the unemployment rate, the GDP, and everything else. But
well, thank you, Joe. That's true.
Yeah. All right. Thanks, Jared.
Jared, thank you again.
Thank you.
Welcome back to Squawk Box. Barclays downgrading major home builders from overweight now to equal weight, projecting a new ceiling on the sector, partially due to rising land and labor costs. Now take a look at this weekly mortgage data out just a short time ago. I want to get straight over to Diana Olick, who joins us with those latest numbers. Good morning to you, Diana. What do we got?
Good morning, Andrew. Mortgage applications, mortgage rates actually fell again last week. Not a huge drop, but enough to push a little surge in refinance demand. The average rate on the 30-year fixed for conforming loans fell to 6.67% from 6.69 for loans with 20% down. Again, not huge, but it was the third straight week of declines. As a result, applications to refinance a home loan surged 27% week to week and were 42% higher than the same week a year ago. The percentages are large, likely because the base volume is still so small. Most borrowers today have mortgages with rates well below what is being offered today. From 2020 through the first half of 2022, rates were below 4%. Now, applications for a mortgage to buy a home fell 4% for the week, but were 4% higher than the same week a year ago. Demand from home buyers has been gaining over the last several weeks as more inventory comes onto the market. Mortgage rates, though, did gain 10 basis points to start this week. That's according to a separate survey from Mortgage News Daily. That erased a lot of last week's drop, but they could swing in either direction today, as you know, with the release of the monthly consumer price index. That's the last piece of the economic puzzle, really, before the Fed decides what to do with rates next week. Andrew?
Very good. I don't know if it's very good, but it's good. It's good to see you. Thank you very, very much. When we come back, up next, Trump bump or slump? That is the question. Morgan Stanley's 2025 Big Bang predictions. It is out, and we're going to speak to their analyst about all of this right after this.
Inside Wealth.
Morgan Stanley is out with its latest large cap bank upgrades and downgrades heading into 2025. Joining us now is Betsy Graysick, Global Head of Banks and Diversified Finance Research at Morgan Stanley. Good to have you on. Good
Thanks for having me here.
Let's start with, did anything change based on the election outcome for how you're monitoring things like this?
Well, look, the election outcome does have an impact on how we think things are going to roll from here, right?
So it did matter. It did matter.
Yes.
Yeah.
Yes, and especially going into the election, I don't think the expectation was there was going to be a Republican sweep.
Right.
So the R sweep, definitely adds a layer of differential relative to where we are today. That does, drive some outlook changes.
I've almost seen across the board that when they look for the Trump trade, financials are almost always included. We've also had guests in that said that it's going to be the dawn of a new age for community banking because of less regulation. Do you view that? Is that true, or who does it benefit the most, and what are your favorites?
Okay, so I'm the U.S. large cap bank analyst, so I'm going to leave community.
You don't care about community.
Well, no, I care, but I'm not going to.
Is it across the board going to help the financial sector, Trump?
Can I step back and just say that for regulation, I think we all know that at least for financials, I think we will see a stabilization of regulation. And for the large cap banks, and that's for the large cap banks, the mid cap banks, there might be a couple of changes based on, stemming from what happened with First Republic and Silicon Valley Bank Group. But beyond that, we're really looking for stabilization in large cap bank regulation. And that's a positive because elimination of a negative is a good thing.
Yes. So with all that, when you take that into, excuse me, I don't know, I think I have GERD. I don't think it's, but with all that in mind, who does it benefit the most? Who are your favorites? What have you changed based on your past outlooks?
So I would say the three reasons why we are overweight the U.S. large cap banks is number one, capital markets rebound, number two, regulation stabilizing, and number three is quantitative tightening ending in 2025. Now on regulation front, it's a positive for everyone to understand that we're going to have stabilization as opposed to creeping tougher, not sure how tough. Right, so everybody benefits from that. I will say that in our outlook, we indicated that regulation stabilizing is most positive for Citigroup, for Wells Fargo, for Goldman Sachs, and the reasons are different. Citi has a significant amount of excess capital. Understanding that rules are not going to get tougher gives them more flexibility to begin buying back stock or stepping up buybacks, which I know they discussed at a conference this week. So, and that's really powerful for that stock because it is trading below book.
You did upgrade, BK, State Street, Northern Trust. You downgraded Bank American Regions.
Yes.
There's a reason. Why do you like three and not the other two?
Okay, so Joe, this gets into.
Is it too much in the weeds?
No, not at all.
Okay.
It gets into something else about the election. So the election brings with it, and the R sweep brings with it, in our opinion, regulation stabilization. But it also brings with it tariffs and immigration change, right? So when I think about how that's going to roll in 2025, obviously it's very uncertain, right? We're not sure how tariffs and immigration is going to impact the economy. So we have a base case, a bull case, and a bear case.
Okay.
And in our base case, we've got modest impact. Bear case is more negative impact, and bull case is very minimal impact, right?
I see.
And the challenge is because of the tariffs and the immigration, I have an equal probability going into 2025 for bull, bear, and base. It's the first time I've been equal probability going in. And so how do I set up for that? I want to have overweight stocks that can do well in the base case and bull case, which comes with capital market rebound, significant, very significant capital market rebound. And then B of A doesn't have as much skew as Goldman, Citi, and others. So that's where they got the downgrade. But then on bear case, where the tariffs and immigration comes with some pressure on the economy in the second half, I want a little less exposure to credit, and that's why regions got pulled down.
Okay, so yeah, they're not. I mean, even the downgrades are only to equal weight at this point, so we understand that. That's just good. How far do you have to travel to come down here? You're in town, right?
Oh well, my next gig is across the road, so I'm good.
Okay, good.
Yeah.
Very good.
I would just like to say, if I have a second, the capital markets rebound piece of the equation here is really important. We were at 30-year lows in terms of M&A, equity capital markets, debt capital markets relative to GDP.
See, now he's interested. Yeah.
Oh yeah.
Capital markets.
I was interested the whole time. But
no, I know. But you love capital. You love capital markets.
I'm fascinated by it. I am.
Very good.
Well, it is up and to the right. It is game on for 2025 because we have been coming off of this extremely low period of activity relative to GDP. 30-year lows in just 2023. So we're just pulling off of it. Now we've had a couple of good quarters, but even 4Q annualized, equity capital markets and M&A is half cycle average. Okay. So this is where the juice is, especially in the first half of 25.
Get your party hats on, people. Betsy, thank you.
All right, thank you.
It is just after 8 a.m. It's about 8:04 if you're hanging out on the East Coast right now. You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan. Becky's off today. Got a bunch of big stories to tell you about literally happening right now. Macy's shares falling. This after the department store cutting its annual profit forecast. It also missed third quarter revenue estimates. You look at that stock, unfortunately off now about more than 10% this AM. Meantime, shares of U.S. Steel, they are stable this morning. This after falling close to 10%. That happened yesterday, and that followed that report suggesting that President Biden will be killing the acquisition of the company by Japan's Nippon Steel. The White House saying Biden opposes the deal, but that he's going to wait for a national security review for it to be completed before he makes that decision. And the likelihood is, we think, that President-elect Trump might make a similar decision. We don't know, but nonetheless, that is the presumption. And then there's this. The German headquarters of Adidas was raided in connection with a years-long tax investigation. The company confirming the raid in a statement to CNBC. A spokesperson saying authorities are investigating customs and tax regulations. So there's that. Adidas. It hasn't moved the stock.
CPI's, no, it has. CPI's coming, but in anticipation or ahead of that, nothing's really happening. At least the Dow has recovered. But the NASDAQ continues to trade in positive territory. Not a great week, Mike Santoli, so far for the Dow.
Nope.
I don't know. Is it the beginning of something or just a pause that refreshes?
It feels like a pause, and the majority of stocks, Joe, in the market have been pulling back so far in December. So market breadth has been under some pressure. That was after the very strong November. And the S&P 500, I mean, it's only 1% from record highs, but it also is back to essentially where it traded the Monday after the election. So we hit like 60.17 as a high on that Monday, the 11th of November, and that was 1 month ago today. And here we're just, a 1/4%, 1/3% above there right now. So no real harm done to the trend, but it shows you a lot of stocks below the surface have been cooling off. Take a look here at one of the more dramatic relationships, which is the momentum stocks. These are the stocks that have done really well over recent times, cracking this week, as well as the equal-weighted S&P 500. So the breadth has been suffering while the S&P itself has done okay. Final point ahead of the CPI number, market-based inflation expectations, the break-even inflation rate embedded in treasuries. Nothing too much to report here. It's around 2.3. This is a 3-year chart. You see there was a little bit of a lift after September when we averted the recession fear and the Fed cut rates. But it's, it's percolating a little bit here, but not at alarming levels on a long-term scheme, guys.
All right. CPI could change a lot of stuff, but probably not. It's kind of been coming in right around expectations.
Exactly. It's been pretty close to forecast for quite a while now.
It has. All right. Thanks, Mike.
Okay. For more on the markets, as we count down to the CPI inflation data, I want to bring in Brenda Avangello, Chief Investment Officer at Sandhill Global Advisors, CNBC contributor. We are, what are we on? December 11th. So We don't have many days, like 20 days basically for the rest of the year. Where do we land? And maybe I should ask you, where do we land a year from now?
Yeah, so not much time to go, but we do think that here and now there is a lot of, we feel that we're in a honeymoon period following the election. Now, maybe not on the large cap side, as Rick Santoli was just talking about, but in other areas of the market, certainly are seeing that there is continued signs of optimism. So we think it's in investors' best interest to probably regroup and trim a little bit of exposure here. I think we might see more of that in the new year when clients can avoid a tax hit in 2024 and move that into 2025. But I think getting ahead of that for those that can makes a lot of sense. As we look to next year, I think we could have a more normalized return year, although there are a lot of things to focus on. One is on the corporate earnings side, where we think we absolutely need to see another strong year of earnings growth in order to see more appreciation in large cap stocks in particular. But then we also need to have clarification on a lot of things on the policy side that are still unknowns that could have an impact on the economy. And Trump is really, based on his cabinet picks, trying to disrupt a lot of parts of government, which you could argue is needed. We need to have more efficiencies, but it could be a lot all at once, which could also be somewhat disruptive. So our view is that there's likely to be more volatility next year. Maybe we get a 5 to 8% return. But it's important to remember what that feels like, because when you've been up and to the right for as long as we have been here, it could be pretty jarring to see a bigger pickup in volatility.
Brenda, we're all waiting to hear what the president is ultimately going to do and what Congress will do with him. I think part of the job of any great investor is to try, for better or worse, to predict what he's going to do and get ahead of it. Mm-hmm. So when you think about sort of the big items on the list that you were just describing, which way are you betting, or are you trying to suggest that you shouldn't even try?
Well, it's our view that when we think about Trump's style, he loves to shock with these big statements. But when it actually comes to reality, I don't think his intention is to leave a legacy of having harmed the U.S. economy. So I do think we'll likely see things in a more rolled out in a more measured way. But in that being said, if we look at the economy today, though, it's quite healthy. We are in the midst of two potentially transformative growth drivers with artificial intelligence and GLP-1 drugs. So there certainly are reasons to be positive. So we think it's not in investors' best interest to become too cautious, assuming that policy is really going to have a huge detrimental impact. But rather focus on the fundamentals of the economy, the fundamentals of corporate earnings, and position accordingly. And in our view, that means being slightly overweight equity. We think there's more opportunity on the small and mid-cap side, which really haven't participated as much, but would be beneficiaries if we did see deregulation, lower corporate taxes, and an ongoing health in the U.S. economy.
All right. Brenda, I want to thank you. Appreciate it.
Thanks so much for having me.
Did you see yesterday, it's very interesting, the Elon Musk talking about the cure for our healthcare problems. It was after a thread which talked about prosperous countries, right? Why we overspend on healthcare. We consume everything, and we consume more healthcare services, and that's more expensive than anywhere else. And the more prosperous you get, the more healthcare that you're able to consume. Yes. The reason the outcome is not good is because of obesity and because of what we do. Right. And if you get the GLP-1. GLP-1 should be cheap and could solve many of our issues. Right. And that Elon posted that cheap GLP-1 drugs could solve almost all of our problems. I don't know if that, I mean, fentanyl and drug addiction and things like that aren't great either. But coming up, we're going to ask Florida Senator Rick Scott for his take on President-elect Donald Trump's DOGE initiative. Squawk Box will be right back.
educator.com/TV.
Less than 6 weeks till President-elect Trump takes office. Our next guest joined the Senate Doge caucus and met recently with Elon Musk and Vivek Ramaswamy, and join us now to talk about what kind of spending he thinks should be cut and would make sense. Florida Senator Rick Scott. It's been a while, Senator. Good to have you on. Did a big re-election.
It was great to talk to you, Joe. This is exciting. This is an exciting time.
I guess if you just read the headlines, there's a couple of issues that keep coming up, Senator. Number one is what you can do with executive orders and what Doge will actually have the ability to do, I guess, number one. And then how much of the federal deficit or budget is stuff that you can't do anything about because it's already done. And the discretionary is so small, the numbers like trillions, it's hard to imagine how you would do that. Are those preconceptions wrong? Misconceptions?
Oh, absolutely. So, as a business guy, what always frustrated me was just the regulatory environment, the permitting environment of all government, local, state, and federal. So first off, what Alon and Vivek are going to do is basically what I did when I became governor of Florida. I reduced the regulatory environment. That actually is going to have a bigger impact on job creation, business success, things like that, than anything else we do. Taxes are important, fees are important, but actually the cost of the regulations. Just in Biden's 4 years, the cost of federal regulation has gone up by something like $2.6 trillion. We only have a $28 trillion economy. So number one is we're going to reduce the regulatory environment. We're going to make it easier to get permits. That's going to have a pretty big impact on our economy. Number two is we've had a 2% increase in our population in the last 5 years and a 53% increase in spending. That's not Medicare, that's not Social Security, that's just wasteful government spending. Everything under the sun got spent the last 4 years. So what we're going to be doing is we're going to go through each department like you do in a business. Like I did when I was governor. There's 4,000 lines of the budget in Florida. I went through every line and say, could we do this less expensively? And we're going to find ways to do that. We're not going to cut Medicare benefits. We're not going to cut Social Security. We might figure out a way to provide health care at a more efficient way and less cost. It shouldn't cost what it costs. I used to be in that business. It should never cost what it costs in this country. But I'm excited. We're going to see reduced regulation, easier permitting, and we're going to reduce the deficit. My goal, of course, is always to balance the budget. I did it as governor of Florida. We can do it federally, but we've got to work at it.
Do you think that, I mean, there's so much included in talking about this, and do you think the ACA is fixable and that stays? Do you think the president-elect has, he talks about a repeal and replace with what?
Well, I think the way you have to think about it is you have to say, how can we provide health care so Americans can afford it, have access to it? It shouldn't be, we don't have to worry about what our existing laws are. We have to just say to ourselves, what would you do to make it more efficient? There's efficiencies in every industry in the country, including healthcare, and we've got to figure out how to do that, and it's all doable. I had to do it in business. We will do it in government too.
Will you be able to do
Elon's done at SpaceX?
So will Doge have the ability, the authority to do that? Will you need legislation, and you think you can count on the House if it's got a very small margin for Republicans?
I think, well, first off, it's always hard to reduce the size of government. People always, they love all the spending, but the American public knows that inflation is tied to wasteful government spending. There's so many people engaged in this now around the country that say $36 trillion of debt is too much. $2 trillion deficits is too much. 53% increase in spending when we've only had a 2% increase in our population is too much. So there's going to be a lot of ideas. So I think I'm very excited that we're going to be able to figure a lot of things out. I've been having a lot of meetings with House members, friends of the House, and in the Senate, come up with ways to reduce the waste in government spending.
Do you think, Senator, that all the tax cuts that President Trump talked about, is that doable at the same time that we're trying to deport a lot of illegal immigrants that maybe even if it is just that have committed crimes? Or is it possible to do all things? It seems like a lot of balls in the air.
We're going to secure the border. We're going to make sure we're going to stop the flow of drugs, criminals and terrorists in the country, right? We're going to start enforcing our laws. And then in the meantime, we're going to figure out how to say, what should the federal government be involved in? What shouldn't they? What should the states be doing? I mean, this is going to be a very good reset of what our federal government should be doing and what it shouldn't be doing. Americans are fed up. They're fed up with inflation. If you talk to people all around this country, they're sick and tired of everything costing more money. That's caused by wasteful government spending, not living within our means. You have to live within your means. Businesses have to. Your government's going to have to start doing the same thing. It's going to happen. It's all doable.
I saw Senator Thune talking about, President Trump needs to get all of his appointees confirmed. And I couldn't tell whether he was sort of foreshadowing some recess appointments or not. How do you see that playing out? Who gets in? Will there be any more that, I think you know Matt Gaetz pretty well, but what else happens in your view?
Well, first off, we're going to get Trump's nominees confirmed, right? And if we have to do recess appointments, I think we'll figure out how to do that. But I think look at his nominees. I mean, Marco Rubio, Pam Bondi from Florida, Mike Waltz, who doesn't have to be confirmed, is going to be National Security Advisor. Susie Wiles from Florida, who's the Chief of Staff. Wonderful people. You look at Pete Hegseth. Here's a guy that's a combat veteran. He knows the risk of sending troops into battle. He's led troops in battle. He knows people that have lost. He knew people that lost their lives. He knows people that have been injured. That's the type of person we want to run the Department of Defense. So I'm very excited about the Trump nominees. We're clearly gonna change the perception. I just got off the campaign trail. People do not trust the federal government right now. This has got to change. They don't trust the FBI. They don't trust the DOJ. They don't trust Homeland Security. We have got to figure out how to bring trust back to the federal government.
Senator, were you in talks to do anything else, or you think you can do the most good where you are?
Joe, I have been on my own. Started a company since I was 25. I think I'm way better off to do exactly what I'm doing in the Senate.
Okay, that's didn't take any time for that answer. That's good, because they told me we were out of time. Senator Scott, thanks. Hope to see you again soon.
Okay,
Thank you.
Bye-bye.
Okay, you too.
Coming up, some brand new inflation data. It's coming from the Labor Department. Don't go anywhere. We're going to get that number, and we're going to speak with former Federal Reserve Governor Rick Mishkin. Squawk Box returns with the number that could move this morning's market after this.
Jim.
Welcome back to Squawk Box this morning. Apple officially launching ChatGPT integration with its Siri assistant. Now, the company rolling out updates for the iPhone, the iPad, also Mac software. ChatGPT will then trigger when users ask Siri what otherwise complicated questions that it can't answer on device, if you will. Apple's software identifies these questions as better suited for OpenAI's software, and I'm excited to actually try it. I have not done so yet, though the Sorkin boys have been using it.
Really?
Yes. I think it's cool.
Coming up next, the number of the morning, November CPI. We got to combine it with tomorrow's PPI, though, according to Leisman, to get a clear picture of what the PCE is going to look like. A lot of letters. Squawk Box will be right back. We're just literally seconds away from November CPI. The futures this morning, not a lot happening, up 5 points on the Dow, but NASDAQ, I look like I'm looking at you. That's not, I'm not. I'm looking at the monitor over here because they moved it because we have two guests, but it's all TV. Rick Santelli, what is it? CME, the numbers?
The November Consumer Price Index, expected up 0.3% on the headline, comes in exactly as expected, up 0.3, which is 1/10 hotter, at least until revisions hit the wire, of last month's up 0.2. And by the way, we had 4 up 0.2 in a row. Up 0.3 brings us to the equaling of April when it was up 0.3. We have to go to February and March, both up 0.4% to find higher numbers. If you subtract food and energy, it remains at up 0.3%, equaling our last look, and it is now the 4th consecutive month up 0.3%. Just to put a face on it, to find a higher number, you go to March when it was up 0.4. The low read of the year was up 0.1. That was mid-year in June. Year over year, up 2.7. 0.1 hotter than the rear view mirror, as expected. 2.7 is the warmest since July when it was 2.9. The high water mark is 3.5 from March of this year, at least the high water mark for 2024. And in my opinion, the most important number of all, year over year core, expected up 3.3%. It comes in up 3.3%. The third 3.3% in a row. High water mark for the year was January when it was 3.9. The lowest it's been this year is 3.2 several times. That was July and August of this year. Now, 1913 is when the CPI headline index was created. The all-time high, well, 315.664 was last month. We actually are a bit lower, 315.49. So we broke history. The all-time high was last month. We're a smidge below it in the index. If you look at the core index created in 1957, the high water mark is this month at 322.657. So you look at the indices, you know, we're very close. It's almost every month you make new all-time highs, which really goes to the gist of higher prices in the public. It's about where they were and where they are now for the Fed. It's about the rate of change. And in both cases, they're definitely on the warm side. Joe, back to you.
I like your word choices, Rick. When you say warm, you mean, if you wanted to say hot, you'd say hot. So it actually is, your choice of words depends on the numbers themselves. And then I guess on the other side, it could be cool, could be cold, could it be lukewarm if it was less than warm? I mean, do you have gradations for everything? Think about that. Give me a good answer on that. In the meantime, I'm going to bring in our panel. Well, no, it's not really a panel. It's kind of a mini panel. Oksana Aronov, head of market strategy for alternative fixed income at JP Morgan Asset Management. Alicia Levine, head of investment strategy and equities at BNY Wealth, and our own Steve Leisman. Did you notice? Do you think
He's
about
really good. I mean, come on.
But it was warm. It wasn't
There's
hot.
a reason he gives the numbers and not me.
No.
Because he's that good.
Well, there's a lot of reasons.
A lot of reasons.
Yeah. So what do you make? Exactly.
I
what
want
we thought.
to talk about maybe a headline busted number here, which is kind of interesting. The owner's equivalent rent. Maybe we've been waiting and waiting and waiting and waiting for this to come down. 0.2%, and I didn't have a chance. Basically, it's back in line with where it was before the pandemic. The year over year is still a little hot because there's bigger numbers in the background, but 4.9%, that is helpful. Now, there's other stuff going on that is not as helpful, and that's, I got to go to another screen for, and that's food at home up 0.5%, the reacceleration, Joe, of, I don't know, I didn't have a chance to look at the detail where that acceleration is coming from, but it's worth pointing out. And of course, for my friend Rick Santelli, who does like used cars and trucks and has apparently a large garage full of, no, I'm just going here, up 2%. It follows a 2.7 number. These numbers had been negative for a while, Joe. Now they seem to be coming back up. The other thing worth talking about here is apparel turning around. It had been negative in the prior month, up 0.2%. And you didn't get the nice decline in energy that you had in the prior month. You're up 0.2% on energy, with gasoline up 0.6. So we got that big decline. You're seeing prices below 3, a little bit above 3 around the country. So that's where we're at right now. A little bit of push me pull you, but that rent number, I think, is something the Fed
We don't
will
need
watch.
anything accelerating, and that's what I'm going to ask Oksana and Alicia, because the big question, I think, at least on my mind, maybe other people, is inflation. I'll ask you, Alicia. Is it nothing? Is it under control? And can we cut? Can we feel just no problemo? New highs in the market, Bitcoin new highs, all this, GDP surging, unemployment very low. We're cutting.
What could go wrong?
Right. Is inflation under control enough to be cutting?
So we can still cut here, given where inflation is and given where real rates are, but it's unmistakable that the last 4 months with core up 0.3% month over month is a trend. And so that's an uncomfortable trend. And I think it really speaks to what the Fed's going to do.
Why would you cut if you're uncomfortable?
Because we are still, the real rates are still
So
high.
we're restrictive. You believe that?
I believe we're restrictive. I think the question is going forward. I think there was 100 basis points built in here where the Fed had room to cut from where the Fed funds rate was. I think going forward, we have to ask the question, if we have a booming economy and we have inflation, which is a little bit warmer, I'm going to use the word warm, you know, how much room do we have for 2025? And that's the question the Fed is faced with.
Do you agree?
So we continue to believe that this level of interest rates, when we got to the 5.5 and Fed funds, failed to deliver the kinds of restrictive effects that I think the Fed and a lot of the market had expected. And now the Fed is cutting those already not terribly restrictive rates, right? Where was the restrictive? Where did we see it? Did we see it in housing? Did we see it in business activity? Did we see it in consumer spending? Now we are seeing the stock market making higher highs all the time. We have still a strong unemployment market or strong unemployment figure. We have very all-time low risk premium credit. We have inflation stabilizing at a higher level than the Fed would like it. And I wonder how many higher than target core PCE numbers is it going to take for Powell to reverse course here? Because remember,
reverse course. Does that mean not cut, or does that mean?
I think they're facing a very real possibility of having to take some of these cuts back in 2025. I mean, I think they're on course to do whatever it is they're going to do this month. But I think as we go into 2025, with the continuation of fiscal dominance that we're continuing to see, creating tailwinds for the economy, excuse me, but headwinds for their policy by extension, the new administration with more of an inflationary impulse, right? Whether you think about tariffs or taxes or immigration, right? We don't know what they're going to do, but at least that's the expectation. I think we're staring at a very real possibility of the Fed having to take some of these cuts back.
I think I could get you and Rick arguing probably on this. You don't think so, Rick? Do you? I mean, which are you on? Feel more comfortable with what Oksana is saying, Rick? Do you think it's crazy to be cutting here?
Yeah, I definitely do think it's crazy to be cutting, but you know, our job isn't to try to put an adjective on in front of cutting. Our job is to let the viewers know that, you know, it's pretty much baked in the cake that the Fed is going to give a quarter point at the December meeting. But what I think is the most important discussion to have is how the markets have responded to these numbers. Okay, so we get warmer. And what's my definition of warmer? Well, hot would be if we make a new high with regard to where we are in inflation. Cooler, or as expected, of course, would be if we start to see zero or maybe some deflationary pressures in the rate of change. But warmer is because it's warm. It's kind of hotter than it's been expected. But interest rates went down when this number came out. We went down 3 basis points in a 2-year. We went down 2 basis points in a 10-year. We rallied the pre-opening Dow Jones Industrial Average. So the question we should be asking is, why are the markets rallying on warm inflation? And to me, that's the biggest issue of all. The Fed has a bias here, whether they admit it or not. They want to lower rates. The market isn't giving them any justification to do so, and market participants only worry about surprises. But in the end, the stickiness of long duration Treasury yields, which no Fed official, including Jay Powell, ever seems to want to answer, why are long rates so stubborn? We can see why they're stubborn. Just because they're as expected, the stickiness of inflation and the possibility of not only sticky, but going up down the road is what's keeping long rates higher after all the dust settles on these numbers. Look for more curve steepening when the market is so unresponsive to inflation that certainly is nowhere near the Fed's 2% target.
We got a crossfire segment brewing here.
You know, I'm somewhat in Rick's and Oksana's camp in the following way. If you have a situation where there's a dramatic change in fiscal policy and the Fed has to reverse course, then the Fed has to reverse course. I think there's a...
You're blaming this on Trump's policy. So you can say you're right that we're restrictive, but he could do something where you'd have to change your mind, but it wouldn't be your fault.
I'm more interested, Joe, in this idea that you want...
Yeah?
Of course, what you want, you're going to back. You're just going to dance.
Always.
You're going to dance. Always. You want the Fed to act prospectively on potential policy. I don't know that I want the Fed to do that. I would rather see what is passed by the new Congress.
You don't want them to do it, so you can blame being wrong on something that you don't...
I don't blame anybody here. I do want to point out, however, the data, which is pointing out the interesting thing that Rick is talking about. You've had an increase in the probability of that August cut, an increase in the probability of a cut down the road. I didn't look at the December 25 Fed futures contract here. I'll look it up real quickly. But what's interesting here is Rick's talking about this notion of somewhere in there is this dance, speaking of dances, of the market gaming out what the Fed is going to do versus what the market thinks the Fed ought to do. And I don't know where to look to the market for the ought to do. I can look at them gaming out what the Fed is going to do. And so what the takeaway from this number is that this quarter point cut and perhaps another quarter down the road, another 50 next year, is still on.
Elisa, so you, and then we'll get to you. Sorry, but and you think that's good? You think that's all right?
So I think policy is unknown. I think there's an expectation that the new administration is going to have idiosyncratic policy. I think the absolute notion that tariffs must be inflationary may be wrong. And if we just go back to the first Trump administration, in fact, inflation fell after the imposition of tariffs because there was already a bit of a slowdown in the economy. So we can't look at any one variable as saying this is, by definition, inflationary. It is the way many variables interact. So I think probably January's off the table here. You know, in our 2025 outlook, we see maybe 2 cuts next year, but the economy may not give the Fed that. Because if we're growing at 2% and inflation is sticking around at 2.5 to 2.7, it's not a real place where they can cut. I don't think they have a hiking bias, but I think that they keep the cutting bias and just wait, and there's a pause.
And the reality is that we're growing at about 3% this quarter, right? Atlanta, the Fed's own measure is 3.3% for Q4, was under 3% for Q3. And I actually want to take the administration out of it. Because even before this election, we knew that whoever ends up in the White House in January, the fiscal backdrop will continue unabated. And that will continue to put pressure on the long end of the curve. And that's really the thing that matters the most, because the Fed doesn't have any control over that. So all these things we're talking about that are potentially tailwinds for the economy, they're great for risk assets, which is where Alicia is. But I'm not so sure that they're great for risk premium credit or for credit or bond investors. Now, our job, similarly, is, particularly on my team, which is absolute return oriented, is to generate returns irrespective of which way the policy goes or what happens with Fed policy, et cetera. So we are very much for evolving portfolio construction and evolving approaches to investing in fixed income, which has had very little evolution, to address the reality that bond stock correlation is meaningfully positive, that there is no diversification benefit across the traditional fixed income sectors. They're all about 0.9 correlated. This was about 0.5 just 4 or 5 years ago. So there are real kind of shifts within the market that necessitate new ways of thinking, exactly as you said, because our job, and no one has a crystal ball here, but our job is to generate returns. And absolutely true, policy is unknown. The Fed itself, if you look at their dot plots, is terrible at predicting where their own Fed funds rate will be.
Right.
The markets are terrible at
And
predicting.
gaming out fiscal policy effects as well. Rick, just a quick question. Okay, sorry.
You got a team?
We have a team.
Is it your team?
It's my team.
Damn, you got a team. You got a team? You kind of got a team. I don't have a team. I got a wife and kids. You got a team?
Team for what?
She has a team. Looking into things. She has a team.
Oh, I have a team. I've got a team. We have 100 junior economics reporters. I'm the senior.
Rick, you got a team?
And there's 100.
You got a team, Rick? You got the
I
Cubs.
have a team. I have nothing out here. What,
I got nothing.
I didn't even have a phone.
You have a team.
No team here.
You have a team.
Rick, where would you look, Rick, for what the market thinks the Fed ought to do, Rick? What number there?
I think I would be looking more towards the kind of 2- and 3-year maturities as what the Fed ought to do. And to see the 2-year unable to get under 4% tells me a lot. That ultimately the market is looking for the Fed to do less.
Thank you.
All right. How many people?
JP Morgan Asset Management is
Oh my
an
God.
incredibly
You know what I got?
researched organization.
I have a pack. I have a pack. I have 4 dogs. That's going to have to do, I guess.
Do the dogs help?
You know, have you ever heard of it?
I have a dog.
Oh, they're amazing.
Okay, we got to go. We're going to go deeper into the new inflation data with former Fed Governor Rick Mishkin. Do not go anywhere. We're coming right back after this. Welcome back to Squawk Box. November CPI coming in just as expected. The core reading up 3.3% on a year-over-year basis. Joining us right now is former Fed Governor Rick Mishkin. He's now a professor at Columbia University. Rick, it's great to see you. I'll ask you, first of all, just the basic question. You look at this number, you put yourself in Jay Powell's brain / the rest of the Fed, and you think to yourself what?
So I think there's going to be really interesting discussion at the upcoming FOMC meeting. These numbers are coming in as people expected, but they're not great numbers. And you see a stalling in this path down to 2%. It is true that from the point of view of the real interest rate, which is the interest rates adjusted for inflation, which is what really does affect the economy, there's some restrictive policy here. However, we're in a situation where there's other elements of the financial markets that are very buoyant, particularly the stock market. So there's really a situation here where the Fed may not really be restrictive enough given the numbers. So they sort of don't want to surprise people, so that it's likely they're going to cut at this meeting. But on the other hand, I think there's going to be a lot of discussion going on about whether, in fact, the numbers are not coming in as good as they'd like them to. They don't want to get stalled at 3% and not be on a path to the 2% target. And so the likelihood of them actually having to pause in terms of cutting rate is now getting a lot higher.
So, I don't know if you were listening to the last conversation we're having, but one of I think the big questions is whether the Federal Reserve should, on a prospective basis, be making any kind of decisions ahead of what may actually happen with Trump, the Trump administration, and this Congress, which is to say, if you start to believe the tariffs are coming, if you start to believe the DOGE is coming, if you believe in any of those, if you believe any of those things are going to happen the way they've been described, are you supposed to get ahead of them, or are you supposed to wait to see whether they happen, how they happen, and then get the reaction to them? But by the time you get the reaction to them, are you already behind?
So I think the one thing that is sure about this next administration is the unpredictability. I mean, this is one of Trump's hallmark aspects, which is, he says he's going to do one thing, the other things happen. He flips on a dime. This is not Trump is not somebody who operates on deep principles. He's very transactive, and so we just don't know. And there's also an issue that many of these things that Trump has talked about could be a one-shot deal where it comes in but will affect the price level, but not necessarily inflation over a longer horizon. So I think the Fed basically is got to wait, and there's no reason not to wait right now on this. And certainly they don't want to act or say that they're reacting to potential policies. That's not the way the Fed really wants to operate, because it gets them into the whole political debate about whether they're helping the administration, they're hurting them, or whatever.
But so you ultimately believe they need to stick with this 2% idea?
Oh, absolutely. There's always an issue about how fast and how aggressive you have to be in getting down to 2%. Right. So, for example, if the economy's not doing that well and you're still inflation, which is a little bit high, you should actually not work very hard to get it down to 2% quickly. In fact, when we describe inflation targeting, in terms of the research on it, which I've been a very big participant in, we actually describe it saying it's flexible inflation targeting. That you should worry about where the economy is. You do have to worry about these other factors, and the way you build that in is not by changing the target, but actually talking how quickly you want to get back down to the target. Right. And so, in this context, there's a lot of flexibility built in. What I think that is important is that when inflation is higher than you'd like, you don't want to be in a situation where, say, you're going to just accommodate that. Right. That actually produces very bad expectation dynamics. Actually, there's a lot of research and theory and actually applied work that indicates that actually hurts your outcomes. It's very important to get this nominal anchor in place in a strong way, but then quickly when I'm a sailor, so how far out you put the lines to your anchor is something that you have to do by judgment, and that's exactly what they need to do.
We gotta leave it there. Rick, I want to thank you for joining us this morning.
You're very welcome.
You bet.
All right, coming up, another look at the state of inflation, this time on food. and how prices are impacting some of the biggest U.S. restaurant chains. Don't go anywhere. Squawk Box will be right back.
Welcome back to Squawk Box. Coming off November CPI data, we want to talk food inflation, which is impacting some of the biggest restaurant chains in the U.S. Danilo Grillo is there, a senior research analyst at Bernstein. I want to start with Starbucks. Price of coffee, which broke a 47-year-old record just yesterday. Where are we really, if we were to look historically at what the cost really is?
Yeah, look, the cost for coffee clearly has spiked over the past few months. This is not something new. This is not something that really happened over the past month. It's something that evolved this year. And part of that is because of the supply constraints that we are seeing specifically in South America. So there is some production constraints that are really affecting, and obviously some macro factors and weather factors that are affecting the amount of coffee being produced right now, which is affecting the cost of the coffee beans. And so this is affecting both the Robusta as well as the Arabica. I would say the Robusta beans, which are typically the lower quality beans, have seen the kind of biggest spike in terms of cost. And Starbucks, since you were asking about Starbucks only offers Arabica beans, so it should be relatively less affected by these price increases, even though coffee still constitutes about kind of low 20% of the food basket for Starbucks.
But is your sense, a bit more broadly, what's happening here? Whether we're having a big debate in this country about whether Kroger and Albertsons should be allowed to merge, and whether that would be inflationary or not. Is it about that, or is just food prices have just gone through the roof?
Well, that's an excellent question. Look, the food prices, especially for the restaurant sector, have been really skyrocketing. Maybe during 2022, early part of 2023, there was an expectation that consumers were able to essentially absorb some of the price increases that either the franchisees or the local restaurants were charging to consumers. to protect their margins out of commodity costs really increasing, especially, and also labor cost increasing. So to protect their P&L, they passed on some of the cost back to the consumers. At the beginning, this was working out. Consumers were able to essentially use some of the savings accumulated during the COVID era to continue to go to restaurants. And then all of a sudden, we've seen some big pullback among consumers. And this really spiked at the beginning of this year, and really kind of the bottom in terms of foot traffic for restaurants was in July, when you saw a big delta between food at home inflation versus food at home versus food away from home inflation. Just to give you a couple of numbers, the food away from home inflation used to be about 5.1% in January versus the food at home inflation at 1.2. And now with the latest data, we see that the food at home inflation is 1.6%, so going a little bit up, whereas the restaurant inflation has gone a little bit down to 3.6%. So when these dynamics are changing, when you have the relative inflation of grocery the decreasing versus increasing versus the restaurant inflation, that's when you start to see more people going to restaurants.
Okay, fair enough. I want to thank you for joining us this morning. I feel it every time I walk into a restaurant these days. I really do, Joe.
Yep, it's, we only have about 10 seconds to take a quick look at the futures and just, I guess, emphasize that we're on the same team. We're on a team.
Yes,
part
we're
of
on the team. We got our whole squad team.
Okay, all right. But it's not my team.
It's our
team. Make sure you join us tomorrow.
You are.
Squawk on the Street. There's no me-in team. No, there is a me-in team. Squawk on the Street is next.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Pre-market breathing a bit of a sigh of relief as November CPI comes in line across the board, although it's the fourth consecutive month up 0.3 on core. We'll talk about some internals. 2-year pretty steady at 4.12. Our roadmap begins with inflation watch. The path to bringing down price pressures appears to be stalling a bit. What that could mean for another Fed rate cut next week.
Plus, the deal is dead. Albertsons terminates its merger agreement with Kroger. Also files suit against Kroger for breach of contract. We're going to have those interesting details. And this hour, we are joined by the CEOs of GE Vernova and Southwest Airlines. Both will be right here at Post 9.
Let's get to some market reaction on CPI this morning ahead of next week's Fed decision, Jim. Wow, there's some growing controversy about whether or not we've stalled out, at least on core goods disinflation.
This darn shelter is just going the wrong way. And I saw a piece this morning, Barclays downgrading the home builders. I mean, there's just, no one's putting up the amount that we need, nowhere near in shelter. And it's, of course, that's rental, it's not home price, because that was taken out of the CPI. Also, cars. I mean, we got incentives all over the place, but we do not have any decline in used, and then going out to dinner. I mean, I come back, I said, David, you still have to change your lifestyle. You still have to say, listen, I'm not going to go out. I can't buy a used car. I can't get any break on my rent. If you're pal, you say, all right, so far it's not really, we did what we can so far. Let's see if we can't lean on it more. But the higher you put the mortgage rates, the fewer.
When you pointed out housing, as you always say, punches above its weight. You talked about Toll Brothers yesterday.
That downgrade.
And the mortgage rates just not where they need to be there.
Although we got the biggest jump in refis this week, Jim, since September of last year.
Well, look, there's just a lot of irrational behavior when it comes to rent. And it's almost like we don't know what to do. We find ourselves paying more for things that really make us feel not great. We don't want to, we go out, it costs a lot of money. We travel, it costs a lot of money, but we're addicted to travel, and we'll talk to Southwest there. There's some variation in the grocery. Grocery's not a horrendous place, but it says, listen, I've been saying this to the Fed, not the daily, but you got to go to Walmart, and you got to go to Costco. You got to fly cheaply. You got to go to Bookings, find the cheap, best place, best fare. You got to go to Carvana. You got to get the best used car prices. And I don't know where to go for housing. What are you going to move? You going to go to Salt Lake City? I don't know.
There's a big piece in the Journal today about Wall Street getting into the business of renting to people for long term because the dream of home ownership, they argue, is dying.
It is incredible to me that we're building so few homes, but then again, when you dig deeply into it, you discover that the home builders, David, they absolutely love making money. They are,
Yes.
home builders are like the oil companies. They have discipline. If they have discipline, America's a loser. But what are you going to tell Doug Yearley and Toll Brothers? Listen, we want you to lose money because it's really important for the country. I mean, this is a capitalist business.
It is. It is. And as we pointed out many times, of course, during a period of rising rates, you actually wanted to own the home builders.
Look, we also have that problem. We had that once in a lifetime. I was going over my mortgages, and I'm like, at 3.2. What am I going to do? Like sell that to pick up a 7?
No.
Wait, let me go lose some money and buy a smaller home.
No, I know. I think mine's up at 27, but at this point, I mean, I'd hoped there would be significantly lower rates perhaps by then, but now back to the CPI, who knows?
No, it's not. It's just not working. And the Fed's in a tough place, Carl, because they take rates up, then the home builders are not going to put up as many. There's nothing that seems to bring more homes to the market. There's nothing that seems to say that they're building a huge amount of apartments. I mean, New York being the fulcrum, and they're putting up thousands of units in Brooklyn, and they're all taken. They're all taken. I mean, my thinking was, wait a second, before you get too negative on the price going up, look at all the units coming up. But, we do have household formation. We do have demographics that make it so that we can't find cheap rents.
Yeah. Meanwhile, groceries, as Jim mentioned, food at home, biggest month-on-month jump in almost 2 years, and it kind of leads us to a discussion about grocery stores.
Yeah, we got a not unexpected outcome in Albertsons Kroger. We've been talking about it for quite some time, of course. Albertsons now has terminated that planned merger with Kroger. But here's a surprise. It's also suing the company for breach of the merger agreement. Now, federal and state judges in Washington, I think Oregon as well, had blocked the proposed deal. The FTC won here. They argued the combination would basically raise prices for consumers. And in fact, what you got here is an agreement by a judge who issued the preliminary injunction saying we agree. As our viewers well know at this point, of course, we spent a lot of time talking about Kroger's argument, which was we don't compete against your neighborhood supermarket. We compete against Costco. We compete against Walmart. That didn't ultimately pass the test with the judge. And by the way, I would point out in the risk arb community, there was not a lot of broad ownership here. Many had anticipated what at least Rodney McMullen, the CEO of Kroger, did not, which is this deal was not going to get past regulators and not going to win in court. By the way, it all comes, and there's a look at Mr. McMullen, it all comes as news of the president-elect has picked Andrew Ferguson to be the FTC chair, replacing Lena Khan. Ferguson currently serves on the commission. He's not going to need to be, therefore, approved. He already has been. He, perhaps following this line in the new administration, taking a tough focus on big tech, but perhaps not as much on everything else. The FTC has kind of had some wins lately. Of course, we know Tapestry, Capri, and now Kroger, Albertsons, after some big losses, as in Activision, Microsoft, Horizon, Amgen, kind of ending with a nice tone here. Guys, the lawsuit is what's really unexpected. In fact, yesterday, after the court issued its opinion, I was hearing hopes perhaps amongst some shareholders, well, maybe they'll try and bring it back in the new administration. Steven Feinberg, big Trump supporter, Cerberus, of course, his firm, the largest owner of Albertsons. He's on the board at Albertsons. He may take the #2 position at the Pentagon. Maybe they try and bring it back. No. It's dead. They've called it off. And now, Jim and Carl, Kroger says that, Albertson says Kroger willfully breached the merger agreement in several key ways, including by repeatedly refusing to divest assets necessary for antitrust approval, ignoring regulators' feedback, rejecting stronger divestiture buyers, and failing to cooperate with Albertsons. Whether that will be proved in court, who knows? They're seeking perhaps billions of dollars in damages. Don't see that too often. So, yeah, that's not coming back. Now they're suing their former merger partner, Jim. Rodney McMullen made a mistake here.
Yeah, he made a mistake. And I remember when it first came out, we talked about that because there is, it just as, page 30 of the ruling. You go into this elimination of significant competition. And it doesn't matter. You can't just say, you know what? You think these competitors Who cares? I mean, it's Costco. They didn't buy that. They even looked at the price of eggs in this country. I mean, damn bird flu. Let's get some more damn eggs.
Yeah.
And because they go, oh, the eggs are this, the eggs are that. But what, David, the industry has tried to combine before, and it's failed. And they just done things where they've tried to spin off. These people thought they had a spin-off that was
They thought they had it right. They thought they had a well-capitalized divestiture that would represent a true competitor in certain markets. Obviously, the FTC didn't believe that, nor did the judge who issued the ruling believe that that was going to be a real competitor.
Divestiture made sense when you listened, because I can.
And by the way, now Albertsons apparently doesn't believe it was a real competitor. Now, if you want to believe, honestly, I mean, this is the most interesting part of it. It's rare that you see a former merger partner immediately sue.
It's incredible, and I do think that the CNS, the well-capitalized, was very different from when Safeway merged and you had this Hagen that was broke almost.
CNS was going to be that so-called divestiture competitor.
I remember speaking to Rodney, and at one point he said, Rodney, this is a total loser. You're going to lose. And he just said, listen, Jim, you got to understand, you do all this stuff about Costco, you do all this stuff about Walmart. Ultimately, that's who it is. And I found myself thinking, okay, you know what? They bought the Rite Aid Walmart. Well, Rite Aid is this pitiful, helpless, not even giant anymore. And we're going to get to the idea that someone might want to buy Walgreens. I mean, I got to tell you, it's a foot race between destroying Walgreens, Amazon, and some outfit that wants to buy.
Yeah, I've got some thoughts on that.
Some cold water on that, please?
Yeah, well, I did yesterday on our air. It's a story, actually, Sycamore's exploration of a potential purchase of Walgreens that I was aware of for weeks, but chose not to report, in part because of so many of the gating issues involved there. I'll get to it in more detail a bit later, but suffice to say, the size of the deal, from an equity check perspective, the debt load at Walgreens, the challenges that Jim just discussed, not to mention further opioid litigation. I mean, you go on, and the need for the 18%, 17% shareholder, Stefano Pacina, to roll in, or 18% shareholder.
Are we supposed
so
to think
many
that
gating
Wentworth
issues
gave up?
there.
Do we think Wentworth gave up?
I don't know.
I remember he took it right when we went to the JP Morgan conference. He was so bullish, and I told him, I said, this is a bad one, man.
Tell people who Wentworth is.
J.D. Wentworth is a song stuck in your head. Didn't you see that show? Didn't you watch? No, Wentworth is just a fantastic guy when it comes to pharmacy benefits, but that turned out to not be the issue with Walgreens. It's the actual brick and mortar. Timothy Wentworth is a winner. So that's why I was surprised to throw the red flag.
Guys, between Albertsons, Kroger, we'll have some more on Hershey's and Mondelez. We'll get back to Sycamore, Walgreens. Carl, plenty of M&A news, related news, not necessarily deals that are going to happen, but stuff to occupy us and investors.
Not to mention, we'll get to Apple, Goldman, JPM, Lowe's. A lot of news today on the corporate side. GE Vernova has been on a tear, as you know, more than doubling since being spun off by General Electric 8 months ago. CEO is going to join us at Post 9. And some steadiness in futures here, as once again, CPI on headline 0.3, on core 0.3, although the year-on-year headline, the warmest since July. Stay with us.
Shares of GE Vernova have more than doubled since General Electric completed its three-way split back in April. The company hosted its investor update after yesterday's close of trading. I have to tell you, I was very excited about this presentation. GE Vernova CEO Scott Strazik is actually with us right now. You know, first of all, congratulations. And yesterday was a tour de force because I realized when I first met you, I thought that this thing was, are you kidding me? Well, I felt so bad for you.
Come on.
And no, I felt bad for you because I was worried about the balance sheet. I didn't know how much kind of cash flow you could generate, and I knew that the company itself was poor. This division was poorly run. I want you to take people on the journey because the journey's short, but the win is big.
No question. I mean, in the last 9 months, we've really shifted from areas where we talk about market opportunity to market reality. I mean, the reality is the world needs electricity right now and very well positioned to serve this market. We see it every day in both our grid and our gas businesses with a substantial increase in demand. At the exact same time, we're running the businesses better. You see that in the margin expansion in all three of our business segments. We're starting to generate a lot of cash. So the reality
talk
is...
about that because there was this, we generated $4 billion of cash in our first 9 months as a public company. I thought this was hemorrhaging cash.
You bet. $4 billion in the first 9 months. We'll end the year with $8 billion of cash. And we talked yesterday about the fact that we'll generate $14 billion of cash the next 4 years, and that's after investing $9 billion in innovating with research and development and CapEx to strengthen our footprint, especially in the U.S. for the market that's coming our way.
Now, let's just talk about demand for a second. There was a discussion about how backed up you are. I mean, you're about 60% of the market. I think you're working as fast as you can. You did say we don't want to pour new concrete. You do have the facilities.
That's right.
But don't you have to expand rather remarkably given what's going on in the data center?
Yes, and we're working hard to do that every day. I mean, for gas, that's in Greenville, South Carolina, and nuclear, that's in Wilmington, North Carolina. I mean, this is one of the areas where it's our history is a benefit for us.
You had 32 words on nuclear, right, when you talked about offshore wind. Why didn't you spend more time on nuclear yesterday?
Nuclear is very important. The reality is we have 65 plants in the U.S., 65 gigawatts running with our equipment today. We've got real opportunities to upgrade those plants and create new nuclear electrons this decade. We're working on that. Small modular reactor is going to play an incredibly important role next decade. We'll commission the first plant. 2032 in the U.S. is very practical.
We have uranium pieces running all day today. I want people to calm down. This is not, it's reality. But, one more question before I pass on. Did you get to read Ruth Porat's piece yesterday, A New Approach to Data Center and Clean Energy Growth from Google?
I'm familiar, but not the piece.
Why are they not calling you? They're doing this thing. They have Google, TPG Rise, Climate Partner, and Intersect Power. Where's GEV?
We're working with all these companies. We're working with all the hyperscalers right now. We work with TPG Rise. There's going to be a lot of solutions. There's going to be very much an all the above technology solutions. It's going to be a system of systems, and there's few companies better equipped to serve that complexity than Vernova. We'll do over $500 million, the only company.
$500 million in what? Sorry.
We'll do about $500 million of direct orders with the hyperscalers this year, primarily electrical equipment, transformers, switch gears to support those microgrids.
So that's like for behind the meter stuff?
That is supporting a lot of behind-the-meter electrical equipment, and the next step in this chapter is then the power generation that needs to
Well, a lot of them seem to be SMRs are a little ways away, so natural gas seems to be where a lot of them have to go, despite their carbon footprint commitments.
That's right, and we talked yesterday about the fact that we've taken 9 gigawatts of slot reservation agreements in the last 30 days for gas, very closely tied to the hyperscaler demand that's coming. So that is becoming reality. Now, with a lot of those customers, it'll be unabated gas this decade, but we also have very active discussions with them on how they decarbonize that gas over time. Carbon capture, hydrogen, both will play a role, but gas is going to play an incredibly important role this decade.
You know, I keep hearing things about potential shortages for things like transformers. Is that a real conversation going on? I mean, are there concerns?
We're working hard to ramp up our capacity. The reality is most of our bidding activity today for transformers goes into 2028. So we're working to improve our cycle time to serve this market. 2028.
So you're working to improve your cycle time to do what?
To do more for this market, because they'll take as many transformers as we can build.
They will.
No
I mean,
question.
is there anything that equates to this? Maybe the beginning of electricity? I don't
Well,
know.
I would say, listen, I'm a student of General Electric's history, right? And when you think about where we've been most impactful, think after World War II and the role that we played building out the electrical grid then, both the economy and really stabilizing the world. If you look at the load demand that we project the next 15 to 20 years, it's most analogous to that period of time.
What about policy risk? There's been a lot written about sort of classic NIMBY, municipal pushback to having something nearby. We don't know, maybe you could tell us how you think this new administration thinks about wind in general? Is there policy risk there?
Well, when I hear the new administration talk, it's very much an all-of-the-above technology discussion. And the reality is GE Vernova is very well positioned to serve that all-of-the-above technology solution, whether it be wind, gas, nuclear, investing into the grid. We talk a lot about U.S. competitiveness and innovation, not just for the U.S., but frankly exporting that for the world, for economic development and peace. And we see real opportunities to serve this administration with all of those objectives.
You mentioned $9 billion in, I think it was CapEx and R&D over
That's
the next
right.
how many
4
years? Is that going to be enough?
We may go higher than that. That's where we're starting right now. We're increasing our R&D next year 20% to serve this growing demand. We're increasing our CapEx budget. It could go higher. It'll go higher if the customer orders come through to fund the need to go higher with CapEx.
Well, natural gas has been up in the last few months, but would it ever make sense for a hyperscaler to actually buy a natural gas company, lock that price in, deal with you, and get everything done?
I think they're getting smarter every day on the full value chain of what the art of the possible is for them, and we'll keep iterating with them on many different solutions that they could use. But it's very clear for the economics of play for them and the data center build out, more power is critical, and we're going to have to look at many different alternatives to serve that growing market.
Do you ever sit back and say, wow, these guys just keep talking about renewable, and yet all they do is keep ordering natural gas?
We're having productive conversations with them to help them understand all the solutions that are practical this decade, and then how we work our way through decarbonizing those in the decades that follow.
Timing, man. Timing is very important. Is that when you guys were planning this spin, when Cope was planning this spin, I don't think he had the whole AI data center thing in mind.
I said it point blank. I said, will you stop it with that could ever be investment grade? Just stop it, Larry. I said, no, we could get lucky here. Lucky. Lucky's better than good, isn't it, Chief?
No lucky. We've got a lot of work to do. We've got an incredible opportunity to serve this market. We're going to keep getting better every day. That's the culture of continuous improvement, but I like our chances.
Stay humble, man. You got it going.
No.
All right.
Guys, thanks for having me. I appreciate it. Thank you.
When we come back this morning, Southwest Chief Bob Jordan's with us here at Post 9 as well. We'll talk about the airline's outlook for next year, holiday travel demand, maybe some Boeing. Take a look at the pre-market here as we continue to benefit a bit from this morning's CPI print. Don't go away.
4 minutes. Good morning.
Take a look at some gainers on the NDX. Broadcom's at the top. We'll get to this report about some new work for Apple. Mondelez as well, this $9 billion buyback, posing some questions about a would-be Hershey deal. We'll get Kramer's Mad Dash and the opening bell in 4 minutes.
Okay, well. I'm back. I'm here, Jake. I'm here. 606, our next resistance. 606.05. Let me see what everybody's saying here. Good morning, Mannequin. Good morning, Skunk Ape. Texas, unlimited cleaning service. Yabba dabba doo. James, good morning, Mr. Price. Or Mrs. I think it's James, so it has to be a Mr. Mr. Good morning, Magnificent Jimmy Joe, Jesse, and Randy, and Bonzo, and Ricky, and Rob, and Rims, and S, and Subway. We got a couple minutes left. We're about to hit my resistance level here, so we're going to see what happens. We got more to go. I guess the numbers were hot this morning. Core CPI was even prior, so that's still steady as she goes, all I'm seeing. There ain't no hot about nothing. But USA CPI month over month is hot. No, it's even. Oh, it's all even, ain't it? Ain't nothing happening. So steady she goes. Okay, yeah, the US CPI month over month estimate was 2% prior, so that's up. But that's not looking good either, at 2. So that's really nothing. It's a lot different than what they were thinking. Everybody's saying, well, Trump's in office, we're going to have a higher inflation. They've been barking that for a month or two.
All right, let's get to a mad dash. We got an opening bell a minute from now, so be quick, my friend.
I like discipline, and Mary Barr showed discipline. She's not going to lose all this money on this robo-taxi. It's not worth it.
Yeah, I'm thinking we just don't get in a hurry here. Well, we got to hold the 21. If the 21 doesn't hold, then we drop to the 63. A little bit above it. But I have 605.35. That's a SPY. Tesla's at 408. It's up $7 from the pullback. PLTR. AMD's up a little bit. WBA took a beating this morning. Or did it? What was that other one? Walgreens. I thought Walgreens took a hit. And then bounced yesterday. Takeover on Walgreens. Uber's down again. Yeah, these are way too fucking high. I don't want to get stuck in this thing again. So, what? Yesterday's high was support. My number will be a little different than yours. Right at 606476. So if we don't hold that, I'm going to buy a put. Let me get it up here. I got to get me I'm having mouse issues here lately with my coordination. SPX. Let's see how bad we've sold off on this thing. If it's worth it. I mean, 20-day, 1 hour. Let's clean this up. So we do have, oh yeah, this is a solid resistance right here. We filled the gap and dropped for a double bottom on the 5-day. So we got a neckline. We got a head and shoulders. And this is on the 1 hour. So that gap is going to be resistance to break. And if we break that 606824 and support for right now has to be 606085. And that's the pivot point inside the gap. So now we're below it. Today's the 11th. The 60, oh, I'm going to go to 609. Let me see here. The 607 or the 606 put. At 88. $606, 6060. Oh, let me get this here. Keep putting November in here. God dang. I don't know what it is with me about that November. Oh, 606. I'm not a spy, you idiot. Never mind. I'm going to get out of this. Never mind. I got to get my marbles together here. I got to get out of that. So right now I'm in the SPY instead of the frickin' So I got the SPY at 88 cents, 606. Let me see the SPX. We have 3 white soldiers, so that's a bullish indicator. And that's on the 1 hour, 1 minute. On the SPX. I'm doing the same day on this. I got to get out of this trade as soon as I can, out of a SPY. I don't like doing the same day, so. We got an expansion pattern. There's your first support. RGTI is when I was watching about a new quantum computer. I'm going to learn about them a little bit more. This has had a good run, 100% almost, 24 hours. So that's a Fibonacci setup there. Yep, right at 628 will be your buy signal. At 50% pullback, or we hit this definitely is top here. And that's RGTI. It's a penny stock, so. IWM, we got the QQQ at an high. We got resistance. What's that doing over there? Am I confused or what? What the fuck? I'm at 94 on my call puts on the SPY. I'm going to make a fast scalp out of this because I don't like being in the same day. So I made 60 bucks. Out at 94. Where's that Mike's sizzling index? Tesla, Amazon, Mister. All my favorite stocks are on here. App still dropping. We got CRM's up 570. UNH triple bottom on UNH right now. And we got Lilly. We're gonna look at Lilly. Oh gosh, look at United Healthcare. What's going on here? insider betting. I heard had the DOJ looking at him before he got shot. Might be an inside job. He was buddies with Nancy. So I got out in time. Now we're double topping, so let's look at the SPX put. If we break here, we go higher. You think so, Mike? Double top. The 60-60 put, which is the one I'm looking at, or the 60-50. If got to hold the 9, if the 9 doesn't hold, then I jump in. You got GME's earnings were they weren't. The good thing about the GME one is cost cutting. So I probably Warren Titty's going to get out there and do something today if he hadn't done it already. Yeah, see how it pulled back real fast again? I'd have probably, if I had shares, I'd have jumped in that. Okay, watch SPX here. We're at 480. We have an ascend. Well, we have a wedge. We have just a symmetrical flag. Let's change 1 minute time frame. Let's put this on the 5 minute. Let's see if we got a tweezer. Yeah, I can't tell nothing with a 5 minute. Okay, I'm going to get ready to watch this real close right here. It's either we're going to break now or I buy the put at 470. SPX put. Got it ready. I'm going to get this date right. December the 11th. Strike. $60.60 at 4.70 at 470. Tight stop. Damn it. There it goes. Shit. Okay. That was a bullish flag. I'm going to add two more right here. 3.90. And I'm taking a risk right now. $4.16. Okay. I got 4.16 average and I have 3 contracts. And by call. That's a choppy stock, Bubba. Bullied. Tesla's dropping. I got SPX puts. Looks like I'm going to keep holding them here. I got a little under 12. I got a little over 1,200 in it. And what was another one I'm going to think about here? GME. I have a little bit more momentum. Supermicro, SMCI. $30. It's cold. 29 on my computer. Amazon's up 350. Mister's up 20 bucks. Coin's up 14. Meta's up 10, 11. That's on Mike's Sizzling Index. Ooh, I'm going to end up taking a loss, I think, right off the bat. Let's see here. We'll see if we have a continuation real soon. Actually, I need to raise that up a little bit. IWM's at the VWAP. Okay. Come on, baby. UNH. Looks like we had a little knife there on SMCI. 50-cent drop. $237.29, $237.90 is 200 on IWM. I'll be right back. I'm gonna go get my little coffee going, warm up. I have a feeling I'm gonna make a lot of money today. I hit a double yolk egg this morning. Nice bounce back on the knife here on AMD. Had a $3 drop, bounced up. Apple, new highs. We've got a double top coming on Meta. I'm going to add 3 more here contracts to SPX, I think, if I can get this at $3. Hawk 2. Drop, baby. Give me the 21. Tesla bounced off that little support level I mentioned. It's up about $2. Or it was. What's GEV? That's the new one for me. GEV. I heard that there's interest in what's that stuff you make nuclear sites with? The biggest miner that mines about 11% of that stuff is had a project going on for 10 years, and now they're starting to uranium. So they're going to start profiting on. They're seeing a lot of orders for uranium. And they might not be able to fill them. GE Nova Scouts are in electricity demand. Keeps the buy rating to 4.25. That's $70, $80 up. Microsoft's up a couple bucks, $2.50. UNH, man, that's a $31 sell-off. This thing get below 500. It was down to 400 at one time. We're at the 50 SMA, so that could be a buy signal on the weekly. Then on the yearly, could be the 200. I bet it is. Yep. So we got support. We're at a support. This thing got all the way down to 436. That'd been a good run. Shit. Well. Have you ever had one? As far as I can recall, this is my first one. Well, we started our first big red candle, but it's still, we're under the 9 now. We got to see where this candle ends up. I should have grabbed more of them. I could have brought that price down to 350. 3 more of them would have done it. I haven't got my shoes off yet. Oh, that's a solid support right there. Just right in here. 60, 70 area. Damn, there's my 3 crows. So I should get out of the trade here and get back in it, but I'm just going to hold it for a little bit longer. I should go ahead and get out now. But this thing ain't doing what I want it to do. Tried to get out 360, but didn't did it. I ate a donut today. First donut in 6 months. I just smelled it. I didn't have my picture up. Tesla's at the 200 on the uptrend. Boeing about hit my hard resistance at 169.30. Nile down. Steel. Ooh, steel had a knife yesterday. Somebody dropped shares on steel yesterday in the close. Okay, here we're at 295. $250. Now I've got me some shares. Snake breakout on IWM. We're below the 200. New high on the SPY. Come on, Jimmy. Where to find value in 2025 has been the theme on CNBC today. And I've heard banks that whatever you think Trump will help benefit Trump. Freedom.
George, the Treasury auction that's also happening this morning. I'm watching bonds, not to change subjects too much here, but that's coming in at noon. And I feel that there should be probably good demand for that based on what we saw. However, bonds are struggling to hold their bid from earlier. Bonds are kind of flat right now, so maybe that's why the Russell didn't quite take off.
It's possible, OJ. I still think.
Why the Russell didn't take off?
I mean, this is my view. I think that if you look at the Russell, by the way, it hasn't traded well since the election. It gave up the gains early on during that first week of the election. Moved to the upside and boom in the
AVGO's up.
I just think that you have to consider the context of what we're doing. Monetary policy-wise, obviously next week it's a lock. They're going to cut rates by 25 bips. We've been talking about this over the past few weeks. If you look at the Russell, the level of rates, it's not about the rate of change in rates, but the levels will remain high because inflation is still high. And just look at the core rates around 3.3% on CPI. I think the PCE is, correct me if I'm wrong, around 2.6 or 2.7%. So nonetheless, there isn't room to negotiate rates lower to the levels that I think are very compelling for the small caps. But again,
Mark said never do.
May benefit from lower taxes because they can't move their tax liabilities overseas like the mega caps can, and maybe some tariffs will help them with some competitive issues that they face from outside competition. So for what it's worth, the small caps are a tough one right now. I think they're kind of stuck. And so what it comes down to is just, don't fight gravity. Obviously, the mega caps are where money's moving.
Okay. Yeah, right now that is for sure about as certain as gravity, except in the other way. So pulling it higher. Big cap strength. Tesla rip in. Thanks, George. Appreciate the look too at the bond market fading a little.
Market's pretty happy.
The strength in the small caps. Jeff Pierce joins us for a look at Tesla and some detail from Goldman Sachs angle. They raised the price target on it. Fresh love. Never hurts, Jeff.
I mean, you can't beat the stock right now. 60% since the election. We're breaking 400 yesterday. We're on our sixth straight day of gains here. And of course, the next thing that investors are going to be looking at, as you mentioned earlier, is that kind of 410 closing time we saw back in 2021. And that intraday high of about 414.50. As you pointed out, we're seeing analysts start to weigh in.
The 60 70s and the 60 80s on the calls.
310 yesterday. They talked about those near-term headwinds in EV sales. They talked about the inflationary wild card coming from those tariff hikes. But they still saw Tesla as one of their top picks in the automobile group. Today, we've got Goldman Sachs raising their price target to $345, up from $250, kept a neutral rating on the shares. The analyst says, given a reduced EV market forecast, the firm is lowering their earnings per share estimates for Tesla, driven by lower deliveries and lower auto gross margins. However, while the firm sees fundamental headwinds to the core auto business over the near and medium term, it also believes the market is taking a more forward-looking approach to Tesla, including respect to their AI opportunity. That, of course, would likely include those cyber cabs, which I think a lot of investors are really hopeful is going to be a big revenue driver for Tesla in the future.
Man, they got to get on it.
Now they're talking nice about Tesla.
Bowing out of the race, though, that doesn't hurt either.
No, it certainly doesn't hurt. Seeing them kind of pull back on their investment in the cruise lineup, their self-driving taxi company, I think is good. I think, you know, you look at a lot of the negatives that Tesla has, right? Of course, they've got the China story where they're really trying to compete on price. But certainly competition still here in the U.S. There's concerns of inflation coming back, you know, causing
Why do you
more
keep saying that?
buying. At the same time, you know, this company is one of the ones that's pretty well.
We're going to be getting deflation, you ding-dongs.
Were to be taken away, and also, I think there's a hope that this administration could pave the way for full adoption of self-driving cars, which would be instrumental in Tesla's kind of long-term revenue growth plan.
Wall Street loves inflation.
All right, Tesla
Stephanie Link said it the other day.
Hitting 412. I mean, we're real close here, super duper close. As we've got the stock just a couple bucks away from the highs. It just seems inevitable. But of course, you never want to say that in markets. But another couple bucks, I think we'll probably get there. In a world in which Bitcoin trades at $100,000, I don't think Tesla bulls are going to be too scared of an all-time high of 414. All right, thanks, Jeff. Appreciate that. Good setup. Let's do some trading. Scott Bowers at SIBO, and the CEO of Prosper Trading Academy, of course. Scott, Tesla, 408. Think we're going to get that all-time high?
Yes, we will, and you know, you guys just covered a lot of it, but there's so much of the animal spirit overhang to this stock right now, and you guys, you know, pointed that out. And when I look at technicals or fundamentals here, it's hard to fight the momentum. There's no question about it. But you know, why is the stock trading there? Is it really worth the 60% gain that we've seen, you know, in the last several weeks? Maybe, maybe not. But when I look technically here, Oliver, outside of not just breaching those highs, which were a couple bucks away, but actually touching 420 also, and I think that people following Tesla and Elon know what that 420 means. I don't see any reason for the stock to really
Was that a pun?
move much higher in the short run. Okay, so when I look at something like that, and
Glad I got out of them.
I'm really, you know, quite frankly, don't know which way it's going. I look to the option market and I look at volatility, and you know what? The option premiums are
straight up
as they should be because the stock is moving.
on the SPY.
They are
Just had a new high on the minute.
What I'm going to do is I'm going to try and take advantage of some of that option premium, and I am going to sell next week's expiration, so that's the 20th. I'm going to sell the 420, 430 call spread on the upside. I'm going to sell the 375, 365 put spread on the downside. That's about $4.50 to do that, which is pretty rich. The spread can go to $10 if the stock really makes a massive move one way or the other. I'm going to collect $4.50 of that. So
I have 409.02 as a resistance.
At expiration next Friday, to the upside would be
And that's where we are.
$4.50. To the downside would be $3.70.
On Tesla.
50.
That was what I did in the video.
I look at that, and again, I see no reason why the stock, you know, would move higher or lower, other than, you know, kind of the aura of that 420 mark to the upside.
Okay, so that gives you room. I mean, you can get that all-time high, and you're happy with it.
Absolutely, no question about it, and I think we will pull back.
He mentioned 420.
We will hit that. I think we pull back a little, but again, I think that 420 is definitely.
Here it is again.
Reach, and that would be an area. My guess is that you're going to have a lot of the shorter-term traders, some of maybe the Wall Street bets people that are out there that have exit orders in at 420.
Yeah, right. Hey, you know, that's how it works these days, essentially.
It does.
You know,
it does. So you know, you
He's
have
tripping out on it.
You know, we talk about
That's how it
trading,
works.
You know, the momentum. I think you also have to trade a little bit of the psychology
Gotta trade the culture
of the market as well.
Yeah. Got to trade the.
Right.
All right, so we're selling the 420, buying the 430, selling 375, buying the 365. Looking for a pretty wide range for Tesla trading. Collect the premium.
I'm gonna see if I'm gonna get rich on this here SPX. I got a lot of puts.
Exactly, and I'm stopped out on my risk if we get a big move.
Yeah.
So it's completely risk defined, and I love the amount of premium I'm collecting.
Can you do something like this for the market overall as it gets frothy, or is this really specific to a trade in which you've got volatility, super premium?
Yeah, I wouldn't do this to the market overall right now because, quite frankly, implied volatility, option premium, what
Yeah,
you're
way too
looking
low.
at the S&Ps, the NASDAQ, the Russell even, it's pretty low. So I would not
The
be
$2.50
selling premium
average.
in any of those big market hedges or those ETFs. In fact, I'd probably be looking to do the opposite in those because option volatility is so low.
Okay. All right, like the trade, Scott, Tesla, if we do get to that high, I think rest of this market in pretty good shape. This Mag 7 trade is really powering back up. It's pretty amazing the way the market's shifting pretty hard back into tech.
It really is. And, and that report this morning,
Magnificent Seven, what would be the one? Google.
Sealed the deal for the rate cut next week. I think there's still a lot of question as to what the outlook is for 2025. But in terms of near term and is Santa Claus here? Yeah, he's firing up the reindeers right now, so he's on his way.
Yeah, all right. Santa Claus coming to town. Scott Bauer looking at collecting premium into the holiday season as well. Thank you, Scott. Appreciate the trade.
You got it.
All right, Tesla giving it room to climb to the all-time high to that 420 strike.
We got a double top on Google.
We're going to talk some ETFs, take a look at some small cap ideas. Russell's still hanging in there today after a fade from early strength. It's
with a new high,
almost 0.5%, and the math works for the S&P 500. Big tech rally.
I need 250 on my puts
and
to get even.
NASDAQ now up almost 1.5%.
This thing drops down to here. Let me see. We got a megaphone. Or head and shoulders. It's definitely out of support right now. A little bit below it. It's just so funny to listen to these guys in the morning on CNBC. 3 months ago, they thought we were doomed. Now they're going with it. New talking heads are coming on saying, well, can't beat them, join them. I never did do oil good when Republicans were in office, but Democrats, it's a little different story. They make more money. Oil does.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can
191, 96, 192
invest on my own and trade
for
on things.
Google.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Is the double top.
Have a choice in how you invest.
I'm about even on SPX.
No politics, no noise.
That should get out here.
And beyond. Available anytime, anywhere, on any device for free.
So I'm gonna try the Mega, see if this Mega works. I'm even. God, I'm even.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
Come on, baby. Drop. Give me.
No politics.
No noise.
I'm up 20 bucks a contract.
Biggest events for the economy.
From bell to bell and beyond.
Watch live.
Turn it down for a second. I got to get out of this trade. We're at a solid support here. This is the pivot point inside the channel. We could hit the bottom here for 1, 2, 3. I got 18 contracts, so I got to figure out what to do here. I tried to get out 270 and didn't give it to me. Come on, just one more candle. Two. Spit on that thing. Yabba dabba doo, Mikey.
Cautious, because if any of those dominoes don't fall into place like investors expect right now, that's going to hit the optimism, hit sentiment, which will hit valuations and take the market down with it. So overall, we're optimistic, but we think you need to be very cautious about how you're managing risk in the new year, given the optimistic move that has been driven here recently.
You guys have some products that apply some tweaks to market exposure in a few forms. It seems like to
we got the 9 might cross down over the 21.
Just broadly first, thinking about defined protection.
Right back.
We've got a fund, ZDEK, tracks the return of the S&P 500. There's a cap, there's a 100% downside buffer over a 1-year outcome period. So how does that kind of weigh against some of the other ways to protect, if you will, or just kind of find a support in markets?
Yeah, it's interesting, Oliver, because I think it all comes down to how investors are using the strategies. Like with this strategy,
I got to watch this close because I want to get out of this with some good profit.
For people that are maybe not in the market,
I'm even right now,
more equity exposure,
and we're getting ready to squeeze either way. So
without having to take on additional risk. So we look at this strategy in the new year. You know, stocks can keep running. We think they can keep going for a while.
That's bullish. That's bullish.
Downside risk. This is a very good way to let's get that cash into the market, but still make sure that we have that downside buffer, that protection over the period. So, you know, market goes up. You know,
it says it's getting ready.
You're going to capture all of that. So it's not full equity upside participation, but you are getting more of those low risk dollars tied to the equity market, which we think is incredibly important.
Okay. So you're essentially looking at kind of the.
We got a 1, 2, 3 on the IWM.
It seems like that's where the cap is.
It is, and you know, I think if you're an investor there and you want to be just in the market broadly, you have your equity exposure. You know, you're probably going to look at some other options. You know, one of the ones that we're looking at for broad equity exposure this year is ticker SFLR.
Yeah.
The reason that we like this on the equity side is you don't have that hard cap on the upside. But at the same token, you have a downside floor of right around 10%, which, you know, if you start to see sentiment on the line, it's really a good way to have that left tail risk protection. It's a very simple option strategy that we're using, buying those 10% out of the money puts, selling 2-week calls to fund that protection, while getting just long exposure to the U.S. equity market. So not necessarily something with the 100% buffers that we want to go out there and just replace.
I'd like to learn how they trade.
With, We think that's a way to just get additional equity.
I know you could buy
with
buy
cash,
puts
bond
before
money,
you.
Which can
Well, yeah, you
solve-
could.
SFLR is really a good way to still make sure
And
you're
sell the-
participating in gains. Like that strategy's up 19-20% this year. That's significant upside while still having that that floor against losses. We think is really important in the new year.
It's interesting because talking about the buffered fund, I was kind of thinking about, okay, what are the sort of the competitive products out there? Because there's a lot, but you've got kind of some of those offerings in house. Why is that?
Tesla's
How
really
big is
hot.
the difference in client that is going to go for kind of two variations on the same theme, which is equity exposure, but either wanting to eliminate all potential losses or losses to some extent. That kind of mindset of limiting
There's a
the
triple top
downside
on
between the
Tesla.
distinction. What's the different client that's going for SFLR versus ZDEC?
Yeah, I think it is very different. And when we talk to advisors, more than anything else, their clients want to remove unknowns. They hate them, especially those retirees, those pre-retirees. Okay, the typical playbook that an advisor will use is as a client hits retirement, they need to reduce risk. So maybe they were in a 60 equity, 40 bond portfolio. Now all of a sudden the move is, okay, well, let's take them to a 20-80 where they have 80% of their portfolio or 70% of their
Here we
portfolio
go.
in fixed income, which has a
Come on,
very,
baby.
very limited upside.
Make
Your
me
starting
rich.
yield is basically as good as you're going to do.
Now I can get out
with
here.
a fixed income allocation. With these strategies, a ZDEK, even an SFLR, because you have that downside protection,
Let's have a $4
this is
drop.
a way to let's maintain that level of equity.
And then I'll be
exposure
very
in the
happy.
Portfolio, because we don't have to necessarily worry about the tail risk because we have that protection in place. So it really, Oliver,
Both of my support lines are right here on the 200 on the 63.
without having to worry about.
So I'm getting ready to sell these
compromising
on this
their financial
knife.
goals in retirement or as they're nearing retirement.
I have 18 contracts. That's why I got to get out of
I
them.
just needed to switch my brain over after talking about Tesla call
There's
gamut
275.
for the last hour. This
There's
is not the same
280. Can you give me a little bit more?
Without question. This is not like the speculative, fervor. This
And I
is
get out right
a
here
defined outcome. This
at
is
280.
specifically accomplishing goals with preservation in mind. One though that maybe it seems to resonate the most with this approach is in the small caps, because that's where you kind of
Okay, here's a line. Here's a line. Calm
risk
down,
of
Jim.
drawdowns here over the last couple of years, or at least
I
lack
got
of
3
upside.
confirmations
So there
now.
It seems I might be most
4
willing to
confirmations.
take this type of approach when missing out on gains really hasn't been as big of a thing in the small.
2
cap
major
world.
ones.
Yeah, I think the risk management in small caps is incredibly important right now. One of the key themes in our 2025 outlook is we think small caps are going to have a tug of war all year long. There's significant bullish catalysts, whether you look at the regulatory rollback, the increased optimism within small businesses, interest rates potentially coming down.
Hell yeah, man. I'm a small business love's going to love Trump.
Higher for longer rates.
Biden's
an extreme
hurt us.
headwind to the asset class. So, we think those are going to play tug of war all year long. It's going to lead to excessive volatility. Ultimately, we think small caps can win out. So
My boy might be breaking out here.
But one of the strategies that we're highlighting on that side of the house is ticker KJ.
So I'm going to reverse these calls.
What this one is a 15% buffer against losses, seeking exposure to the Russell 2000 ETF.
The 60/80s.
Simultaneously having about 17 to 18% of the potential upside of small caps. So when we're looking at this, we want to see more confirmation that small caps can sustain the rally that we've seen here recently. Every rally we've seen in 2024 has shot up and then fizzled out. If we continue to see small business confidence increase, we see those manufacturing PMIs continue to increase. That would
See,
give us more
that's called
confidence. But right now, Oliver, we still have this huge disconnect where small caps have shot up greatly.
What is
and
that?
earnings expectations really haven't followed. So we want to see.
It's
those
not a
earnings catch up.
dragonfly.
If they don't, the KJAN does have the buffer on the downside.
It's not a
to
hammer.
Protect against any of those losses, but still capturing 17 to 18% in this market, we think
It's bullish.
stronger than the tug of war.
Yeah, so it's a good combination. It kind of seems like, for to be honest, kind of the best trade-off of the 3 right now, just because the small caps kind of have that potential for the kind of bigger downside moves too, the lack of upside, just based on the last couple of years. Totally strong case, I think, for many, and the one you're making for the logic behind being long the small caps. So that's where you get that upside participation too. Good stuff. Cool funds. Thanks, Tim. Appreciate it.
Good to be with you, Oliver.
Absolutely.
We could be breaking out here.
Head of Research and Investment Strategy, Innovator ETFs. All right, KJAN there, the small cap buffer ETF, protecting against the first 15% losses. When we come back, Chartmaster taking a look at some analyst commentary for us. United Airlines continuing to travel strength. Another big
Airlines, you're pumping airlines for next year.
Netflix also pushing to all-time highs, and Walmart steady as
And their
it goes.
Norwegian Cruise Line,
Albertsons Kroger deal. Come on.
CCL popped today.
Monopoly when Walmart would have been bigger than the combined
Carnival
deal.
Corporation PCIT hold conference call on fourth quarter earnings. So when was earnings? Cruise destination renamed Relaxway. Maintains target to $32.
Giving you even more specialized trading support. Connect with the Schwab Trade Desk.
Okay, I'm tired of fucking with this thing.
Trading questions, no matter how complex.
Drop.
Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Higgs. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
I love that
Schwab
commercial.
Network app and join us to follow all the market trends. Schwab Network is available.
I've got a few more of these things
anywhere
left, but
on
now we're
any
decked
device
down.
for free. Schwab Network.
Doom. Speller's at the 63.
All right, let's talk some charts here. We got some analyst commentary to get into. Rick Ducat is on the screen. Jenny Horn is on the iPad. All right, divvying it up by tech. Let's start with UAL. It seems like more analyst and street positive commentary for travel.
It does, and I will say the one thing not one of us is on an airplane, so that's unfortunate because I wouldn't mind being on a United Airlines flight right now.
Where would you be going?
Ooh, somewhere warm because it's getting very cold here in Chicago tomorrow. So like Hawaii would be good, I think, for
Nice.
United. And I've actually flown United to Hawaii and I had a wonderful experience. So I could just have some channel
Look
checks.
at the chart. This is crazy.
Their best year on record, and I triple checked. I mean, I went through the last decade and then 2 decades.
I would recommend anybody to take a vacation to Hawaii. And I wouldn't just take it to one island. I'd go to 3. Maui, Big Island, and Honolulu. Oahu. That's what I would do. And if you want to buy property, I'd do it.
But
That's a 5-hour flight over the ocean. Talk about freaking out.
a mix continuing, especially for the international and corporate components of travel, which haven't exactly caught the same pace as leisure. I think just given, again, the post-pandemic world here and the longer-term recovery. But United continues to execute quite well. And I will say that when you look at these companies, the debt load that American carries and the way United has actually a pretty updated fleet now. I mean, this is good execution and management that has done a great job navigating. I mean, one of the most difficult industries over the last 5 years, I'd say, given the pandemic.
Yeah, United pretty well managed and a little lighter on its feet, a little less cargo in the back compared to American.
Look at that chart. That's scary looking.
Ones, Rick, what a chart.
You know, if you're looking for an aircraft type pun, though, more of a holding pattern lately. Unfortunately, we did have our big push to the upside after a pretty pronounced range.
That's a huge run.
A lot of just sideways price activity.
That's a 300, almost 300%.
Or so, maybe around those levels here. Then this is where things started to change. We started to push above our moving averages here. We formed this very tight, very narrow blue upward sloping channel here.
And they were pumping Delta for being number one last year before the accident.
Those highs and lows here, eventually topping out just above 105. Now, unfortunately, we can see
we broke out again.
Candle pattern here. Large red candle completely swallowed up the previous day's green candle, which is when we made those intraday highs. So a rather discouraging setup there. And we did get the downside.
I sold most of my puts, so we'll see.
That took us back to this old support level near 95. So that was
not a bad trade, actually.
Level. We retested it. So far, we've
it's a bad trade, but
95 is a level to watch here. We've got our 21-day EMA just below that as well. But look at momentum here. You can see we had a steeper RSI slope here, and then it kind of gave way to a more gradual slope. Now we're kind of in more of a downtrend here, and we're out of the overbought area. Lowest level RSI has been for quite a while here.
Right.
Extraordinary amount of time spent in the overbought area, though, a sign of strength here. So now when we look at our volume profile study, well, not really much help here because we've spent so little time during our climb to the upside here. We didn't really have a chance to accumulate any major trading areas. Maybe around here, 97 or so. 74, and then all the big stuff is down here, 42, and 50.
Even Dow had a good run up.
We can see, though, we topped out near.
This is the one with all the controversy.
Channel, 2 standard deviations above our linear regression line. So now when we consider support and resistance, well, resistance right here, once again, old highs, +2 channel, 105.60 or so, 105 around that area.
There's my Boeing resistance levels.
121 presently. To the downside here, though, green area that I mentioned.
That's a shoulder line. There's your left shoulder, your head, and your right shoulder.
Key supportive point.
All right. So it is kind of circling here.
Keep an eye on this here SPX again.
Would be a pretty good place to find support, though I think people are pretty happy with that. An incredible rally, and earnings not too far off early next year, so more to look forward to on United after positive commentary here from Morgan Stanley. That's such a big price target jump, too.
Bitcoin-related stocks are flying.
Walmart shares are up. I'm kind of surprised they're not up more given the Kroger-Albertsons deal that got killed.
I know, because this would have been the most formidable competition for Walmart. I guess maybe because they aren't truly a pure play grocer. Maybe that's not.
But their market share, as you pointed out earlier this morning, is bigger, right?
22% versus the combined entity of those companies would have been like 14.5%. Still much larger than maybe Kroger.
Don't make no sense.
I know, and it's what I was seeing is because Kroger's declined actually, and it's really names like Costco, Walmart that are eating some of its lunch, and no pun intended there again. But because Walmart continues to expand its groceries, that's been quite resilient for them over the last several years, and I think that so it's seen as more and more consumers are flocking from Kroger to Walmart or Albertsons to Walmart, not necessarily the other way around, which I think is kind of an interesting trend because Walmart continues to increase its quality and its omni-channel offerings. KeyBank, though, raising its price target $100 a share from 96 with an overweight rating. I frankly didn't get too excited about that, but then I did look. The street high is 105, so 100 isn't too bad. I mean, it does at least imply upside from where we're trading. And they said that near-term trends do remain choppy for the hardlines and broadline space, and they do expect this continued divergence in market share winners and losers, which I think is definitely a consensus right now among those market analysts. But looking to this holiday season, they do say that given the shorter season, they do expect some continued weakness in big ticket discretionary items and more meaningful share gains by Walmart. They did report, I think, one of the most interesting stats of their last quarter is that now 75% of their growth during the third quarter, they said, is really because of these households making $100,000 a year or more. So that's, I think,
Oracle's up a buck today.
For a long time, Walmart was seen as more of that discount. I think
it's at my little resistance level.
It was just more of a mess, but I think now they've done a good job cleaning up that perception and gaining more and more of these loyal, higher earner
Yeah.
consumers.
Yeah, absolutely. Totally.
We got one more day on
it's
it.
a big part of it. And the shares reflect the dominance in many ways. Incredible chart, Rick.
Oh yeah, especially when you consider the scale of Walmart. You know, for such a big company to be up 88% from its lows about a year ago, really, really interesting here. But you know, kind of the way you could approach this one, you could go from the low points here and create this blue trend line that goes along these subsequent lows. Now you can kind of
I got
duplicate
4.
it. You could put it across the absolute highs like I did here to project potential resistance pretty close to where we topped out and then gave some of the gains back here. You could have also maybe put it along kind of like
I got 4 puts left at 250. So I don't know if I add. I'm gonna do 12. I kind of missed my. I want 160. I could have got 160. Get 8. 12 would be better. 8, and then that would be 12. I want to see what my chick over here is doing. Oracle's back at that resistance level. Come on, you ding. Okay, now I made 360 on these puts. And I have 4 left. So I'm not sure what to do right now. We're at 155. I could wait for 125 and load them up. Or I could load them now. But we're bullish as long as we're above that 9. That was a small percent of what I had in it. And I've got another scan over here that I was watching. Let me see if I can find it. This is come on, you cockroach. This is an ascending scan with just a 2% gain. Has 2% gain. I'm watching these see if this get to 125, and I'm going to add 12 or 8 on my SPX. Between 90 and whatever shows up. This is ascending. We got 131% on CADL. Wonder what happened here. NASCAR surge over inflation rises in line with expectations. Prostate drug meets preliminary endpoints. Let me see here. Clean this up. Tesla created a new high. Now what do I have? 1414 something. 1414. Okay, Benny. It's time for you to go bye-bye. What was I going to do here? Think. $414.50. $414.50. Dang, gummit. I missed my opportunity. We hit 125. Oh, shit. I took my eye off the ball. Dadgummit. That would be cool. I'd be looking real good right there. Oh, I'm so stupid. I said I want to wait for 125 and it hit it to the T. And I'd be up 80 cents right now. $800. I'd buy 10 of them. Dang, I didn't buy them. And there it is, 220. I'd be out of them right now. Oh well. Not a bright move. You sit there and watch it all day, then you start traveling around. And, okay. That sucked. RGTI is a new quantum computer. I was watching this the other day and I talked about it in the room and I watched the video and I tried to understand what kind of computer this is. It's supposed to be really, really, I don't know, it's supposed to be different. RGTI. Oh, Kathy Woods. It's supposed to be an interesting company. If anybody, Mike could probably know what this is all about. Our mission is to build the world's most powerful quantum computers. So whatever quantum computer is, this could be another NVIDIA in 2 to 3 years. This thing could be worth $100 or more. This kind of, I have the feeling about this is when I had the feeling about AMD at $9. Once I found out about AMD, I traded it to 30. And then it ran like it did, like a Dickens, and I had scalped it more or less all the way up. But this is supposed to be a real good. We're at support right now on the pullback on the Fibonacci's. But I gotta watch it a little bit longer. But we're definitely at a support. Oh man, I miss that item. That SPX put. That pisses me off. It really does. I want to wait for 125. Would we have our pullback on SPX? I'm going to show you a trick. Under 5,900. I think it's due. I think we're going to have one before earnings come out. The next quarter, the first quarter. And then everybody's going to be tricked and surprised that earnings are still good or even better. Got them here at 170 now. We're at the 63, so I bought these at 170. Sounds windy outside. We got a double bottom. We could drop down a little bit more on UAL. I gotta get my coffee. Here's a trick. I got the IWM in this one QQQ. And we got the SPY. And we got the SPX. Now the IWM many times works differently than the other ones do. So that's why I always like to jump in on these when they start to reverse. My nose is itching here lately. It's not because it wants sugar candy, because it's never done that. I remember when I was in high school, they used to snort Demerol in school. Idiots. Or Dilantin, one or the other. Demerol. Oh, my girlfriend's up. It's lunchtime. Okay, I'm gonna go make my lunch and be right back. I still got these at $2.50. I got 4 of them at $2.50.
Thank you for being here. So we get the CPI in line pretty much, or were there parts of it that stood out to you?
No, there was nothing in there that stood out to me. You had an initial rally, but we're still bearish on bonds between now and the Fed meeting next week. So we had a rally. 2 years got down at 410. They're back at 414 now. And
VIX at 1363.
420, which is a 200-day moving average. They're back at 424, 425. But here's the thing. The Fed is now guaranteed to cut rates next week. 96, 97% right now. So there's no question there. But you remember, the Fed has already eased rates 75 basis points between a 50 and 25, and the 10-year backed up 90 basis points. So just easing front rates, it doesn't mean that long rates are going to go lower in yield. And that's what we think is going to happen between now and the Fed meeting next week. We think the Fed's going to give us a hawkish ease, and I think the market's going to have to deal with that. But for now, we see, you got to look at things. If the Fed gets to 3.5% by the middle of next year, which is our prediction, which is a little bit more aggressive than everyone else, where's the 2-year going to be? Where's the 10-year going to be? You add 50 basis points to the 2-year, that's 4%. You add another 50 for the 10-year, that's 4.5%. I think that's where you're going to get to. So we expect 10 years to back up to 433 between now and the beginning of next week, and then we'll see how the Fed spins it.
So, if they have this cut, which seems almost very likely, right, for December 17th, 18th meeting, then the January meeting, what do you expect there, to be clear?
The early read on the January meeting is going to be a pass, but here's the rub. We really think, even though you got a 227,000 employment report on Friday, the unemployment rate went up to 4.246, which is almost 4.3, and the private payrolls over the last few months are down below 100,000. You have the Walmart recession indicator, which was written up today in Bloomberg. I just think that things are slowing down from an employment perspective, and I think the Fed's going to get another month's worth of numbers, and they could very well ease again in January. But the early read is a pass or a pause in January.
But they could change their minds and sort of indicate something different, to your point.
Okay, I'm watching. We got a 1, 2, 3 on SPX, and I'm getting them here at 165.
Being more frugal in how they're spending. At the same time, we are expecting them for the holidays up over 3% year over year. We're seeing bookings for airlines and cruise lines, incredible. People just are spending to a certain extent, right?
No, people are still spending. That's where you see in GDP. And add the fact that people are, companies are ordering a lot of products because they're trying to beat the potential tariff raise. So you're going to see a spike in activity. But still, I think the underlying employment, which is what the Fed is focused on, which Powell is focused on, is still weak, and it's not showing that much strength. The JOLTS numbers didn't show it. and as I just quoted the parts of the employment number. So I think that's going to concern Powell, and I'll have to wait and see. Ultimately, I think the Fed eases another 3 times between January and the end of June, or maybe the end of July, and I think we get down to 3.5.
And as you talk about this,
I'd like to see that.
Saying how companies are ordering ahead to beat the tariff. You know, they may have inventory gluts if they over order and then they can't move the products or whatever. I mean, I'm interested to see how much they're ordering, how much inventory they'll hold, et cetera, et cetera. Let's talk a little bit about the global footprint. When we sat down, you were talking about Canada. Everybody has Syria on the mind, Ukraine on the mind. I mean, the Middle East. Give me some global ideas.
Well, you know, we spent 3 hours yesterday at the Carnegie Council, you know, which is a think tank up in Midtown, and we listened to all the spin of Syria, of Iran, what's going on with Israel. We had a lot of Israeli people there, and the spin was that Iran's a little bit weaker, but I still don't see it giving us a peace dividend. And even though I'm optimistic that Trump will solve or resolve the Russian-Ukrainian situation with some kind of result that's acceptable, I don't see it just yet. As far as the global economy, there's only one economy that's percolating, that's the U.S. Europe is a basket case, one country after another. Their manufacturing can't go anywhere. China continues to be very weak, and we expect China next
I want a good
week
knife.
to come out of their
I want it now.
Communist Party strategy session. We expect them to announce that they will ease rates if tariffs get. They will lower the value, devalue their yuan if tariffs become a problem for them.
And then I also wanted to ask you about credit. You have this as one of the notes here. I want to hear more about that.
I think that high yield has gotten ahead of itself. I think it's got very expensive. Now, I've listened to a lot of people say that for the better part of a year, and it continues to tighten in. I'm just starting to say it now.
Oh, you are.
As I look on a retail side, I hold a whole bunch of different high yield funds.
He's saying it now, 145.
Discounts to value. Now they're all trading either flat or at premiums. That's a warning sign to me. So I think high yield's about to get hit a little bit, but that goes along with some kind of equity correction towards the end of the first quarter or sometime in the second quarter. So I'm not very. I think you're better off with floating rate funds right now than you are with high yield funds. They don't yield that much differently. So you know, rather get the AA rather than the single B.
And finally, what does it mean for the market? I mean, people want to see new highs. We're seeing all kinds of, you know, Citigroup had a 6,500. I saw Goldman's putting gold at 3,000. Where are they putting it at 3,000? Everybody's putting higher targets on pretty much everything. Some of your thoughts on where we could see things going in 2025?
Look, the biggest thing that Trump brings to the table is deregulation, and you can see that from all the people that he's promoting. And you're basically
that's huge.
Lena Khan's out, and it's going to be mergers and acquisitions. I think are going to pick up again, whether it's good or bad. I personally think that's good. So I think deregulation is going to add an oomph to the marketplace. But one of the things I
agree
is that after it all gets in, and Trump does whatever he does with tariffs or not do whatever he's going to do with tariffs, I think the market is tired. Everyone is jumping over each other. You just mentioned Citibank. Then in that Citibank quote, they also have a bull case of 6,900. You have Goldman at 6,500, UBS at 6,600, and you have Oppenheimer at 7,100. I mean, Nicole, who else is there? Who else is not bullish? If everyone's bulled up and everyone's leaning to one side, you're going to have to correct in order to resolve things. Now, we don't think it happens between now and year end because Goldman puts out a very detailed analysis that there's a lot of stock buybacks. I don't see where they're economic, but they're doing them. So that pretty much guarantees that you're going to continue to do well in December, and then you probably do okay. And then once Trump takes over, I think he'll have a 100-day window. Then I'm a little concerned.
Okay. Good to see you, Andrew Brenner at Nat Alliance Securities. Thank you so much.
Have a great holiday.
You too, Andrew. Thank you. Plenty more to come here on Trading 360. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat takes us through the technicals. Don Kaufman takes us through the trades from Caterpillar, VIX, and Citigroup. Next on Trading 360, right here on Schwab Network. We'll be right back.
150, 55. Yeah, yeah. Turn out the heater, warm the house, and cook the stew. I got 1,550 in this trade. I'm playing with the devil here because I'm above the 21 cross. Ooh, that ain't good. I'm down 200. UAL is off the 200 right now. EMA, it did hit her 123. Tesla new high. Think we're gonna go higher? Playing with fire. We're going higher. I have a dream. I have a Christmas wish.
He's Alex Coffey. I'm Jenny Horn.
I think I'm going to buy a microphone for Mike and get him on here. I want to see if he has a high-pitched voice or a low voice, or if he sounds like a duck. My Christmas wish, Santa, get Mike a mic. Do you agree, Randy? Say yes. Johnny, do you agree? Quack, quack. If it's a duck, call it a duck. Tesla got 1450 resistance, double top, all-time high, and then we go to 420, and you know what that means. It means I'm going to do an edible this weekend. And I'm going to read Bible verses, so I'm excited about that. Yeah. Back at 125 here. This time we'll do it right. So I got back loaded up on. I'm loaded up on the puts here. This last time I missed it, I missed almost $1 on it. So let's see what happens here. $1.25. This is not break. I mean, this takes balls to do what I'm doing right now. So I do not advise anybody to do this unless you're sure of it. I'm going to get stopped out. I've got big balls. We're squeezing, we'll find out. We had a new high on Apple today at 258. Not a new high, but we hit the high of 250.80 today on Apple. And we're at the 50 on the 1 minute. About to get stopped out if this thing don't work. Because if this thing breaks out, it could drop under $1. And I don't want to do that. Okay, battery gets stopped out here. Testing, 1, 2, 3, testing. Let me see here. Come on, you dick. We're here. Ah, you bitch. Okay. Oh, come on, Jim. Breaking out. Got stopped out, so I'm okay. 120. I took a $400 loss on that one. Probably regret it. I ain't trading him no more. And it was me. So I'm up just a little bit. New high on the SPY, new high on the SPX, new high on the QQQ, and we kind of broke out of a snake on the IWM. We're consolidating. AMD just hit the 200 on the double bottom, higher low. And RGTI had an 80-cent bounce on a double bottom. This is the one that I really want to go long in into 2025. I think I can get 400 or 500% out of it. It'd be another AMD to me. I got to learn a little bit more about quantum computers. What are they? It's time for quantum is now. Our mission is to build the most powerful quantum computers to help solve the most important and pressing problems in the world. And here they go with that frickin' climate change. Mike, you know anything about quantum? Quantum Machines and Rigetti announced successful AI-powered collaboration of the quantum computer. I like the stock. it's going to be the end of the world. The end or the beginning? The end as in everybody will be on a government paycheck and it takes over labor. That's what they're working for. Oh. You gonna make another 5K on the next drop? Pay attention. I'm gonna tell you, I command you. Mike and I are playing just the opposite of each other. I'm not going to buy any more puts because it's not been easy. Pay attention. You ain't got time. Don't pull Jimmy. But I have a feeling I'm going to be lucky here. Oh, I don't want to erase all that. Just this. He looks like an old friend of mine.
Understood. So at this point now, when you're thinking about the liquidity for 2025, do you think we're going to see something significantly different?
I think it's going to be a continuation of a trend. So we've seen improving characteristics year on year, with issuance being up 50% in this year compared to prior. And I don't think that we'll see the return to the animal spirits of 2021, but I think we'll definitely have far more activity this year than we did last year.
So what's going to drive that?
I think a certain amount of it is the rate environment, right? So we got some good news this morning based on CPI that it came in line, and that helps drive expectations for valuation. So I think certain of the 700 unicorns, if you will, that are seeking liquidity or potentially seeking liquidity may still be levered to 2021 valuation expectations. So as rates come down, you should see some positive signs in people's expectations on valuation.
And you do think that the Trump administration, based on you're looking back at the last time President 45, now he's going to be President 47, you're using that as somewhat of a basis?
I think so. I think you have to. And the good news is that we sort of have that visibility into what a prior Trump administration looked like. So if past is prologue.
That's what I don't understand about these idiots.
Well, for risk assets in the primary market and the secondary market into 2025 and beyond.
And when you think about some of the requirements, you're watching some requirements. We have them here at the NASDAQ, here at the New York Stock Exchange. You were also noting some things on the NASDAQ you're watching. What are you watching there?
Yeah, I mean, the NASDAQ over the past 3 years has listed an enormous amount of sort of very speculative issuers within the nano cap segment of that market. And some of those issuers find themselves askance of the listing or ongoing listing requirements of those exchanges. And in so doing, they sort of find themselves trapped in a scenario where they have to continually reverse split the stock to shrink the float, to bring the price up, and they're doing subsequent follow-on offerings that are highly dilutive to retail investors. So that's creating chaos for the people that have to own, manage, and trade that risk. And as a result, new tools are starting to emerge to help help understand that, quantify it, and ultimately make decisions around it that will that could spell trouble for those folks going forward.
Yeah, we were talking about some names. I was thinking about Shein, Databricks, Chime, Stripe. There were a few others. But when you think about these names, they've been on the sidelines for years, and now is the time?
It's certainly a better time. I don't know if now is the time.
Okay.
I mean, so what has occurred has they've had more time to build more defensible business models, and so they have more defensible unit economics. They have right-sized their business in terms of expense. And that's all going to provide better execution for them if they choose to come out. And we saw the journal in the article in the journal over the weekend that talked about IPOs being passé. So these large brand issuers who you've named have the ability to generate liquidity in the primary market as well as the registered liquid markets.
Yeah, I mean we watched the ETF of IPO, which basically that's the Renaissance IPO ETF. That's a collaboration of all the IPOs. That's been a winner year to date, so we watch that to be sort of an indicator. You also have IPOs versus SPACs versus direct listing.
Sure.
I think SPACs sort of came out of favor for a little bit, right? And they weren't necessarily regarded as highly because there was some speculation about some of them. Not that they were all speculative.
No, and that's a great point. And SPACs are starting to, it's a market in recovery, and we participate in the SPAC market, and we see the terms are sort of bouncing around. No one really knows what's market yet, but it's starting to find its footing. We have a little bit better process around the de-SPAC, which is really the heart of the issue, which was they were effectively doing things in a de-SPAC environment that they couldn't do in an IPO, and the speculative issuers were getting put into into the SPAC and ultimately trading to zero.
Yeah, and there's also just the investor appetite, which you think is there, right? I mean, while you are concerned about some of the geopolitical issues, you think that the investor appetite is there.
Oh, there's no doubt. I mean, investors have been looking for quality product priced well for the past 3 years, and it was just sort of an issue of evaluation and sort of a lot of uncertainty that kind of went into that decision-making process.
Yeah, and the money market funds, U.S. money market funds, were reaching a record of $7 trillion or so. When we think about and you mentioned the
new highs,
cutting rates and a more favorable environment overall. I mean, last but not least, when we think about the financials,
Micro's next resistance.
Coming on it, and they do like that group to invest in. They say that's
I'll tell you where it is.
But your final thoughts on what 2025 could bring?
Well, I think it's
2025 can bring a lot of fun.
Environment for incremental risk assets. I think the larger brand.
We're at resistance right now.
That's historically what happens, and
it has to break here on.
As people get more comfortable with the new risk, other entrants will come.
We're hitting resistance right now.
I said a few earlier. I wanted to add. Stripe was
60, 87, 87.
CoreWeave, StubHub, the biggie. I'm not sure this will happen at all.
And that can change.
That's 200 billion plus. Service Titan and
somewhere in there.
Cerberus
60
Systems would be one as well.
Yeah,
so
right here.
Some of the names to watch in addition to a few of the others that we discussed earlier. Great to see you, Matthew. Michelle. Thank you so much for being here at Investor Link.
6086.
Coming up next, George Sillis is standing by. He'll take a look at
George Soros.
Looking at the price target hike from JP
Please,
Morgan.
I don't know this
Details at an example.
Socialist.
Next.
Netflix I haven't looked at in a while, or Disney. NFLX. Oh God. This is nuts. Today's not as fun as it was yesterday, and I should be having a ball. We could get that pullback. Tesla stock on track of an all-time closing high and rises to its 6th straight day. So rule number 7 comes in on Tesla. Wall Street's rule, not mine.
Cut the cord on the way you get market news. It's market.
Oh man, look there. We hit the resistance.
Oliver Rennick for the biggest
Okay.
earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. It's time now for the disruptors. And George Sillis is with us, senior markets correspondent, here taking a look at Netflix. JP Morgan raising the price target on those shares. You have an up arrow today. It's up 2.6% for Netflix. What's behind the call? Some of your thoughts.
Netflix, Nicole, obviously there's been a remarkable trend in the underlying name, but there's reasons for it. And effectively, if you look over the last year, what Netflix has done, they've done everything to essentially grow their business, but also enhance profitability for shareholders. And it comes down to, restricting access to those who were sharing logins. So that created a lot of additional revenues. They created an ad-supported tier. Their live streaming programming has been relatively popular, and their content has been growing from the publication standpoint and distribution standpoint, not just domestically but globally. And these are essentially a few of the catalysts that JP Morgan has noted in their call, and they've got a 12-month price target now, which they've increased from $850 to over $1,000, or 1010 is their precise target. But nonetheless, if you look at the earnings growth estimates for Netflix, they're continuing to
Okay, we're about there, so I'm going to short this thing.
Range.
Mike,
Ideally speaking, sales
I'm going to give it a shot.
Modest, I guess, for a growth business, which this is, around 11 to 12%. So they're still getting double-digit sales growth. They're 2 times that in terms of earnings growth, and their content has become more popular from an original standpoint.
I'm dropping it down to 60, 70.
Tiers have actually been very favorable for Netflix. So their revenue mix has been expanding, and essentially they're generating more revenue on an active basis, on a per user basis, and that's been accretive to the bottom line, and that's why the stock is done tremendously well this last year.
Says I'm pushing my luck.
Okay. With that, I mean, this is a nice target. Obviously, the old target is below where it was. I mean, right now, their old target is 850. It's at 938. So the new target is 1010, 12-month target, obviously. But where do you put an example trade here?
December.
Well, I mean, obviously, if you just look at the stock, it's moving quite substantially above its 20-period moving average, but it's slow and steady. It's not necessarily moving parabolic. So with that said, you don't want to fight the trend. I've learned throughout my experience. So the trend is still positive. We're just going to play a trend continuation in this name. And what I'm going to do is go out to February with 72 days to
Don't want to fight the trend.
And I'm going to buy a bull call vertical. So very simply put, we're going to essentially buy the $935 call option, and then we're going to sell $10 wide spread, or the $945 above that. So altogether, it would cost you as a trader about $5 a share, or $500 a contract. So in essence, we need a stock to move higher, at least to $940.
Okay, time to take a deep breath.
And then your max profit is $5 in lieu of the $5 cost.
Go into the kitchen.
Return on risk that the stock hits $945 by expiration within 72 days. So it's an expensive stock.
Soup.
You certainly can go out if you don't want to be capped in terms of profits, but you also take on additional losses. You could certainly just go buy the $935 call option and leave it unencumbered without selling the call against it. But in this case, what I'm doing is I'm reducing the expense of that call option, but I'm also reducing the profitability, which in this case, again, is $5 expense versus $5 profit.
SPX pulls back to here again.
Thank you for that. George Sillis, it's great to see you every day with our disruptor, looking at Netflix today with this JP Morgan call. Appreciate it, and a nice example trade. George, thank you. Coming up next, our 360 round, we're taking a look at GameStop after their earnings and what's been going on in the world of meme stocks, where people can make a lot of money, but beware. Trading 360, we'll be right back.
$135, $140, yeah. Let's give it, I want the 21. 135.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support.
Okay.
Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading.
Tesla all-time highs. You hear what I said? We're going to go to 420.
Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliant.
Mannequin, did you watch my video? You did. Tesla video?
Download the Schwab Network app and join us to follow all the market trends.
I'm at 135.
Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Believe me, when
Oh, we're warming his house up. My feet are freezing.
Take a left here, please.
I gotta go buy me some slippers this weekend.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them
I
make
have
some
to.
investments for me too.
Let's move on, shall we? No can do.
I don't like wearing shoes, and I gotta wear them. Maybe if I put on my thongs. I'll be right back. It is now, what is the temperature here? 33 degrees, so it's warmed up.
It's time to look forward
Find the next trend.
from every clip.
Not in here, but
every
outside.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
IWM had a nice little snake.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This
Damn
lets
it.
me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on
Somebody
my
made
own,
a
and trade on
terrible
my first one.
mistake.
No problem is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Trading 360. It's time for our 360 round, and we're talking all about GameStop.
IWM snail.
and meme stocks and the creeds that come along with it.
Oh, you're
Some
funny,
excitement,
Jim.
but
You
maybe
spelled
some
it wrong,
woes
though.
At the same time, Dave Mazza's with us, CEO at Round Hill Investments, and David Trainer, CEO at New Constructs. Thank you both for being here. David Trainer, some of your thoughts here. The big picture, I mean, right now, GameStop is up about 9%. Some of your thoughts on the quarter?
Look, it's good to see GameStop actually, produce a little bit of, show some life on the top line, but we're still seeing negative margins from this business when you adjust out for all the unusual items. There's a tremendous amount of debt overhang. We continue to believe the stock has a bigger chance of going to zero than it does of maintaining its current performance.
Has a better chance of going to zero than maintaining its current performance. I mean, it has gone from $10 to $30, right, this year from April till now. I mean, you had a few real spikes, but what are your thoughts here as you take a look, Dave?
Well, it's interesting. We think of these meme stocks as really meme stocks, and they're fun to trade. But at the end of the day, they're companies, they're businesses. And in the case of GameStop, we're not seeing a lot of transformation that we've talked about, right? And so we have revenues down 20% year over year. That's in the back of being down 9% the quarter 1 year ago. So we're not seeing a lot of momentum in the underlying business. Now, with that being said, they have been able to raise a significant amount of capital. They've raised equity.
I'm at 135.
Again, which is probably
I'm up $100.
But until we actually really see, I think, some momentum in the underlying business, it's going to be hard to see GME kind of continue to rally consistently.
Yeah, and you know, we think about meme stocks, and this really started in 2021. There was a lot of excitement, and people were doing this. You're actually saying that you think that even Roaring Kitty has less influence now than he used to. I want to hear both your thoughts on this. We think about the tendies, right, like chicken tenders, or what the profits that people got on just on September 6th. We saw a post, and I saw there was one options trade that made $550,000. One trade. Pretty exciting. I mean, wouldn't you love to make that? But it's very risky. You think, Dave Mazza, that you don't think he has the same movement after his posts?
Yeah, so we actually did a study. We looked at every time he's posted on, at least on Twitter or now X, to see the impact.
145.
Right. What we've seen is that
I'm ready to call it a day.
Basically, the performance on those days on the upside has been more muted. So we've seen days where
We could drop to the 63, and this could be a nice trade, so I'm going to just wait a little longer here.
He certainly plays a role still, because those folks that are chasing the tendies, as you say, are still believe in the Roaring Kitty phenomenon, but its impact on the name.
Somebody made a gross mistake.
These meme traders has moved on to other memes or other stocks in general.
It's been, I mean, it's a lot of fun for the folks that are fully involved. They want something to go to the moon, right? And whether you have diamond hands or paper hands.
Somebody
right?
made a gross error.
But some of these other names that have come into play, I mean, you could put the DJT maybe in there, AMC, BlackBerry, Netflix, Pound.
Anyone get into AMD calls for long? Should I?
All David Trainer names that are meme stocks, but they have been referred to as such in articles. I mean, as far as GameStop,
To the 34.
here that you think it's probably more likely to go to zero than go anywhere else.
Where'd you come up with that?
They are not transforming to digital. They're
34
certainly not
EMA.
selling, games, right? Hard gameware. They're trying
Do
to do
some
cards,
homework on that.
trading cards, and made a deal
34. I got the 21.
You know, sports
And I don't have it
company.
going
But
to
are
the
they
63
really redefining
next.
themselves? I mean, Netflix used to send us a video, but Netflix redefined itself. It became a streaming behemoth.
No, I like what Dave had to say about the lack of the transformation needed to justify the valuation. And I do think that this meme stock
150. I
story
could get out
is
here.
losing its luster. And I think there are other more exciting meme stocks. I mean, you can even make a case that in some ways, the way we've seen Berkshire Hathaway and some of these Mag 7 stocks move, that they're the new meme stocks. And the advantage that the new meme stocks have over the old meme stocks is that these new meme stocks actually have businesses. And I think the sort of traditional meme stock investor.
Yeah, that's definitely a solid support.
If I'm going to gamble on a stock, I might as well gamble on one like NVIDIA. Yeah, it's super expensive, but it makes money. When you're looking at something like GameStop or AMC or some of these original meme stocks, they don't make any money. The risk is much higher. And so I think
Well, that's a meme, you dim. You can't compare it to NVIDIA.
And playing with my money as meme stocks.
What are you talking about?
Investors are likely to do. Then at least they can put it into a real business. But with GameStop, it's not really a real business. And to Dave's point, to your point, Nicole, they're struggling to find a way to get some footing, to make some real money. But the bottom line is, I don't think they will, because the space they're in just doesn't really have anywhere close to the cash flow opportunity needed to justify the stock price.
And you did have some.
They got
other
$1 billion
names
cash,
that
buddy.
put your money to work. You said Target and Steel Dynamics and Interactive Brokers were names that.
One of the first things I learned about trading is a company, how much cash do they have? Are they debt free? And that was the only indicator I needed. But he's right in a way, I mean, but I don't know really what's behind GME. But Reddit turned around to be a great meme stock. It's had too big of a run. RDDT. Down here at $50 all the way up to 180. It's a 350% increase. How many should I get out of these, Mike, at 150? Say yes or no. You're probably not even listening to me. Oh, also watch SPX pivot pink line. Oh, well, that's a big drop. That's what I just pointed out. Copycat. But he has a good point. And plus it runs right into the 63. I'm not going to, that's what I'm thinking. They're not talking too negative like they've been talking. I mean, it makes no sense how these people are talking. We've had 4 years of Trump, and it was a very good time. I mean, the economy had some of the best periods over 40 years. Everything was pretty good, but you listen to them now, they're worried to death. And I think they're worried to death because Doge, D-O-G-E, and spending, if he goes through with it, we'll have one heck of an economy. Liberals don't understand the spending. I mean, it's way out of control. And all they're doing is, I listened to that Bernstein guy today, and he's saying bottom-up economics. He needs to be, for a professor, he needs to be re-educated. When you go to printing money, where's it go? It goes straight from the top to the bottom. Saying they're working from the bottom up is a foolish statement. That's why they lost the election. The top 10% are the only wage earners in this country. The other 90% are the ones that hurt because of high inflation. So take that, leading economic advisor for Biden. We're at 135. Now we're at 135, so. Been tight. These candles are tight. Small little candles today. Nothing real big. So I think, always clean this gym. Oh. Say what? You need help? Hello, it's Jim. Are you okay? Hello, is that your little daughter calling?
Who is this?
Yeah, this is Jim.
Jim?
Yeah. You got the wrong number?
I think so.
Yeah.
Someone was trying to call Grandma.
Who are you asking for?
Beth?
Nah. Wrong number.
Sorry about
That's all right. You have a good day. So I got out 150 in here. Like Mike said, he's probably making $5,000 right here. $420 push time. Double top. The way I'm trading today, you have to have a little bit of good experience behind you to be able to scalp and get in and out of trades fast. And I'm trying to recognize. We had a symmetrical flag. This is called a pennant flag breakout. And the pullbacks have been short-lived, no more than 10 minutes. So now we're up at a double top with a higher high, and we just hit my resistance. So can we pull back off this head and shoulders? And I got to turn this heat up. I'm freezing. My feet are freezing. I'll be right back. See how cold it is in here. 70 degrees, but the floor is like probably 40. And Tesla's going to see 420. They've got 420, but we could consolidate off this all-time high. We did break it. That's a big deal. No, actually yeah, we broke. It's the top of that candle. I think it was 1450. $14.50 was the all-time high. For the extensions, yep. I don't think we could use. Yeah. Does that say 420? Does Mike have his mic on? Mike had his mic on. We about got some words out of him. That was close. I think it's going to be a high-pitched voice. Hi. Damn it. Ah, she broke out. Oh my. I didn't buy them, but someone made a gross error. Whoa, I forgot what I was looking at on the calls. I think it was 80. 60, 80. There's the heat map.
Is significant.
Yeah, Joe, you know, maybe there's no catalyst right now creating any headwinds, but we do have the Fed next week. You mentioned the 95% that the CME FedWatch tool is pricing in to a 25 basis point cut. When you look at data like this where inflation's not coming down anymore, look at the headline numbers on CPI over the last several months. It's actually, you know, firmed up a little bit. Does it warrant a 25 basis point cut, or is the Fed just doing it because they've started this rate cycle of cutting and kind of...
I'm going to come out and say it. Sometimes I just can't trust these numbers. That we're getting fed all the time. Now we're going, you know, they want to burn Trump. The deep state does. Oh, I'm seriously, I mean, to be talking crap, but I find it hard to believe their numbers. They leave so much out that should be in there, like food costs and everything else. Unless all of a sudden they're starting to add it in there, and the oil and et cetera, et cetera.
And the profitability trading, you know where that money's coming out of? It's coming out of value. And so a lot of the stocks that looked really strong coming out of that Trump bump, right? Or at least the sectors, industrials, financials, discretionary, you know, outside of Tesla, of course, and Amazon. But you know, some of those sectors are just losing that momentum. They're not keeping up with the money that we're seeing rotate into tech because you know, I don't know if it's chasing. I don't know what you want to call it, but this idea that you know the Fed has to continue to move forward. I would not be surprised to see the summary of economic projections, which we will get next week, right? That's the next dot plot. I wouldn't be surprised to see a lot of the Fed governors kind of move those their expectations up for rates next year. Even just outside of what the Fed is saying, if you look at what the markets are pricing in, I think this is really interesting. Just 6 months ago, they were expecting, you know, rates around 3.75, which is kind of where we were trading at that point. You know, they shifted up their expectations quite a bit just over the last 6 months in terms of, you know, where we'll be at the end of 2025. Not expecting any more than maybe 2 rate cuts total.
Yeah, that might be the plan where, you mentioned this earlier this week, Kevin, is the fact that, hey, they can cut 25 basis points, right? It's a 25 basis points. It's not going to do much, but it's going to be the tone that they set moving forward with, as Joe mentioned, the set that's going to come out, and maybe some of the commentary, which might actually be hawkish, because if you look at the data, whether it's GDP, whether it's consumer spending, whether it's employment, I mean, it's all pretty good.
Yeah, Joe, I'll play the role of Jerome Powell in this discussion. And if you guys are firing questions at me, here's what he might say. I remember the long-term history of inflation and how we were trying desperately to get it from 1.5, 1.6 up to 2%, which doesn't seem that long ago.
And we couldn't do it.
Right. So
years.
there's a downward natural pressure on inflation by the U.S. economy. So I feel once I get it close the general U.S. economy.
I don't want to listen to what he's saying, but I'm telling you, if we can cut spending out of government, they think spending helps inflation. It doesn't help inflation. It makes it worse, because we're $2 trillion over budget, plus the other 6 trillion, 7 trillion that they printed. That's a total of 8 times 7 is almost 13 to 15 trillion dollars that we didn't need to spend in 4 years. If we had not spent maybe half of that and kept the budget, we would be just fine. I think, my opinion. If we can cut the spending down out of the government, we'll have one of the best markets in the world. But when the Democrats are in control, it's not that way, because they want to mandate and they want to pick winners and losers. I'm looking at PDD. I've called this out last time when it was under 100, around 97, and we had a nice run on it. And we're getting back down to that $100 again. And I'm thinking right around just a little bit above 100 if this thing pulls back to head and shoulders. 1140, so I'm going to put a little alert in here. I'm thinking China will be good next year. I really do. Finally. They've been calling it out every year, but it hasn't happened. But I'm going to call it out in 2025. Because Trump will make nice to all these people, and if we can get these wars stopped, at least Ukraine when Russia won. I don't care about the Middle East. Well, I do. Throw sanctions on Iran and watch this shit stop.
Everybody's kind of giving everybody a pass at this, but that's $10 billion you threw out the window. Is this good for Tesla? Is it bad for Uber?
Yeah, the competition in this area seems to be starting to thin out. People starting to drop off.
Uber.
Like, you're so far ahead.
Yeah, Josh, what about your
I'm gonna
Uber?
Stop competing with you.
Yeah.
It's kind of one of those, and let's stop throwing good money after bad. So it's kind of like charging, right?
Right.
At some point, you go, hey, Elon, why don't you just do the chargers and we'll hop on you. It's kind of one of those things. Default to the company that's doing it the best and let them do it. And maybe, listen, you're starting to see big moves in EVs in all these areas.
Now here it says, New York City delays rideshare driver pay rule amendment to 2025. Socialized engineering is what it is. Uber's really having a hurt. This is the one that they talked up so much last year. At the all-time high at 87, we're going to 120. Everybody was behind it, and I said, no, you're not. You're going to go back down to this bottom of this megaphone pattern, and it's going to be a strong buy. Or a head and shoulders. Or even down lower. But we got a megaphone, well, not a megaphone, but a 1-2 freebie. Yeah, we do have a megaphone. Could look two different ways on this, but yeah. Then there's another one right here. So we got megaphone. This thing could easily have one more, 1, 2, 3, one more down here. Or stop right there. I'm going to put an alert right here off the body of that candle. These are on the weekly. Let's see if that touches. That's 58.74 for Uber. Now, I never have really liked this company. Not at all. When they first came out, they were accused of hiring people with no background checks, and women were getting raped. But I think they took care of that. Let's see if they still have it online. Uber driver in Southern California accused. That was in well, this is just in 2024. Uber driver in Southern California accused of sexual assault on girl 15 outside school. Women's safety, Uber. So here they come out with something here. I know they took measures. Well, that's besides the point. You got my message. Toll Brothers. Oh, let's look at the SPY and SPX here. We're retesting support. So, Mike, if it doesn't hold here, we're going to drop more. $2, $2.50, maybe even $4. But we're definitely at a support. Double top breakout support off of 3 white soldiers. If you're listening. This definitely, I don't know if it's a good one, but we're here at 1. Okay, I'm going to go in there and get my stew and eat my keto bread, and I'll be right back.
Fascinating.
Yes.
Competition coming all over the place, and Adobe, it appears, failed to really stay ahead of everyone when it came to AI, and their margins are decelerating. Some of their growth is down to like 10 to 11% now.
Damn.
And it just seems like the competition that they were way ahead of. I also see competition from Canva, if I pronounce that right, and Meta has got something that compete against Adobe. So there's competition. I mean, Tom, in a melting up stock market, the last 12 months, I've got them down 13.3% over the last 12 months.
You're wrong.
That's not great. If you're, like they claim, involved in AI, now they still got brand strength. People still know what Adobe is, right. But boy, I don't know how close competition is, but it seems like it's starting to hit their margins. Yeah. It's starting to hit their growth.
Right. Remember, and Joe, I'll bring you back into this conversation. The stock hit all-time highs in November of 2021, so 3 years ago. And remember, they were one of the big initial
pin it flag
when NVIDIA came out with their new chips.
On a
talked
1, 2,
about
3
AI,
top
that
for
Adobe was
NVIDIA.
actually monetizing it
Adobe.
first, but we've actually pulled back to all the points that Kevin made, Joe.
Well, Adobe's down 8% on the year. If you look at the software sector as a whole, it's up 30%. So, I mean, what a wide chasm.
Yeah, it's
between
spy. I'm
the
telling you,
performance.
it's scary looking.
How frustrating does it have to be for Adobe's management? You know, they beat earnings expectations last 7 quarters in a row. You know, the stock is not cheap. I think part of it is the fact that, you know, as Kevin mentioned, you're talking about high single digits, maybe low double digits revenue growth, where you're seeing, you know, the rest of the sector seeing expansion quite a bit beyond that. Especially given the fact that it is one of the, or it was, right, one of the early adopters of AI, and one of the early adopters of, you know, or at least one of the companies that were able to show a path for profitability from AI. The problem is they've had a hard time getting their products out on time. The last one that we're talking about right now is the Firefly, the adoption of what you called, you know, the images based upon the speech. They've been talking about that. That's been in beta testing now, and still hasn't really rolled out. And here you go. You have, just as you mentioned, OpenAI's rival Sora came out on Monday, and so it's frustrating for investors to sit and wait and say, "Yep, you're beating earnings, but what's next?" Right? What's the next leg?
Today's info commercial is brought to you by Kerrygold Butter. Grass-fed Kerrygold butter is the best butter you can buy. It was running at $7.59 before Trump was elected. Now it has dropped almost $2. This is my favorite butter of all time. I could eat this raw if I'd like to. It makes your turds come out a lot easier. So I promote Kerrygold Irish, pure Irish butter.
There could be some investors that are looking for, you know, even the slightest bit of optimism to push the stock up. Trading down to about 478 not that long ago, beginning of November. That was definitely the kind of the cycle low that we've seen. It's broken out from that downward channel just over the last few days. And it is positioned potentially to kind of, you know, move back up should you get some favorable guidance from the company. And I think that's what everybody's waiting on. It's not necessarily the earnings. Like I said, they beat the last 7 times, and I think 10 out of the last 12 quarters. So the beats expectations are there in terms of earnings per share and in terms of revenue. You know, what's going to move this stock is going to be the guide. So if you think that you know, this stock might be a little bit depressed, and you know, given that breakout that we've seen on the downward channel, selling put spreads in this example might not be a bad idea, because look, you still have the current implied volatility in the 72nd percentile, and you know, just moving and looking at that kind of expected range, taking it down to around 505, if that's the strike that you're looking to sell, that basically puts it right in that range of where the expected move is. So if I sell the 505 put, I buy the 500 put, I'm selling the put spread this week, right? So this is very much a binary trade. It's a 2-day trade. You can sell that. You can take somewhere about a $1.10 to a $1.15 in. So if you take in $1.15, that means you're risking $3.85, and you'll find out fairly quickly whether or not you're right.
Yep, let's break this one down. It's out in the December 13th weekly cycle, so just a couple days till expiration, really short-term positioning, trying to take advantage of high implied volatility because it allows you to collect more option premium. Sell the 505 put, buy the 500 put in the December 13th weekly cycle, collecting roughly about $1.15 credit. That's good. That's what you can make on $115, as Joe mentioned, $385 in risk. But you break even, Kevin, all the way down at 503.85. So you got a big cushion to the downside here.
79.6% chance probability of finishing out of the money on that 505 put. So this is the ultimate trade-off that we talk about all the time in front of clients, is that if you're selling high probability trades, the risk favors the downside here. You've got $385 of risk to make 115, but you've got a 79.5% chance that that trade is going to be out of the money. That short put's going to be out of the money at expiration. So yeah, I mean, there it is, right? You could be extremely wrong on this trade directionally and still profitable.
Yeah, Joe, I kind of wanted to bring this up because you brought this example, which is a neutral to bullish type strategy. In a perfect example, we talked about MongoDB earlier this week. That's in the software space. Really good top line numbers, really good EPS numbers, but they guided a little bit lighter than the street wanted. The stock actually fell after a pretty robust report. So this gives you a little bit of cushion to the downside. Now, you're not making a lot of money, but as Kevin mentioned, it's all about the probabilities on a strategy like this, right?
It is. I say, one bit of caution is that stock has had some outside moves to the upside and downside, right? So about an 8% expected move right now. We talked about it being about $41, $42, around 8%. The last.
So here we go with a double top
move,
on the weekly.
In the previous announcement before that was about a 9% move to the upside. So it's it's relatively within that range.
We could easily pull back and hit the 9.
It really is your expectations. If you're expecting decent guidance, and you think the stock's been punished and hasn't participated
On the SPY.
in the upside move, and maybe they're right in the ship, right? I think that's what you have to bet if you're looking at this type of trade, is that they're starting to right the ship and they're going to get the products out a little bit quicker and out of that beta test that it's kind of stalled the value of this company.
All right, good look at short, neutral to bullish put vertical. They're taking advantage of that higher implied volatility level, as Joe mentioned, over 70% IV percentile rank on that. So implied vols.
You got a dragonfly now.
Thanks to Joe Mazzola, head trading and derivative strategist at Charles
On the
Schwab,
weekly.
joining us today, breaking down markets and Adobe. But coming up after the break, we're going to be joined. We've got something new, Kevin. We're going to be joined by Rick DeCat to chart moves in Netflix, which is
We hit the 63, called that.
Stick around. Fast Market's coming right back.
Randy, we hit the 63 on the SPX. $0.80 to 115.
Trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading with Schwab is now
There's that mic.
unlocking the
If it doesn't hold here.
The award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over
Get back in 'em.
technical studies. Tailor the platforms to your unique needs with nearly endless
puts.
customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Schwab.
What's up, Carl Nation?
It's gotta break the 63.
Best full-service wealth management skills in the biz.
I'd wait until then for puts. I wouldn't get them now.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
We're receiving technical difficulties.
Schwab, a modern approach to wealth management.
Welcome back to Fast Market here on the Schwab Network. It's time to bring in our next guest. It's lead.
I emailed Schwab a while back. I said, man, can you get rid of some of these commercials? Remember the guy with my dad? He used to install Windows. And I told him, I said, I can't stand this commercial. Now the new ones are coming out are great. We're having technical difficulties. My dad would be proud of me right now. He installed Windows. People used to charge $400 or $500 a window. My dad, he thought that was too much, so he just charged $100. Mira. Like I really got a good sign that I'm going to have one of the best years next year. I cracked a double yolk egg today. I'm going to show you YouTubers. You haven't seen it yet. I mean, it shocked the holy Toledo out of me. I just got through cooking my bacon. And I cracked that baby. I said, whoa. And I had to look it up. It's either I'm going to have twins or I'm going to have a real good year. Something good. Sign of good luck.
Day NFL games, that might be something new. 50% of their new signups are for ad plans in ad-supported countries. That tells me that they're charging more for ads than other streamers, that's for sure. But at the same time, are you cannibalizing maybe your base case here for subscribers?
Yeah, but once you get the ad revenue coming in, and once you get like Latin America and Asian Pacific is where they think they're going to be able to grow, and then that last stand that linear TV is going to make, Tom, is going to be what? Live sports. And if Netflix and Amazon start taking live sports away from the networks, look out.
Yep.
It's turn the lights off on linear TV.
Yep.
Because that's all they have now is live sports and live news. If Amazons and Netflixes of the world start attacking that, which it looks like they're trying to now, that's where things get really interesting. Now, it doesn't mean it's not going to be bumpy. And these markets have moved a long way. So the trade I'm looking at, the paper money trade I'm looking at here, is something that plays for movement. And so I went out to the December 27th expiration. So only 16 days, Tom. Expect to move $44 on this trade.
And I'm going to explain the trick.
Long iron condor, which means I bought the 965.
So we got the 63 EMA here. I wouldn't have become bullish in this trade until we had a whole one body candle below that 63. We didn't have one. That body is still up above it. These bodies, I mean, you got to have a whole body. And then I go to buying it. That body, I don't care about the wick. The wick would be nice if it was at the top. But the body of the candle has to be below that moving average, no matter how what size it is. I would initially go in small. And that's why I called a reversal to the upside on this. I said wait on the puts, because that would have been a pretty good drop to my next two support levels. So now we're up here, we just broke a double top. And I'm gonna go make me a cup of hot chocolate. And that'll be it. I fast the rest of the day. We've had 5 good candles with a spinning top, or doji. Is that doji there? 3 white soldiers, continuation pattern. We could easily come up and double top on this thing. Mara. We're still above 100,000 on Bitcoin. Bounced right off my trend line. Let's see what that. See that trend line? Those bodies of them 2 candles right there, and it runs on up. And we pulled back and hit that trend line right there. Six-month weekly. I don't know if I should message that chick that called me a misogynist. Say, we won, chick.
A new individual to the administration there for the Federal Trade Commission. So, the other thing is that Chrome browser, monopolistic potential divestiture issue, that's going to be on the back burner in the next 4 years. So, With that said, I think the regulatory environment is extremely favorable for Google. Not just its monopolistic practices, but I think from an autonomous vehicle standpoint, that's going to be a huge catalyst, and I think it's been a catalyst for Tesla. So it's a win-win, and I can see why the stock is higher, significantly higher, because it's been an underperformer. Everyone talks more about the movers. Everyone's been focused on Tesla and NVIDIA being the largest, but Google has slowly, been drifting lower, becoming more of a value play in the Mag 7, and now it's playing catch up.
George, I'm such a big fan of the news cycle and the flow of news as it comes out. It was just November 21st that this stock traded down as low as
all-time high on
$163
Google.
because of, the breakup, and they're going to be forced to break things up.
This one had a split.
Since then, all this positive news coming out, and Tom mentioned it's piling up today. Basically the headline is GM getting out of self-driving cars just leaves Waymo and Tesla now to compete for self-driving cars. I mean, then you get the Willow chip. Then you get the release of the Gemini 2. This is a company, despite regulators basically camping out in their lobby, this company continues to innovate.
It pisses me off.
And you're right, George. It's
Biden.
all fall being the cheap.
Biden gave this company, General Motors, billions. Billions. I'm talking about a lot of billions to get involved in this EV market. Now they're wanting to pull out. They're so full of crap, General Motors is, but it's an institutional trade. I just can't stand the company because I know they're scandalous or scandals for our tax money. Now they want to get out of it. They can't. They're not smart enough, for one. Right? Do you agree with me, Mike? Say yes. It's depressing how much billions we've gave them. This money did not need to be spent. And I think that's what we're going to have and that's going to help our economy boom. Guarantee it.
Using autonomous driving software, but it won't be developed on their own. It'll be developed by other companies like Google and, of course, Tesla. And I'm pointing them out because they are the domestic ones. There are obviously some international ones.
I want to see what this Google car looks like.
I'm not going to mention them here.
George, we've had AI as our go-to word over the last couple of years with NVIDIA. Is quantum computing going to be that important? Because even they said it's going to be a couple of years out until this is, usable on a regular basis. Got competitors coming into the space, Meta Platforms, IBM, Microsoft. They're building out quantum computing also. But is this going to be that trigger word that we're going to be focused on now moving forward in tech?
Well, I mean, it's a great question, Tom. I just want to look at the market. I mean, obviously, when NVIDIA gapped higher on AI news, the market told us that AI was going to be a big deal. It is, and NVIDIA has just not stopped since. I'm not saying that's going to be the case for Google, because data center, GPU, 3D accelerators were core businesses for NVIDIA. So the question is quantum computing a core business of Google? I suggest it is not. So therefore, I think it'll be a positive catalyst, but it's not the only catalyst. And so what I'm trying to say is I think this is a great visionary technology that Google's been working on, by the way, for quite some time, as part of their ancillary, business or special projects businesses. But, quantum computing, I think, is going to be the next gen technology that'll be used across the board by major mega caps, including IBM, Microsoft, Meta, and Google being one of the premier leaders.
All right, great breakdown for us. Appreciate it. That's George Tillis, Senior Markets Correspondent here, giving us the backdrop on the all-time highs here for Google Alphabet. Kev, it's actually got a market maker move built into it right now, $4.20 into the end of the week, just due to the fact that we've seen a lot of movement in these shares, up over 15% just this month alone. So we looked at a strategy. If you think this is going to continue, and we're going to continue to see all-time highs, let's look at a strategy that takes advantage of a move higher while offsetting some of your costs on a bullish trade using the option market. So went out to the January 17th monthly cycle on this one. That's 37 days to expiration. Buy the in-the-money 190 call. It's got the higher delta. And then selling the 205 strike call that's currently about $10 out of the money to the upside. $15 wide bullish call vertical. We've got 560 debit on there, Kevin.
It's trading a bit higher.
Because that's where it was trading earlier. It's trading more like about 640 right now.
Yeah.
So you got to take that into consideration. But if we're looking at this just for the strategy, we're going to use 560 on this one. If you pay 560 debit on a $15 wide bullish call vertical, that's going to be your risk. $560 per spread on this one. Now, what's your break even? 195.60. We're only about a
we got a triple top on
that current break even
SPX.
now. So by offsetting some of the costs, buying a deeper in the money call, you've got less percentage basis move for the stock to go higher to get above that break even. Kev, your thoughts here, because
Get ready to
implied
squeeze
volatility
again.
levels have popped a little bit, even though the stock's hitting all-time highs. But I think that's just due to the parabolic move and the velocity of the move that we've seen over the last couple days.
Well, the good news is doing the call vertical, where both options are in the same expiration, really takes you out of the Vega game.
Right.
You don't have to worry about implied volatility because they're both in the same series. So the applied volatility, or the Vega on this trade, is virtually nil. So all you're looking for here is whatever the debit paid is. It could be $5.60, it could be over $6. That's the break even. It's $190 plus whatever you paid for it is your break even. You know it can go to $15, and you know you've got some duration. Jan 17th, you've got some time on this one. Jan 17th was at 37 days.
Right.
So you've got duration on this. But you know the risk, you know the break even. It's pretty simple. You don't have to worry about Vega too much.
Yep, two-legged spread here. You're buying, if you just bought the 190 call, Kev, and say, hey, I want to buy a call in here, it's bullish. Well, you're going to pay over $10.25 for just that call. So offsetting some of the risks on this, the 205 strike call, just outright, you're reducing risk by over $3.80 on that particular position. So if you think it's going to go higher, that's great. But now you can lower your break even by selling an upside call against your bullish 190 strike call. And it gives you some flexibility as far as trade management goes, because you've got 37 days left in this position. If the stock pops up above 200 over the next couple days or the next couple weeks, it might give you the opportunity to adjust or
Here's
close
your stat
early.
to close the show, Tom. Elon Musk now over $400 billion in net worth.
Net worth. He's got some cash. All right, that's going to do it for us today here on Fast Market. Stick around right here on the Schwab Network, though. Next Gen Investing is coming up.
Fat Cats will be back in 1/2 hour. And Schwab. Everything's at a resistance. Zim is back down here to double, triple bottom. We got new high on SPX. Jimmy said wait. See, the 63 has been support. And that's how you got to run them up the moving average. This is another trick, one that you really need to pay close attention to. And I'm going to explain it right now. And I'm going to explain it in a lot of my videos coming up. So subscribe and ring that bell and watch each video I put out from here on out.
I cannot accept that course of action.
You will. You'll be hitting the like button on every one of them. So, you got your moving averages. You want to find which moving average is holding up the trade. So we got the 63 right here. We had a triple bottom off the 63. We have the 63 right here. Triple bottom off the 63. We got the 63 right here. So that's your solid support. That's my solid support because that's the moving average I'm using on the 1 minute. It could be different on a 5 minute. Let's look at the 5 minute. Five minute, that's the 1 minute. 5 minute, it's 9. As long as you stay above the 9, you're still good in the trade. So let's say we bought it off the 9 right here. We bought it off the 9 right here. We had a double tweezer bottom right there. Let's take us to the 1 minute. Yep, we would have took that right off the 63 on the 1 minute also. At the same time. But on the 5 minute, it'd be the 9. Whatever moving average you're using, let's go to like Tesla. These momentum trades. Tesla has a little bit more volatility to it because it's Tesla. But the sentiment now has an animal instinct to it. Which means, what do you mean by that? What I mean by that is the fundamentals and the technicals don't matter. It's the momentum that's picked up by Trump, the outside source. So that has animal instinct. Stocks have that. Another one was NVIDIA. There, when NVIDIA run up to 1200 or whatever, it had the animal instinct. Everybody, because of AI. It was the #1 pick back then. Same as... That does not compute. It does. But not now. Because you hear the animal instinct's gone from NVIDIA. People are talking, well, we're going to move it into small caps. So definitely we breached below, and we didn't really have nothing holding this one up, all but the 63. 63 here, the 63, and then we had that triple bottom here. 63, 63. And on 5 minute, it was the 21, the 21, the 21, the 21, and you stay bullish when you stay above the 9. So if this thing came back and breached below the 9, I'd short it to the 21. At least. And then let's look at Google. Use whatever moving average and time frame that you use is what you want to look at. So here's Google. We had the 9, and we breached the 9 and hit the next support level, which was the 21. Had a spinning top and a hammer, and then we respected the 21. So we're coming back down here. Now, if Google doesn't hold this 21, I'd run it all the way down to the 50. And I just added that 50 on here. Or at least back to the 63. Or to my next pattern, which would be the head and shoulders, right off the 50. Or this triple top breakout. That's probably what it is. Which would be right above here. You got your 1, 2, triple top breakout, and it'll come back and respect that old resistance of the triple top. So I'm going to put an alert right above that at 192.83. Let's see if that triggers up. So we got the Mike's sizzling index here.
Thank you very much. That's really nice. Thank you.
Yes. This is a descending, and I'm going to change this over to ascending for a little bit. But I'm going to look at this right now. So we got Tesla. Tesla's going to 420. I mean, it's going to go to 420, period. And that 420 is a magic number for Elon because he gets high. We got Apple. Apple's bounced off the 200 twice. Now we've breached below it. So we got to look for the next support level. And that's that previous high right here. Mike showed you that earlier. And that could be a triple top breakout almost. Quad. 248.93. If that doesn't bounce off that, that's called a pivot point. I'm going to set alert right above it, 249. We're about there. So that'll catch my attention. $249. We'll see what happens right there. Because that's a triple quad top breakout. So that's 4 times. 1, 2, 3, 4. Boom. If that doesn't hold, it could be a pretty good drop down to here. Now, Rob, are you listening? Rob's got a trick with Tesla. He likes trading his stock on Friday. Might not matter now, but Friday it had that big breakout. Then it pulled back on Monday. This ain't going 420. There's no doubt in my mind. It's got that animal in spirit, man. This ain't going to be 750 this year. I got shares and I'm going to hold them. I ain't going to touch them until he's out of office. Unless we get hit with a nuke. I haven't seen so much animal spirit in stock. It's been a long time. Besides NVIDIA. Those are my two top animal ones right now. And AMD had the spirit for a long time when we called it out at 10. You didn't know me back then, Mike, when I was calling out AMD.
We choose truth over facts.
So AMD, Florence, you listening? Mike called this out today. Now we break to 63. This is on the 30-minute, which I don't use much, but I can tell right now that we tried to break it once. And that's going to be your hard resistance. So if we break that 63, this thing can shoot all the way up to 133. This is the second test on that 63 this morning. But if you go back, it's been the 21. So we're picking up momentum. Mike has overhead resistance on 6091. So we're hovering around. Now see, here you are back at the 63. So if this fails, I'm getting in the puts. And like I said, I got to have a full body. I haven't had a full body candle under that trend line yet. But this is the fourth time we've touched this now. So I'm going to prepare ye in the name of the Lord. The 6080s, or the 6085s, 6085s, puts. Now I got to have a full body candle under here before I take the trade. I don't care what size it is. God darn it. I tell you, they really screwed this platform up. I think they done it on purpose. And I'm looking at the 6085 puts. And if we break the 21, I get in the calls. 220. SPX puts. But I have to break down below that 21 or I just can't, I ain't going to take the trade until I get a full body under that candle, under that. Damn, it's already up 15 bucks. Hot 2. Hot 2. Strike is the 6085. Then I'm going to be looking at the calls. And they're going to be the 6090s. I could almost do a stringle here. Calls, strike, 6090. We're squeezing right now. We're between the 63, so we're going to find out something real shortly here. Go straight to the 6090. They're at 370 right now. And the 6085s. So what is that? Is that a stringle or a straddle? A stringle short. Okay, now I buy the calls. So it's a stringle to the go. The stringle has 6095 call. That 190. $1.90. I got full body above the resistance. Yeah, I feel like it's a little too late, but we're going to find out. Oh. Now we're back at 63. I don't like that engulfing candle. $175, $170. So I'm gonna have to get out of these real fast. This is just a practice run, but the momentum could be done We got 4 minutes before the fat cats come back. So I got 190 and 175. I got 4 contracts. As long as this is the third touch, this is a triple bottom, 1, 2, 3 off the 63. If it doesn't work, I'm going to get out of them. Lotto. My girlfriend Elena Haba, she's coming over tonight to talk politics. I told her I wanted to execute a Haba dance. She said, "What's that?" It's a 2-step dance I learned back in high school. Haba, haba. Brake resistant. We got a double top here. I'm up a measly $10. So break the double top, and that becomes our new support. 1, 2, 3. Looks like the mustard's almost gone. $182.5 is my average. So it's not doing much. I don't want to stay in a trade too long. If it ain't working, I'm going to get out. As long as I'm above that 63, I'll stay in it. But once I breach that, I'm out. And we got a spinning top up here. We got a doji, and we got a hammer. There's 195. There's the head and shoulders right there. So that's what we got to break. You got your left shoulder and your right shoulder. Left shoulder, right shoulder. So we're going to find out. If we're going to double top, and then I'll stay in it to a double top. Kind of wish I'd added a little bit more than what I got. And I'd probably be selling them here soon. There's $2. You can get out now if you wanted. Because you're at a shoulder, you're at the shoulder line of the Head and Shoulders. You got the left shoulder, the head, and the right shoulder, and then we retouch the right shoulder for the second time. So if this thing comes up one more time, we'll break it. That's the power of the second shoulder, same as on the bottom of the inverse. And later in the day, they depreciate a little bit, but we don't know that. Right now I'm up 45, 40, almost 50 bucks. I can get out now if I wanted to. But we're above the 9. Let's put the VIX over here and see what the VIX, oh, I don't want to use that. I was thinking this morning, and this is what I think Mike's taught me since I've traded with him. There's other variables that could make you determine if the market's bullish or bearish. If that's not the bonds or the VIX, there's 210. And I need to start implementing that into 2025. We're at 210. Now I can get out of this trade right now and be very happy. But we did a triple bottom off the 63. This is the point I'm trying to get across. Can you tell if a stock's still bullish or bearish? As long as we stay above the 63, I'm in calls. If we go below it, I'm in puts. Now I'm going to get out of this trade just to show you how successful I was. At 215. I'm in the heat of the moment. I can get out of this trade right now at a snap of a second, and I got out of it. And you do that 5 or 6 times a day, you got 500 bucks in your pocket. One trade at a time. There's 225. See? I just left 50 bucks on the table. Damn it. Open up. Damn. I just left 100 bucks on the table. $230. If you're in this trade, get out. Unless you think it's going to break out. You're at a double top. Damn. I left 20 bucks on the table. 255. For God's sakes. I hate teaching. If I did this by myself, I'd be filthy rich. Magnificent, may I have a grade for teaching? No, Bobby, what you got to say? Uh-oh. You're talking politics. He's a dim. He's a human trafficker. Politics in the politic room. I love politics. I love bashing liberals. I used to be one. But this one we cared. Now it's greed. So I'm out of this trade. I left $35 on the frickin' table. Now you're looking at the flags that are telling you something here. That's a bear flag. That's called an inverted hammer. And they can drop back down. And I think if we touch the 63 one more time, we'll drop down a lot. Fat cats are back. See, those are reversal candles. QT BS. What is that? QT. It ain't Q. There ain't no QTBS. Is no QTBS. I got that right, QTBS. QTBS. There's no such thing. What? You sure that's the right ticker? Tesla, man. This has got more moment. It's got more momentum than anything right now, and they're pumping Google and Amazon. $63, $63, $63, $63. So as long as you stay above the 63, we come back and touch the 63. That's where you want to set your alert. We got the 63, 63, 63, 63, 63, 63, 63, 63, 63. 63, 63, 63, 63. So that's your pivot point. And that's what you got to pay attention to. If we come back and we hit the 63, you buy the call. If we go below the 63 with a one body candle, you buy the put on Amazon. That's on the 1 hour. Then we got Visa. Visa's the 200, the 200, the 200 EMA. I don't want to trade that one. XLM will probably drop now that Trump's in office. Yep. Oil makes money when Democrats are in office, and they make less money when Republicans are in office. But they drill more. But we've been drilling, we're at all-time highs in drilling right now. Plus what we did lifting the levies off of Iran and German and Russians and China and all of them. They can drill as much as they want, but we can't. So this is what this AMD does on the 20-day 1 hour. Yeah, I'm liking this one. We got the 3-day rule on sell-off. I got support at 127.72 to retouch. That'll be the left shoulder, the right shoulder. You got the left shoulder, the head, and the right shoulder. So you set an alert right above that. There's my alert set. 128.17. Everything's kind of squeezing out. We got a new high on the QQQ. Mike's put that in there. AMD chart, read it over. Mike, Randy, and Magnificent are some of my favorite traders. So give kudos, and Sue. Sue has a mind of her own. Listen to what she's got to say too. Don't tell her I said that. And she don't know what I said. I'm not telling. Woo! Slick Willie. Okay, we're back down to 63. This is it. Do or die. Get ready to buy the puts. And what did I have? 390s, 6090. Ooh, man, they're up good. 6090s or the 6085s. 6085. 6085. Okay, part two. Part two. We got full body candle under the resistance at 195. Damn. So I'm going to add another one here at 165. We can't have no more fake outs. $195, $165. $180. Got average. Target's going to be the 200. Right now I'm up $40. Oh, damn, missed my PDD here. Oh, shit. Okay. I wanted to buy this. Okay. Oh, so that's... 165. $101.45. Let's move that one up. It's right there. Yeah, right in there. Okay, SPX. I got that one body under there, so I'm still holding on to these. My average is 180. And the time is perfect. Pot stocks are down today. I'm liking where this Tilray is. Now, I wouldn't be surprised if Trump don't legalize it. that he does legalize it. I bet he does. I hope they got everybody out with minor offenses on cannabis out of prison. Kamala put a lot of black people in prison for it. That was when she was against it, but now she's for it. I'm going to get into PDD into next year and hold it. And I'm going to get into BABA and hold it. And I'm going to get into JD and hold it once I find the right supports. And I want to get into that quantum stock, RGTI, if I can find a good dip. And hold it. And I'll have BABA. Tesla. I already got it. I'm going to hold it. I'll get 100% out of Tesla. I guarantee it. I'm really bullish on this stock now. Jim Cramer thinks we could get a better buy. I got to get out of this trade. It ain't working out too well. Just wait a second. There, I buy 4 more. I'll probably just do that. Buy 8 more. Right now I got $640 in it. If it gets cheap enough, I'll buy a lot more. Now we're getting into the end of the day and I don't like playing puts. Damn, man. 60, 90s, you see where they are? I just left a lot of money, not a lot, but I left a good chunk of change on my SPX calls. They're at 335. Damn it. Knife! Before I get pissed off. Unbelievable. Them 60, 90s. I got out at 215. Eight times what? $1 I left on the table. $1.30, 40, 45. How can that happen? I don't know how it happened, but I don't like it. Okay, I'm at 185 now. I'm in the green. Let's rock the ship. I want to hit the 200. Mike, what do you think? I want your professional opinion. You're looking at AMD, I know. Okay. Yeah. We're going to drop here. We're at number 5. We usually take a nosedive. You're in calls? Come on, man. Rob? He's feeling strong. I'm in puts, baby. Well, two. Well, two. I'm going to be known as the Watu Man. Spit on that thing. I'm at 210 now. I can make a business decision, but I'm not going to because I want more. I want to be greedy. We hit resistance, support. How do you find support, Jim? You take the bottom of the lowest candle, which is right there, and you draw a line. I can get out here at 230. See how easy this is? I make it look so easy. 250. 255. I got 8 of these. My average is 180. And I'm going to get out of the... Every time I sell it, I bite my tongue and I dip another buck. But I'm going to... Oh. Jack, hold that thing. Spit on it. What two? Oh, damn. There's $100. There's $800. Woo! Out. Out. And I sold under the bid to get out of the trade. 260. There's 270. I could have got 270. How did I put that on the wrong spot. $275, you son of a gun. Now, Magnificent, could I have another grade, please? I think that was a good illustration of how to teach. And now I'm going to, again, my teaching is costing me money. So everybody in this room's got to make up the deficit. Today would be about $3,000. So figure out how you want to pay me out. $285. There's $900. I left 100. Oh gosh, $295. What two? I left $300 on the table. I got two. $3. $40 times 8. Now I'm very mad. Jingle bells, jingle bells. Beautiful. Okay, if you can count to 3, you can trade with me. If you count to 4, you can make a little more. If you know how to count to 5, you might take a nosedive. Does it make sense now? Say yes. See, Michael Jackson came out with a song called ABC 123. When I was 8 years old, 9 years old, I knew back then that 1, 2, 3 had a meaning. Thank you, Michael. One-ups. Tubus. I had a guy ask me, he said, what the hell is a tubus? Freebie. Forbits. And Five. One, two, three, have a breakout. 1, 2, 3 might make a little bit more. 1, 2, 3, 4, 5, you take a nosedive. Damn, Jim, I've never thought of it like that before. You're about the corniest guy I've ever met. They call it magic. That was a good trade right there. That was a better trade right there. Thank you very much. Randy, don't get your hopes up. We do have 3 black crows right here, so you break the 9, you've got it made. I'll be right back. I'm gonna make my hot chocolate. I think that's the best teaching I've ever done. I'll bet on Randy's farm. He can keep his roofing business. I bet his wife. I'll cook her soup. So if you lose, Randy, your wife is mine. Jim, that's kind of taken a little bit too far, my friend. Where's the small cap room? It's in my pants. When I start reading the Bible, you're going to be hearing a new Jim. Darkness, the absence of light, obscurity, gloom, symbol all that is evil, wrong, or opposed to God. A characteristic of death, especially for the unsaved. See light. Good call, Brandy. I'm glad you got in that trade when I got out. Oh. We got two snakes in here. Randy and Rob. I'll be right back.
How about we take a look at Macy's also in the news?
Macy's earnings out this morning. The stock is down about 1.5% to $16.46. Their earnings per share, 4 cents versus 3 cents expected. A penny beat there. Revenue, $4.74 billion versus $4.72 billion expected. So a slight beat there as well. But it was the guidance. They guided from $2.34 a share to $2.69 for the full year 24 to $2.25 to $2.50. So a slight down in the earnings per share, but revenue slightly higher from $22.1 billion to $22.4 to $22.3 to $22.5. So a slight uptick in revenue, but a slight downtick in the overall earnings per share for the full year. So the guidance a little light, a penny beat, a slight beat on revenue, but like I said, Macy's down about 1.5%, Nicole.
Yeah, and there was this whole probe about an employee that acted alone in this accounting scandal, $151 million, as you were saying.
We found James Howard.
Unbelievable, but another interesting piece of news about Macy's today, which is down 1.5%. The chart's not so great. The high of being $22 way back in the March-April time, and right now at $16.5. Thank you, Kevin Hanks. Great to see you. Now let's take a look at the bigger picture. David Dietz is with us, Managing Principal, Senior Portfolio Strategist at PPAC.
What the hell they got my shit on here
Thank you
for?
for being here. Good to see you.
There's 100 of them.
Pleasure.
How are you feeling about the market these days? We don't have much left in 2024.
Well, you know, we got to be feeling pretty good. This is our second year in a row of up 20% plus returns. You know, it's been almost a straight rocket ship up since the elections, with enthusiasm over deregulation, with enthusiasm over lower tax rates. And today is, of course, very exciting. You have 5 of the 7 Mag 7 names setting fresh all-time records. You've got a great new technological advancement by Alphabet, where they have a new quantum computing chip. That's after their announcement yesterday of Gemini 2.0. You've got, I mean, you know, what could be more follow-through for what the new administration's policies might be than to have none other than President-elect Trump visit this very stock exchange tomorrow at 9:30. If that doesn't send a signal that we want higher stock prices,
I'm going to be watching this week. I don't see anything Monday morning, but after hours, I do notice videos. If I'm in a trade or for Oracle, take it and just run it to the top tier of Time magazine, stay away from it, to the body of that one, and it's right around $27. So we definitely had a nice little breakout. Support to keep bullish, 28.33, and then we got another buck dip on that for solid, for maybe to start scalping it, and then just under $27 for a strong support. If it holds that flag, and that's right there at 26.81. That keeps it bullish. If it doesn't hold that support, then I'd short it all the way down to $25. Right there. 25, 26. I wouldn't even think twice about it. It could drop right here and stop too at 25.86. So this is a very volatile stock. It's getting pumped by roaring shitty. And you just got to be careful with it, but resistance to break will definitely be $31, and then you can run it on up to the wick of that clear candle right around 32.14. And then you got Macy's. Macy's has issues. I mean, this stock has run up because it's the holiday season. We hit my do have an support. expansion pattern on it, and it did break out of that expansion pattern. So we have some resistance levels here right around the $17 level, with right now the support being at $16.45, and then a stronger buy. I mean, if it does dip down Where in the hell? to $16, What happened to you? but I don't know. I probably would just be watching this stock because I'm not very bullish on earnings on I just don't trade Macy's much. I'm not into apparel. Apparel is kind of a seasonal thing. And since COVID lockdowns haven't been happening, they have, to me, they should be doing better than what they are because people are going out and want to still buy clothes. But that's the way it is. So we got a Darvis box down here for it to sell off and be a real strong buy. If it does not hold the $16, $15.92 level, this thing could easily drop down to $15.15. So I'm not $15.15. Macy's. Very bullish on it. We're going to use the 200 SMA as a resistance level to break. 1747. Up to 1783 on the daily 83. time frame. Toll Brothers, we did have a nice little pullback to So I got Macy's. Macy's, we hit the 15.15 today. So if I'd paid attention, I'd have bought that. Got to watch them videos, I'm telling you. Almost every one of them was right. Toll Brothers. I said we were going to have a pullback on Toll Brothers. If we hold the 21, this thing could easily run back up and double top. Earnings are going to come out and they'll probably be good. They're not going to be that good because housing, but still yet the stock run up with all these high interest rates. And the housing market, I think, is in a bubble right now. But we're at a solid support. And if that doesn't hold, this thing could drop down pretty good. Right around 140.87 for a strong buy. And your pivot point right now is going to be definitely the 63 EMA on the daily time frame, and resistance to break for right there at the gap. We have a gap trade here. See the gap? All the way up to 160. So it's 140 for low. 16, 160, 31. 151, so keep an eye on this. This looks like a real nice setup. If it has good earnings, it can bounce up and find resistance at 160. And that's only a couple bucks. And then have a double top up there right around the 167.91 if it likes its earnings this week. But it's in a good spot. I like this chart, but I'm kind of iffy about the scenario of the housing market, but it's had a great run. I mean, I can't complain. I mean, personally, I think it's overdone, but that's Toll Brothers. What'd I say? That's your earnings watch list. What'd I say? What'd I say? I said 140.87. What'd I say? Perfect, right to the penny. So I might buy this thing. I'm gonna see. I mean, I even said in this video, I need to go back myself because sometimes my calls and my videos are better than the ones that I do live. But I mean, now I can't help but do a dance on that one. Joe Biden is crashing out, and Kamala is at a dance party with Beyonce. Beyonce, 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 Beyonce. I'm impressed. I hate to say it. God dang, I hate to say it, man. That would have been a great put. So I'm going to look at the calls here. Toll Brother calls, TOL, for December 20th. The 145 strike. I'm going to go in small. I'm going to swing this. December 20th. Strike. 145. At 2.50. So I got myself a week. How much? Or should I go into next month? Let me look at next month. Maybe I'll go into next month. And that would be January the 17th. The 145 strikes are a little higher there. So I can do the 150s. Yeah. Got a little wider spread. So we'll buy 2 contracts for January the 17th. Who's going to become president? Who's made his living off of real estate? Who wants to lower the interest rates? Really lower them. He said 10% on credit cards. I mean, he's going to go to war with them idiots. This is the 150 strike. At 3.55. So I grabbed just 2. Total swing, January 17th, strike 150 at $2. 355. We'll see how this works out. I'm not much into swinging. I'm not a swinger. I thought I had a place in here where I could put a trade. Watch list charts, room alerts. Let's see if I'm right. Ooh, how'd I get roared shitty on there? That's funny. That's real funny. And then James says, I know I was the most valuable player. We'll see how this works out. He's a little nervous.
The week, and they were buying these when the stock was only up about 0.5% in the session, so these have already worked out well for this trader. But over 100,000 calls were bought up earlier this morning. I think volumes on this strike are now up close to 200,000. But early on, over 100,000 calls of these 140 calls that expire this Friday were scooped up. Average debit of only 80 cents because they were out of the money when they were putting these on. They've actually expanded in value as the stock's gone higher. But the break even for this trader, $140.80 over the next 2 days, that's less than 1% above the current share price. So, yeah.
Calling out of AMD, scaling out.
Some decent buying here early on in the session when the stock was actually under pressure. Looked like it was going to go negative.
Yes, I'm still in them.
Quite hard, and that working out for this trader going into the end of the week.
I'm also in stock.
Very interesting. So much
shares.
volume, so many trades on NVIDIA. A lot of liquidity, a lot of bets, a lot
I want
of trades,
420.
triple Qs too.
I want 420 and I want it now. $418.89. Oh, really? Optimism is on the rise with auto dealers. Wonder why. Elon Musk, first person worth $400 billion. As Tesla's $400 billion. Oh my God. Announcement. I got an announcement. I think I got to move my computer to Windows 11. Does anybody want to help me? Not now, but it needs to be done. Or do I have to take my computer in and be off for a couple of days? For a price? I'll let you in the room for free. I'll stop charging you. Let me see here what I was going to do. Good morning, retail traders. This is Washboardjim with a sneaky snake trading strategy. I got an announcement. President Trump and Elon Musk are going to make me rich in the year of 2025. Elon is now worth over $400 billion. Now I'm bullish on this stock. And when I see 750, he's going to be worth 800 billion. I'm going to help him get rich, and he's going to help me get rich. I have a target right now for Tesla. We've just notified in the room that 418.89 was resistance, and I have a 420. So when 420 hits, I'm going to go up to the cannabis store and buy me an edible. This is Washboardjim, the sneaky snake trading strategy, and have a great day. And I didn't have that recorded. Damn it! I gotta do it all over again. And it won't be as good. One more time. Good morning, retail traders. This is the sneaky snake trading strategy with Washboardjim, where I study chart patterns, moving averages, and being in the now. Speaking of being in the now, President Trump is going to be our president. Make America great again. We know he won 2020, but he definitely took 2024 in a landslide. So I'm bullish on Tesla right now. And Elon Musk, gummit. Now I've really messed it up. One more time. Okay. 3 times a charm. And this one won't be good as the last one. Plus I gotta get my face on here. And I'm gonna wear my hat. What? That message was for Wash? Serious, throw him a few bucks. Good for both of you. Do I know how to fly drones? Okay, here we go again. Good morning, retail traders. This is Washboardjim with a sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. Well, right now I want to talk about Trump and Elon. Trump won the 2024 election, thank God. And we are going to have one of the best years that we've ever had in our entire life. I've got a prediction. Elon Musk today is worth $400 billion. By the time we get to $750, he will be worth $800 billion. He'll be one of the richest men in the world. So right now, Tesla is at $419.73. So I'm going to scale out of this trade before I hit 420. I called 420 out today, and we're about to that part. Now this thing can keep going. Talking to the room about the animal spirit. Tesla has the animal spirit. And they finally got somebody in the White House that can use this man's mind and make America great again. So 420, I'm going to get out of my options here real soon. I'm going to get out. I might hold a couple, and I've got shares, and I'm going to hold my shares until I hit 750. So I'm real proud of Elon, him making $400 billion. This is the sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. Yabba dabba doo. Okay, you know what to do.
A little bit, you wanted to talk about alternative energy possibility of geologic hydrogen. Why is this important right now?
Well, as everyone has looked at, is the demand for energy here in the United States. We're looking at AI, the evolution of AI, the data centers, and it's going to require a tremendous amount of energy. I don't believe the electric grid here in the United States is going to provide that energy, as well as everything else that's providing or the need for energy as well. So within pure wave hydrogen, we're searching at and exploring for naturally occurring.
We're at 370 now in them calls.
Underneath those oil and gas formations, the horizons that typically produce oil and gas, we're looking below into the source rock. And hydrogen, in our opinion, is going to be a viable commercial energy source going into the future.
So a viable source in the future. People have been looking into nuclear power. That certainly was off the table years ago and has been on the table now. I mean, it's amazing when you look at some of the stocks and how they've been soaring, right?
Yeah, absolutely. Again, it's just the demand for energy, whether it's nuclear, whether it's solar, whether it's wind. For our perspective, it's geologic hydrogen. It's just an energy source and the demand here in the U.S. And I think with the new energy secretary coming in and his pro-oil and gas stance, in addition, looking at all forms of energy, that's the movement forward.
Yeah, understood. When you think about the different types of EVs, we have some that we make here in the States. Chinese EVs, very popular. You have European EVs. Can you break it down where success has come or what you think about
420
about these different competitors?
I think in the EV space, the Chinese definitely have a superior EV product, if you like. But is that going to be accessing the U.S. market? It's going to be very difficult, I think, with Trump's tariffs that he will put in force. And that's going to be the focus really on the U.S. EV market, the U.S. EV producer like Tesla and others.
Yeah, and are you watching gasoline prices? Because that's often, sometimes when we see high gasoline prices, people give back their big Suburban
420
and they go to a regular car. Maybe folks that have had cars, if they see high gas prices, might go to an EV. What kind of gasoline prices are you watching and the behavior that people may have going forward?
Well, you know, of course, it's all dependent on the price of oil. And as we've seen, oil is relatively volatile, but it's come off. It's under $70
Have a good
So
day.
prices to keep relatively cheap. And that's it's still going to be something the consumer is going to look for. You're going to have that consumer out there that's not going to change from the gas vehicle
Have a good day.
to an EV. That's just going to be the future. But the EV market and those consumers that are looking at that option, it's going to be available.
And I think about BYD in China, because you talked about some of the Chinese companies being superior, a lot of deliveries. Buffett was behind BYD. He liked that name. BYD and Tesla have gone back and forth on number of deliveries and leadership roles. Do you like BYD?
I like the Chinese EV for the consumer. Again, it's going to be difficult for them to sell it here in the United States, even with
Don't ever doubt the
that
wash.
Trump is proposing. But it's going to be difficult for getting the Chinese EV here in the U.S.
All right, Bruce Nurse, Pure Wave Hydrogen. Thank you, Bruce, for being here today and taking a look at the group. Thank you.
Today's been a
We'll
magnificent
focus on some of the
day.
headwinds facing commercial real estate. Are there tailwinds? What do we need to know about the new year when it comes to commercial real estate? Stay with us next here on the Watch List.
Meanwhile, back in PayPal. I'm gonna save that right there. So who put that in there? Oh shit. God darn it. What are you doing calling me, man?
Every morning.
I'll be right with you
every
here.
trade, Always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab. Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles?
Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Welcome back to the Watch List. I'm Nicole Petalides. We're taking a look at commercial real estate. Granted, the sector has had some headwinds, but maybe things will be different for 2025. Warren Waxberger is with us, CEO at Eldridge Acre Partners. Thank you for being with us. Up to this point, we saw a slow go of it. We saw a slow back to work. It was work from home. You had a high rate environment. Where do we stand now? Do you feel like it's more headwinds or tailwinds?
Firstly, thank you for having me on. It's great to be here in person. I think overall, we're sitting in a place where there's haves and have-nots. And so for some groups, there's a lot of headwinds, and for others, things are getting easier. And so as we look
things are going to get a lot easier, my friend.
What's going on with rates? Certainly 2025 is going to be a year to watch.
It is.
Let's talk about that with the haves and have-nots. I was saying here in New York City, the A-list buildings are doing incredibly well. I mean, they're at full capacity. They're fully leased. The rate environment should be more favorable. And commercial real estate, I mean, I've been in New York a long time, for many decades, and the people who made a lot of money made it in commercial real estate. Does that time come again now?
Yeah, I think we're entering a new cycle. I think we had a situation where we've had basically surprises since 2020. So you had the pandemic, you had inflation, you had rate increases, all these surprises that people didn't necessarily know about. And so we're going to see what the surprise is going to be in 2025. And so looking ahead into 2025, it does seem like we're entering a new cycle.
A lot of those leases that come due, I mean, now you have at least the idea that rates can come down, right? Where does the rate environment fit in?
So what's really interesting is that since the first rate cut in this cycle, actually the 10 years up between 70 or 80 basis points. And so the market's expecting potentially rates to go higher in the future. And so it's going to be interesting to see what happens. And that's for a variety of factors, whether it be people see GDP growth, people are anticipating inflation. We're running deficits at 6% of GDP in the US right now, so maybe there'll be more treasury issuances in the future. So it's going to be interesting to see that with all these rate cuts, whether or not we're actually going to see the long end of the curve come down.
When we talk about the different types of commercial real estate, I mean, I think about, obviously, there's office buildings, there's malls, there's medical spaces, right? I mean, there's a lot to multifamily, senior care. I mean, there's a lot that goes on. Tell me about the different spaces and what stands out to you, or what you cover more often than not.
Sure. So I think from just a long-term structural trend, the U.S. is very underhoused. If you think about it, depending on what statistic you look at, we're 3 to 4 million housing units underhoused in the U.S. So there's a huge supply-demand imbalance in housing. And so when we look at the investment horizon going forward, we have a very strong focus around housing, just because you've got some short-term cyclical issues going on, but these long-term structural trends around housing are incredible. And so from our perspective is that if you can take advantage of maybe some of the distress that's going on right now, and invest into an environment where there's these long-term structural trends, we feel really good about multifamily and other housing-related assets.
You have some concern about the defaults that you've been seeing on commercial real estate, right?
Yeah, that's right. So defaults are up. We have a wall of maturities coming next year, particularly on the floating rate side. And so it's going to be very interesting in 2025 to see how that's going to be impacted. Whether lenders are going to continue to extend and pretend, whether people are going to be forced to be in a position where they have to make a choice and potentially accept capital that's a little bit less. And so overall, I think it's going to be a really interesting year.
And I I think that, you know, when we talk about real estate, when you mentioned housing, and I think of homes, right, single homes and whatever, those are still relatively high when it comes to pricing. But some of the real estate values have dropped, and that could be problematic. No.
No.
For sure. When you look at
Not really.
overall commercial real estate and you look at
We're in a
some of the
bubble,
indexes,
chick.
You're seeing valuations probably bottomed towards the beginning of this year. And so whether that's going to plateau or whether we're going to see prices increase over time is a big question. And so one of the things that we're really focused on are sectors where we feel that there's a supply-demand imbalance that still exists and which will hopefully allow for prices to increase, and we're investing into an upward environment.
You know, I'm not hearing as much good news as I am more concerns. I mean, you're talking about a rate environment that's
That's because you hang around a bunch of liberals.
Real estate values that are relatively low, and the imbalance in supply and demand, which never really works when there's an imbalance. So it seemed, but you said maybe it's a different cycle. Maybe things are changing, or that happens in the next few years. Is that right? Tell me once again, probably the positive side of it.
Yeah, I think you're exactly right. I think for us, the view is this like the end of the GFC when we saw valuations bottom, and now we're entering into an environment where if you invest today, you're going to be able to reap the benefits of an upward trend. And so you never want to try to time the market, but looking at it on an aggregate basis feels pretty good in terms of being able to invest today, come into projects that are maybe having some distress at the moment, give them capital because the capital structure is broken, and then be in a position to see the market improve and benefit from that.
Do you find investors are doing well investing in
I think I made a mistake.
debt, basically?
No, I didn't. For sure. I think there's a lot of people who are investing in distress today who are doing well. The real question is everybody's been anticipating distress for the past 2 years, and what we've seen a lot of lenders who are allowing their borrowers to continue by giving them additional lifeline and so forth. And the question is that going to continue into 2025 or not? And are people going to be forced to take capital that maybe they wouldn't have taken otherwise?
And a lot of that can be, you know, private equity, credit, you know, venture capital. So it's a little bit out of the comfort zone of some folks. Some folks like to just look at the home builders or look at REITs. Do you recommend any of those as a group or an ETF?
I mean, we're less focused on public markets. I think for us, we're very focused on private markets, but certainly you've seen the REITs improve dramatically over the last year. And so I think if you're investing in sectors where those long-term fundamentals are good, like housing, that feels like a good place to be. But it's going to be interesting. You know, another stat just going back is something like 70% of all commercial real estate bank loans are small regional banks, and those banks have significantly decreased their lending, and so that's going to be another thing to watch going into 2025.
But you do see growth and opportunity.
For sure there's growth and opportunity. The question is can you enter, and are people willing to make deals where they are right now, and are you able to enter into a deal that someone is willing to allow you to participate in that growth and opportunity with them.
All right, Warren, thank you
I'm
so
a misogynist.
much. Warren Waxberger with us, CEO at Eldridge Acre Partners. Thank you.
I appreciate your time.
Nice to see you. Thanks. Still ahead, we'll bring in our panel and talk all about the inflation print, the CPI. That came out this morning, and PPI is tomorrow. Inflation still, I mean, it came in line, but inflation's still a bit sticky. Let's have our panel discuss this next.
Support for Tesla will be 417.38. 417.38. Come give my life.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Running in technical difficulties.
Schwab.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to the watch list. It's time to break down this morning's CPI print. When we think about inflation, it's still a bit sticky. It did come in line, slightly higher than the prior amount, the prior 0.2%. Ben Ayers is with us, senior economist at Nationwide, and Sam Burns, founder, chief strategist at Mill Street Research. Thank you both for being with us. Sam, some of your thoughts. I mean, what stood out to you in the report today? Was there anything you were looking for in particular?
Well, it's good to see you, Nicole. And I think the overall message from the report was the lack of sort of major surprises. There were a few things like hotel, rates.
Now look at Carvana have a nice pop today.
Month, which may have had
That'd be a good one.
Some of the storms we saw, last month.
Falling wedge.
That might have affected pricing there.
1, 2, 3.
And there are still some lagged effects from housing and motor vehicle insurance and things like that are coming through. I think the overall
You kidding about the insurance?
kind of flattened down in terms of the inflation rate. So I think the lack of any real surprises has allowed the markets to kind of respond more favorably today than they have for a lot of the reports in the past.
Right, so the actual 0.3%, the prior 0.2% for the CPI, that's the month over month, the actual being 2.7% year over year. Clearly, it's good news. It's certainly well off the highs, but still showing some stickiness, Ben. What stood out to you?
Yeah, I think, agree. The top line numbers were in line with expectations, but maybe just a little disappointing as we were hoping to see a little bit more downside as we head to the end of the year. I think the two areas that jumped out to me were the cooler readings for shelter costs and transportation services. These are two areas that have been very sticky and very hot for much of the year, and we saw some of the coolest numbers we've seen.
Good morning, retail traders. This is Washboardjim with a sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. Well, right now I'm going to talk about Trump and Elon. Trump won the 2024 election, thank God, and we are going to have one of the best years that we've ever had in our entire life. I've got a prediction. Elon Musk today is worth $400 billion. By the time we get to $750, he will be worth $800 billion. He'll be one of the richest men in the world. So right now, Tesla is at $419.73. So I'm going to scale out of this trade before I hit 420. I called 420 out today, and we're about to that part. Now this thing can keep going. Talking to the room about the animal spirit. Elon Tesla has the animal spirit. And they finally got somebody in the White House that can use this man's mind and make America great again. So 420, I'm going to get out of my options here real soon. I'm going to get out. I might hold a couple. And I've got shares, and I'm going to hold my shares until I hit 750. So I'm real proud of Elon, him making $400 billion. This is the sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. Yabba dabba doo. Carvana hit the 200 right now, so it definitely found resistance. Carvana's at the 200 on the 1 hour time, 30-minute time frame. Let me look at the 1 hour. See if we're at the 63. We're at the 200. What the heck? So the 200 on the hour and the 200 on the 30-minute. Interesting. We're closer on the 30-minute. What about the 15? We're over the 15 and we're above the 9. So that means we're still bullish on the 15. I would have sold on the 30. The 5-minute. I'd be squeezing out. I'd be getting out of the trade on the 5-minute. Then on the 1 minute. I'd think about getting out of it on the 1 minute also. So I have 4 odds of getting out. 4 odds to get out of the trade and 1 to keep it. I'm in swing on the Toll Brothers January 17th strike 150. We're probably down a little bit now. We're at 350. The 150 strike at 355. And I've went in small and I'll be adding if we dip down to the double bottom or we get down here to this pivot point area inside of this here pattern. This is called a bull flag, or a falling wedge, and there's always a pivot point in every flag. And this has been touched once, and we can touch it again, and that's where I'll add to the trade. I don't want it to go any lower than that, or I'll get out of it. We're at 355 right now. I was at 370, but I got a whole month and a week to take this, to hold this, so I'm not worried about it. IWM's hit my resistance level. God. Well, I don't want to. Here, let's do this. That way we don't see it. IWM hit my resistance. Let's see if we can turn this into a different time frame. A 5-minute, 5-day, or 1 minute. There we go. That's better. Let's do this. Snake. Breakout. Pull back. Boom. Hot child in the city. Running wild and looking pretty. Hot child in the city. Running wild and looking pretty. See how we bounced off the 200? Off the 200? Off the 200? You see what I'm coming up with here? And we used it as a pivot point inside of this flag, a megaphone out of the snake. No, it's not even a megaphone. 1, 2, 3, boom. Such a pretty world today. So you know how to do that, Roaring Kitty, how to fix computers? Oh boy, that's a low blow. Oh, my hot chocolate. I keep forgetting about my hot chocolate. Yeah. I'm having too much fun. Power hour.
To run, and they are doing just that. We've got really a pretty open field, it seems. Tomorrow, jobless claims and PPI, but CPI looked like perhaps the last risk point on a macro perspective, and we've moved through it with a breeze. Dow having a little bit of trouble, stock-specific stuff there when you get down to a list of just 30, so not as meaningful as what we've seen in the NASDAQ and the S&P. Even the Russell bouncing back too. Nice rally in small caps, which had been flailing a bit early on in the session after a strong start faded. Big tech took the baton. Sometimes that happens at a zero-sum cost to the small caps, but not right now. So you've got a nice, big, broad rally. Looking for just about everything to keep working here. We do have some earnings. Adobe's this afternoon. Broadcom is tomorrow. Maybe some positioning ahead of those reports as well. But generally, you've got enough going with AI and the themes around some of the giants that are in that Mag 7 cohort. The NAGS ETF from Dave Maz's team now almost to $57. Pretty incredible up and to the right chart, 2.5% higher. A couple really important names making big moves. Tesla, one of them with a fresh all-time high. Alphabet, the same. The list is not all of them, but it includes Amazon as well. Microsoft is still below the all-time highs, and Nvidia too, which is sitting right now just below 140, having still some trouble getting up and through that level. But the message is pretty clear. If you're not at an all-time high right now, the odds are looking like you're going to get there as stocks continue to broaden out their reach. And the Bitcoin and crypto market are also signaling risk on in a big way. BTC is above 100,000, 5% rally. MicroStrategy also heating up again. I'm watching that for indications of a fresh breakout in crypto. MSTR finding lots of support on the chart, keeps bouncing where it needs to, and the party rolls on. So if we get fresh higher highs, if you see that bottom panel on RSI, I'm watching that pretty carefully. Relative strength showing the momentum that's been under just a little bit of pressure. Maybe that'll pick back up and we'll see a wider embrace of a big risk-on move in crypto, which has been sitting below recent highs. But the message seems to be that all of that is like a matter of time. The bond market, once again, after this morning's move, is pretty calm. 10-year futures down a little bit, so there is some sign here that we do see a little treasury pushback from this morning's early bond bid. We did see also a 10-year auction. Doesn't seem to have too big of an impact, but maybe in there somewhere playing a role with bonds selling off around 1 p.m. But they have been fading all day. And if you look at the 5-day chart, you've got the 10-year and the dollar both rising. So, last few sessions, looking pretty potential for reversals. So, something to keep an eye on.
Jimmy missed a snake.
Nothing too alarming by any means. I think right now probably also root for bonds to sell off if the economy is just as good as expectations or better. So, dollar also.
Snake breakout, pullback, boom. Oh yeah, see, head and shoulders. I wasn't watching, but you got the left shoulder, the right shoulder, and then it came back and retested the right shoulder twice. So you got a brand new snake here. You got brand new snake off an inverse head and shoulders with the right and left shoulder. Boom. Once you understand it, I mean, I go over the same pattern every single day. If you ain't got it memorized by now, spank. I got my hot chocolate. Oh. What is this? Welcome to the beginning of a novice group. You know what the hell you're doing? The first verse I opened up was darkness. I gotta start somewhere else. Darkness. Okay.
Quantum computing last night because I was frankly so curious behind it. It's just numbers that you can't even comprehend. So
Yeah.
I think that Alphabet's story, and I think that a lot of these names have been really weighed down by regulatory concerns. We won't know anything about that. I mean, I guess we could get updates, but anti-regulation and this whole monopoly pressure.
AMD's got volume today.
Because I think that anytime you're able to give an update on where
Says
you're
Mara.
putting your cash for AI,
NVIDIA.
that's so much more important.
True. That's what's driving a lot of this. Broadcom tomorrow morning. Numbers that
Broadcom
can't,
tomorrow morning.
be fathomed by the mind. Don't you have a name for that, Kev? Video game numbers. Isn't that
Video
what you
game
said?
numbers.
Yeah.
Video game
That's
How about
what
this?
quantum computing is.
How about this?
Uh-huh.
How many people Googled septillion in the last 2 days?
Alex
I didn't.
and I both yesterday.
Exactly. How about this? November 21st, Google traded $163. Google Alphabet. That is like a beach ball held under the water. And the minute that story went to the back burner and the news flow turned positive, Google Alphabet, kaboom.
Well, there was a lot of, don't forget, there was a lot of talk about whether or not their search business was going to get
broken up.
That's
that day. That was the DOJ.
Right, but also, or if it was just going to get some competition from the AI stuff and Microsoft and others, and that always seemed to be a pretty overhyped concern when they do have the market really cornered. All right, Broadcom tomorrow. How important is this one too into the mix? I mean, we're right below the all-time highs. It's up 7% today. It seems like the market likes an update on its relationship with Apple. They're going to work on an AI chip together. And I mean, it just kind of looks like a stock that is begging to break out, because every chart that's looked like this has ended up breaking out, Jenny.
Yeah, and right now options market's implying about a $12 move on top of today. And today, like you said, I mean, there is some news in terms of like analyst coverage. I think anytime you can talk about a relationship with a major tech
If you
name,
get anything
it's,
from Novice,
quietly, maybe this is just I didn't pay attention. This isn't the sixth largest stock.
Anybody in the room?
I mean, I think these are.
if you get a message from Novice says, "Welcome to the beginning of Novice Group," I don't know what the hell that is. I just asked him. He don't know. It looks like this. So I don't know to talk back to it and say, "Who in the hell are you?" I'm just going to leave it there. He might have accidentally pushed something and done that too, because he only has 2/3 of his brain, but that ain't no joke. You got it. The other third shot out in Vietnam.
Appreciate it, guys.
He might
Thank you very
accidentally
much.
push the wrong key or something.
We'll be right back. Going to talk some macro and inflation as we got ahead here over the next about hour and 20 minutes. Stocks ramping up at highs of the session.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere.
I heard she might have had
on
cancer.
any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have Have a choice in how you invest with Schwab.
It might have been an accident, Mike. I'm not for sure what it is. If he accidentally hit a button. We'll just see. Just.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab
Oh,
Network.
what a day, man. I didn't have a 20 grand day, but I had a good one.
Stocks breaking out on a day with inflation numbers in the morning seems to point to a good relationship between bonds and stocks. Joining us to talk some macro and inflation going into next year, Campbell Harvey is a professor of finance at Duke University, director of research at Research Affiliates. Campbell, good to see you again. Good afternoon.
Good to see you also.
Hey, we had inflation this morning, and it seems the market's loving it, Campbell. You've talked to us before about how you view the Fed as kind of setting us up for failure here. Have you revised any of that? Do you think we're okay, or do you think we're still heading for a problem?
Yeah, so the inflation came in on expectation. Actually, interestingly, if you look at the not seasonally adjusted number for the month, it was negative.
Somebody's mic's on.
This was greeted positively. It's also just a plain
Swanson?
fact that inflation is not 2.7%
Swanson, your mic's on.
year over year. So if you look at the individual components of inflation, the largest component is shelter. So it's more than a third.
You should be able to still hear me.
Inflation. And that shelter is running at 4.7% year over year. That makes no sense whatsoever, just looking at rental prices or housing prices. That's based on old information.
I agree.
So 2/3 of that 2.7 print is driven by this inflated number. So inflation is well below 2% by any reasonable metric. And there's no excuse for the Fed not reducing rates again. Indeed, my preference is a larger cut than 25 basis points, even though I know that's not going to happen.
Well, you are going to get to 25, it seems like, and then it looks afterwards like a wait-and-see data dependency. Have they not been data dependent, though? They did take a little bit of a break, assess the data. It seems like the data are going their way, and they're cutting. Is this not a good approach?
It's not a good approach.
It's not a good approach.
There are so many mistakes that have been made. So number one mistake was to keep the rates at 0 or 25 basis points for an extended period of time. A period of time when it was obvious that inflation was surging. So again, looking at the housing prices and the implied rental prices, we could see double-digit inflation in the real-time data. Yet the number going into the CPI was like 1%. So that was like mistake number one. And that caused significant distortions in the economy, including many companies were kept afloat as zombie companies that should have gone out of business, their capital redeployed, their labor redeployed to more productive uses. And then once inflation appeared under control, the Fed was kept on increasing rates. And they increased to a point that far exceeded where they needed to go. And finally, the last mistake is keeping rates high for such a long period of time. So the rate should be lower. It should be 3.5% right now. And we know if you increase
I agree with him.
rates, or you keep high, that is bad for economic growth.
Yes.
Higher rates mean a higher cost of capital. It means that companies
High inflation.
are hesitant to invest
or they won't invest because the cost of capital is higher than the
Yes.
payoff of the project. So
They got it. He's 100% right. That's why we need to get rid of this pal. He went way too long, and it really upsets me. The market doesn't care, but the little people, it's hurting them. It's hurting them bad. I agree with him 100%.
Okay, maybe they should have let some of the mistakes here. If they should have let more. Did have a pretty big surge in bankruptcies over the last year. They're up like 35%, kind of back to pre-COVID trend. Because that would make me think then the implication would be they shouldn't cut anymore. They should still then try to kind of clean the excess out of the system. So if we're not gonna like go back and retrace steps, then how do we go forward then with this?
You get to 3.2%.
So it's obviously the most relevant thing.
4 would be fine.
What happens going forward?
Sure.
So I can say, well, if we'd managed this properly, if the Fed was using real-time data, then they would have reacted faster to the inflation surge, and they would have reduced rates after it was clear inflation was over. And in the counterfactual, and that's all it is, right? So
hire this guy, Trump.
Hypothetical, that's exactly the case. With history, we get only one observation. And it's important to actually look at other possibilities. What if? And that kind of informs future decisions. Well, the cost of having the growth that we've had is pretty significant. So think of our national debt, $35 trillion. Think of the situation over the last 12 months where the deficit is $1.9 trillion. A deficit when we've got okay growth, we've got low unemployment and record high stock market. So what that does is set up a scenario where not only have we grown slower over the last couple of years than we should have, but it is an impediment to future growth. Just the interest on the federal debt is $1.1 trillion a year, the second largest spending category.
God.
And that's with an average rate of 3.5%.
We got to drop the rates.
So this will crowd out growth in the future. So yes, I can criticize and talk about hypothetical scenarios, but what's really relevant is the spot that we're in right now and what it means going forward for the economy.
Who is this guy? He's smart.
And my argument is very simple. We have a structural deficit. It's very serious. The level of debt is also very serious. And we need to deal with it. And one way to deal with it that's the least painful, so forget raising taxes and printing money, the least painful way to reduce the deficit, to reduce the debt, is to grow. So growth is important because with the same tax rates, when you grow, there's more tax revenue, and that closes the gap on the deficit. So the cost here is that we've racked up a large amount of debt. We've got a deficit that appears out of control, and I don't see any policy measures being proposed that
Dodge, you dumb
address
butt.
that. We need to grow. And the Fed's mistakes over the last couple of years have put us in a bad position to grow. They should be focused on growth. That is the key problem. That is the key policy objective that they should be focused on.
This guy's good.
We're going to be monitoring it because the hopes are running.
This guy's very smart. But he'd forgot the DOGE. There's going to be a lot of infighting because of it. But we've got to stop the spending. These politicians are making $200 to $300 million now. I mean, they're making millions and millions of dollars.
We choose truth over facts.
That's right. We got to stop that government spending because they're pocketing it all. He's 100% right.
It comes to
I've been saying it for a year that we need to cut these rates. If we were at 5% or 4, I'd settle with 4 and leave it there for 2 or 3 years throughout his whole presidency. I'd just automatically shut him down at 4 and see what happens.
Schwab, a modern approach to wealth management.
You got to think ahead. But he said everything that I wanted to hear. $1.5 trillion interest rates. We spend $1 trillion every 3 months, or every month. $1 trillion our government spends. What I think I heard. I was just looking at the debt clock. Unfunded liabilities is at 220 trillion. 221 trillion. The deficit's at 36.2 trillion. Social Security liability is 27 trillion in debt. Medicare liability is 42 trillion in debt. Liability per citizen, 654,000. U.S. debt, 102 trillion. U.S. interest this year, $5 trillion, $342. 5 trillion, 342 billion, 189 million. Heck, I can't even say it so big. Tax revenue is 2 trillion, 2.3 trillion. We're 2.3 trillion over federal income. State revenue is 2 trillion. Average state revenue. $594 billion in charities. Student loan debt, 1,739,000. Darn, personal debt per citizen, 76,000. Savings per family is only 10,000. There's a problem.
This is growing. They need it to be somewhat manageable for them to manage the transition that they're kind of tight roping.
Okay. What then comes next now that we see that the pricing pressure will get mitigated, I'm using your word there, which is a good way to think about it, because they're still not really in the driver's seat, right? How do they continue then to try and reassert from the perspective of Warner Bros. Here? Can any content maker do that, or are they always just kind of going to be beholden to what the distributors and pricing, macro pricing deems?
So, look, this doesn't change their overall kind of concerns that are still on the name. It does remove this kind of, 2-year out type of uncertainty that was kind of overhang once they lost the NBA deal. They still just have to continue to execute, and that means they have to kind of continue to grow the streaming business, drive to profitability, and
that big engulfing candle there.
That part of their business to offset the declines that they're seeing in linear. And this is basically every legacy media company's conundrum or a thing that they're working through. Has shown that they're kind of further through it, and you see that's kind of reflected in kind of how the market is viewing them. Warner Brothers and Paramount less so, and so Warner Brothers is still on that path where they're kind of managing their cost base, their content, what they're creating, making it meaningful to consumers to be able to drive growth. They are expanding geographically. They have some expansions this year, next year, so that's helping them drive growth. But that's part of the whole process that they're still going through, and whether that's with content to bring in subscribers, whether that's with advertising that they're trying to do in streaming, all of those are still part and parcel to their growth strategy that they're executing on. They're still kind of not fully past the inflection point, but they still need to demonstrate that they can do that, and if they can do that, then that'll help mitigate a lot of the risk that's just stemming from just general linear television declines.
Very helpful. Hey, Jawad, is there anyone in the content realm that's particularly compelling in terms of credit quality? Is there anyone who sits atop the pile?
Yeah, I mean, look, Disney and Netflix are probably the two that are, the most strong right now. Netflix, just because they invented, the space, and they're just far ahead of everybody, approaching 300 million subscribers, global. They don't have any exposure to linear. And then Disney, same thing. They're kind of, they have the linear exposure, but most of it's in sports with ESPN, which still has a lot of premium quality. And then, Disney Plus and their other streaming services are definitely getting over the hump and showing that they can grow and that they can command higher pricing and advertising dollars, which is helpful. And then, Disney's entire flywheel with theme parks through their IP is also another huge place where they can monetize. So those two are just far more in advanced stages of this transition and are much more solid footing than the rest of the media space.
All right. Fantastic. Thanks for the analysis, Jawad. Timely.
Thank you.
Sure thing. Mr. Hussein covers media entertainment at S&P Global Ratings. Coming up, let's look at some options flows. Let's look at the technicals, melt up action, S&Ps in a real good spot. 6,100, getting closer by the second. We're like getting little points, little ticks higher every time we check on this screen.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
All right, let's look at the technicals. Kevin Green joins for a look at the charts and some options flows. KG, looks like we're closing back in on the all-time highs here for the S&P 500, closer to 61. What's our intraday? 60.99 from last week?
Yep, 60.99, spot 97. So we got fairly close, and we might attempt it in today's session here too. I mean, we still got around 30 minutes left to go in the session. I think the 60.90 level, which we'll kind of talk about here in a second, might be a little bit of a challenge here. But if we get enough enthusiasm, maybe some short covering taking place from some of these other names, that could be enough to really try to push us higher. Now, one thing to kind of note, we're still seeing a lack of participation. It's mega cap names that are really doing it, and Apple was actually a big participant to the upside earlier this morning. We actually saw a nice little squeeze to hit around $250, but it's since faded. So we still have Nvidia pushing higher, we still have Google pushing higher, we still have Tesla. So those are the main three. We want to continue to see those push higher, and or Apple kind of reverse here. Going into the close, this is what we highlighted this morning, but going into the close, 6,100 obviously is going to be in focus. And if we do have a reversal, if we have this kind of selling off going into the close for whatever reason, once again, kind of looking at that 60, 65, it's not something you don't want to really see right now. It would be kind of an aggressive sell-off here, but we did have an aggressive run-up too, so we're kind of trying to have good auction theory and be able to support prices. But what I find very interesting with this chart, we talked about it earlier. Yesterday we closed back into this channel that we kind of extended out, that blue channel. We obviously closed there, and then we kind of pushed higher. So we saw some buyers really stepping in. We had a good CPI report for the most part, and now we're kind of pushing higher. So we kind of cleared the way. PPI, if it comes in line with the street's expectations, also might be a nice little strong catalyst for us tomorrow, because that's going to give us 65% of the components for PC.
Oh, man.
Seems like you really have to have big negative shocks to derail the market right now. The slippage that we saw in the middle, or earlier this week, I think we did a good job describing that as most likely just a consolidation with a slight negative bias. So the support work that we talked about, and then to your point, once we got through that intermediate level, we really sort of took off with it. There was a couple of candles that kind of breezed through there. So it seems like the momentum is very strong.
It is very strong. Yeah, we broke out on the intermediate time frame, broke out, came back, retest. So that's a nice little technical sign. Saw some buyers stepping in and kind of pushed higher here. We also talked about yesterday the liquidity factor, and so we actually do have a chart here today to kind of highlight that. Yesterday I saw probably some of the more aggressive depth when it comes to the E-mini S&P 500, which I utilize as a gauge for liquidity in the market. If you look at that chart, Oliver, see that thing kind of moving to the upside here, especially over the last couple of trading sessions. This is a weekly chart, so this has the whole year encompassing it. Yesterday kind of hit the record, at least for the year, when it came to book depth. So we talked about that sell-off taking place, coming down, hitting that 60-30, but liquidity was actually increasing. So that means that we were able to absorb a lot of that price action to the downside, which gives bulls a little bit more confidence that we might be able to continue to push higher here. Now, other side of that is this kind of oscillates. So now we're at a very big extreme to the upside when it comes to liquidity, or we have really good market depth. Are we going to be able to maintain that, or are we going to see that kind of reverse going into the end of the year? That's a big question. For the E-mini S&P futures, you will see this chart mechanically kind of invert back to the inside here, because we will have rolls beginning around Monday or Tuesday of next week for the E-mini S&P futures, rolling from the December contracts to the month of the quarterly March contracts for next year. So this is a good gauge for now, but for next week we probably won't leverage it as the end-all be-all when it comes to book depth.
All right. That was also a good tell that you picked up on the last couple of days that looked real strong and real supportive of the market. So that's good too. Like that perspective. If we do get that all-time high breakout,
okay, we got Snake
on the options positioning. Any activity beyond anything in the ether past 6,100 that looks compelling for like a magnet or anything like that?
Nothing so far. I mean,
missed
6110 is
I don't know if I'd have took it, but I missed it.
Saw earlier this morning. I haven't seen anything that's been, moved up.
Probably not.
So let's say 6175 or anything of that nature. But those things actually update on a day-by-day basis. So I would not be surprised that we do kind of see this level being adjusted tomorrow. What's actually very interesting though is that negative gamma area. When you're looking at positioning, it hasn't really changed that much. There's still some stickiness down there. So what we could see is actually this widening out of these levels that we kind of focus on. Now, once again, it's not the end-all be-all, but that widening out also, when we've seen it in the past since we've been doing this, Oliver, could also say, show that we may have a little bit more intraday ranges in the market. Could also say that might be a little bit of volatility. It could also be in one direction. So if that's going to be the case,
what am I missing here?
It's exciting for some swing traders out there that are really looking for a decent move in the index.
Did it just pop or something?
All right. Great stuff. Thanks, Kevin Green.
Oh, it might be
good momentum here. Good pickup in the momentum too today as we push just to about 11 points below that all-time high. Coming up, let's get out of equities for a sec. Let's talk some crypto. Bitcoin on the move too, making a big upside rally. We're going to take a look at Apple as well, the latest on its AI release too.
I still have shares.
As we go into the last 20 minutes, BTC back above 102.
Oh boy. Hubba hubba. I gotta get on this treadmill and start doing treadmill now that I'm not walking.
Schwab Bank Investor Checking, the checking account built
I'll start
for
it
investors,
tomorrow.
named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors. Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support.
You're definitely
from the
going
Schwab
higher.
Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills.
Word's
with
getting out there,
online
the animal
education
spirit.
crafted just for traders. Also, you can trade brilliantly.
Welcome to Schwab Network,
Daily live exclusive content tailored to today's investors.
broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights,
Example trades and stock-specific analysis featuring the smartest minds in the business.
no politics,
No noise.
analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
And on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
Stocks are looking great. Bitcoin just as good. BTC right below the fresh all-time highs on a 5% rally. Dan Deming joins us for a look at crypto and some other stuff too. Dan, good afternoon. Stocks ripping. Bitcoin not missing out on it. Kind of got choppy the last few days since hitting above that 105. So I think we're back into the rally mode.
It appears to be the case, Oliver. Yeah, back above 100,000, and yeah, holding here, and it certainly appears that the momentum is now continuing to shift back towards the upside, not only in Bitcoin but other areas. You're seeing gold catch a bid. It's certainly in the tech sector. Some of the big names are reestablishing themselves as in leadership, and yeah. I mean, you're seeing it kind of different parts of the market today. That's what's kind
I'll tell you, this job wears you out.
That you're seeing various asset classes catching a significant bid today. And,
Might not think so,
I guess the
but
expectations with the CPI in line with.
you're talking, you're thinking, and being creative. I'm just wore out. Almost need silence. Oh. The ETFs are really doing good. Oh, shit. Got a knife to the 200 EMA. Damn, square.
especially because you are a non-iPhone user. And so let me give you the rundown on the update.
Yeah.
So Image Playground is what it's called, which allows users to create this variety of images using 3D and animation.
Square had a good day.
Utilize that in messaging and other apps. Genmoji, which is where users can create unique emojis from text. I mean, I thought that already existed. I guess not. Image Wand, which does allow you to use notes to transform now these simple sketches within notes. That's never been available before. That one actually kind of interested me, as well as then the visual intelligence with camera control that can now translate languages, identify items or places from surrounding environments, as well as find numbers and emails. This already exists on every major search engine. I mean, it's on Bing, it's on Safari even, or not Safari, excuse me, Chrome even. It's on, I mean, pretty much any platform now you can search using an image, which is, to my understanding, what this tool really does. Sure, it will be great on your iPhone, but I think the somewhat quiet rollout of all of the various updates to the iOS 18 has been intentional because, frankly, it doesn't really excite. I have the iOS 18 and I'm using Apple Intelligence.
Apple pulled back.
It learns my
What happened
behaviors
here?
and it can sort of learn how you would respond to messages, emails. It prioritizes those things. All of this, I'm pretty sure you already have on your phone right now.
Huh. I don't think I got custom emojis. That would be pretty cool.
A lot of news.
I know how I haven't
God,
used
look at
them
that
yet,
news.
but I was the most excited about drawing in notes, which frankly I guess maybe shows where my mind was at because
That I definitely do have.
and you have also text recognition within
Well, that looks
pictures already.
tempting.
Correct, yeah. But
Tempting
like
to
AI
swing.
images, I don't think I got that.
But I'm gonna wait.
Yeah, and animation seems cool because I do like the editing component, but I have seen recently a ton of flack on the way that they've redone the photos application specifically because I think that is very important to people. Not receiving great feedback so far. The Apple Intelligence component I'm still mixed on, but I just wouldn't drive me to go buy an
Definitely
iPhone,
out of
frankly.
support.
It's great because I have the iPhone. It's not making me upgrade anytime soon.
All right. Like it, Apple though a little lower, so kind of a fade, but at least it's sitting in highs after a couple weeks. So I guess I don't know how much to read into what this means about the products, but at least it's not down more as they do.
It can be.
Tend to soften up.
We dropped
the shares whenever they
246.
unveil products.
I'll wait.
Well, look, you throw people custom emojis and they're gonna go crazy. So maybe that's all it takes. Thanks, Jenny. All right, the second wave of Apple Intelligence, bringing the heat. Coming up, we got the big picture discussion with the Schwab squad, Michael Townsend and Michelle Gibley joining
Yeah, I
me.
can't
We
wait
talk
for this day to be in.
and international investing next.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Welcome back to Market on Close. We got some time until the bell here. Let's zoom out and talk big picture with Michelle Gibley and Michael Townsend as we assess policy and international markets heading into the end of the year. How's the fallout been over the last couple months or couple weeks, Mike, from your point of view on policy kind of formation and the groundwork being laid?
Yeah, you know, Oliver, I think we're looking at maybe investors underestimating a little bit how difficult some of these big sweeping policies that the incoming Trump administration is promising are going to be to actually put into practice. And, you know, we need details. We need details on tariffs. We need details on what direction they're going to go on taxes. We need details on how they're going to do mass deportations. All of that, I think the market is kind of waiting for. I think the market right now is definitely giving Trump the benefit of the doubt that this is all going to be positive. But you know, there's real concern in some areas that some of these policies could be inflationary. I also think people are underestimating a little bit, you know, how the narrow margins in Congress, particularly in the House of Representatives, are going to make this more difficult than it might otherwise be to get this stuff in. It's going to take a little time and a lot of negotiation, even in an all-Republican Congress, because the margins are so narrow. So lots to watch for as the new year comes around.
Is there anything that has whose probabilities have skewed higher or dramatically lower in the last few weeks? Any policy ideas? I mean, I know there were a few like picks that flopped, but as far as like a policy, I guess maybe it still is too early to kind of know which way odds are bending on some of them.
Yeah, you know, I think we're watching first, as you mentioned, some of these confirmations, I think, you know, are going to be maybe not completely smooth. It does look like the Defense Secretary nomination, Pete Hegseth, is trending in the right direction. He's had a lot of one-on-one meetings with senators who are going to end up having to vote for him. But, you know, a couple others could be challenging. But there's a sense that, you know, in the Senate that they want to give Trump the sort of, again, the benefit of the doubt. He should be able to pick who he wants for some of these positions. So, like I said, I think tariffs is going to be a big one to watch to see what the details are. I think we saw when the president-elect talked about putting tariffs on imports from Canada and Mexico, we saw a quick reaction from Canada. I mean, the prime minister flew to Mar-a-Lago in Florida to meet with the president-elect, and so I think that's indicative of maybe there's some degree of sort of strategy around negotiation and threatening that may mean the actual tariffs are maybe less than we think.
Duh.
Michelle, how much of the international calculus?
These analysts, Jimmy said it from the very start, didn't he? They need to read his book, The Art of the Deal. I do it with everybody. I do it with girls. I say, these are my rules. Don't cheat on me. Keep in touch. And you pay all the bills. That's why I don't have a girlfriend.
And so the currency actually of the other importing good goes down. So for example, the first trade war under the Trump administration,
we should going to be rich.
2019, tariffs on Chinese goods rose 16%, but the yuan fell 14%, offsetting almost all of the increase. So the impact, it might be less than what people expect.
Okay. Michelle, thinking about the Fed versus the rest of the world, the dollar still is remaining pretty big even as the cut for December gets locked in. Just how aggressive are these other central banks getting to cut, in particular, I guess, the ECB?
Yeah, we have the ECB tomorrow. Today we had the Bank of Canada cut by 50 basis points. Now, inflation there has stayed around 2% since the summertime. Unemployment has jumped, though, and so that gave them the reason to go by 50. In the Eurozone, inflation recently increased, so they're more likely to do 25 tomorrow than 50. But growth is slowing, and there's a concern that inflation could overshoot to the downside. So we could get a 50 basis points cut there sometime in coming months.
Wow.
In Germany next week, we have a no confidence vote. And so we have some changes happening in both France and Germany that could result in less fiscal spending cuts. It's a little bit more fiscal spending overall, and that could boost growth. Eurozone stocks are really kind of hated. They're trading at 40% discount to the S&P 500.
Wow. Always find the international valuation stats compelling. Mike, give me a closing quick thought here. One for the crypto folks. Paul Atkins is the SEC pick. Is he the type of guy to put Bitcoin on the balance sheet, or is he more just the type of guy to not aggressively try and go after businesses?
Yeah, look, solid pick. I think Wall Street is really, really happy with the pick. I think Atkins is a known quantity. He was an SEC commissioner in the George W. Bush administration. People know him. He is not a kind of burn it all down guy. He's more of a deliberative, thoughtful guy. Only need regulation if it's necessary.
Goodbye. A good day today. It's a very good day today. Trump's our president. Very good. Hit all my major resistance levels, plus Tesla hit more. This thing just got the animal instinct in it. I mean, the beast. It's going to be dips or buy. I've been saying it, mannequin since 160, 360? And we've been in these since $110. So I about wore out. Let me get out of here. I used to be in here 7 days a week studying and doing my thing, but now I just kind of 3 o'clock, I don't want nothing to do with this stuff. And then the weekends I want to be doing other things. But we're going to have a pullback sooner or later. But right now, I just got to enjoy the Christmas rally. A couple more weeks. Dips or a buy. Fat Cat's hated this stock for 4 years. Ever since Biden was an enemy of Elon, he was pro-union. Union can't stand Biden. We got a lot of the union vote this time around. A lot of the union vote. They're pissed off because of the open borders, taking away jobs. I keep hearing Fat Cats say, well, they're worried about deporting because it's going to hurt jobs. I don't see how, I don't want to be racist or bigot like a lot of my liberal friends say, well, we got to get the fields picked. We got to have people clean our toilets. And that's not the way I look at things. They're smart. They're very smart migrants. But you got to come in this country legally. The ones that are waiting in line are pissed off. The ones that have, education, that are studying the United States, they voted Trump. The Mexicans voted Trump. And you would think the Mexicans would be excited about open borders. But they're not. 75% of the vote. It's going to be a mess. I don't know how they're going to do it. I don't see how they can deport 12 or 20 million people that happened in the last 4 years. I can't see that happening. So they'll probably come up with some kind of amnesty bill, and you'll have to pass a test. But I don't know how you're going to get a hold of the 360,000 children that are lost, that they can't find, or the 13,000 murderers and the 30,000 rapists that come over the border. We got to get them out of here. I'd say any of them with a tattoo on them of a gang symbol have to go. I don't care if you're rehabbed or not. But I'm not the president, and I would have never let this happen if I was the president. I would have done something. I mean, made it a little faster or simpler instead of 10-year waiting list or whatever it is. I mean, just give them a good test and say, hey, if you can answer these 20 questions and get them all right, or get 80% of them right, and you can speak English, that's probably where I'd start. But I don't know. I'm not that much of a scholar. He's definitely pro-president, pro-business. I'm debating if he's going to get in there and really scorn on these people, or if he's just going to blow it off and just conduct business like he always does. It's going to be something to understand and explore. It's going to be another 4 years of history making. So I'm going to get out of here, and I had a good day today. I mean, I got stuck in a couple trades, but I was able to get out and rebounds. It was a healthy day, so like Mike said earlier, on days like today, you got to take good advantage of them. And I did, but also added, I had $4,000 in one of my calls. And that's a lot of money for me putting in one trade. But it paid off real nice. And then right after that, I got $1 out of 10 contracts. That was $1,000. And it could have got more. Tesla hit my target plus. I'm going to do another video on this. Now we got to use Fibonacci extensions, or we got to use, what do you call it? Within 6 lines. I got to think of it. To find new resistance levels. I usually take it in 10s, 5s and 10s, like 430 next, 435, 440, 450, 750 by probably July. I'm really hot on Tesla. I can't tell you how fired up I am. A lot more than I was on NVIDIA. And I traded NVIDIA every day when it was in the run. I'm a lot more tangled with this one here. I'm really bullish on Tesla right now. One factor, because we got a president that wants to work with him. The guy's smart. I mean, he's an innovator. So we'll just keep trading it. I guess I'm going to get on out of here. And I appreciate everybody. This wears me out sometimes, or I just want to just lay down and go to sleep. And dream. It's like I'm in a whole different world. I go to bed, I dream, and my dreams are always good. And I never dream about stocks, never. I've never dreamt about stocks. And I'm so gratified that I don't. I don't dream about money. And I'm glad I don't dream about money. I don't dream, my dreams are like Andy Griffith's story. Hometown, driving an old pickup truck, flying in the air. I used to have dreams where I flew. And dreams where I camped. And I'll tell you my dream tonight when I wake up in the morning. I'll jot it down and write it down and tell you exactly what I dreamt. So it's 38 degrees outside right now. We warmed up 9 degrees today. I'm gonna probably go out there and get my cleaner so it won't freeze up on me. And let me see. I think that's about it. Tesla, let me chart Tesla here. So support, we had a good breakout today. Resistance is going to be 430. Support is going to be the top of this wedge to hold. If that doesn't hold, then we'll drop more. Be the 9 and the 21. We'll stay. Remember my little lesson today about the moving averages. I might put out a lesson like that, but all day today we respected the 21 on the pullbacks. 21, the 21, the 21, the 21, the 21, the 21, the 21. So it respected that moving average all day today. And if that didn't hold, then we would have definitely took it to the 63. So when the 9 crossed the 21 and held above it, we were still bullish all day long. Still bullish to stay in the trade unless it dipped below. That one body candle dipped below, but then you were so close to the 61, 63, it might have not have made a difference, but that's on the 1 minute. It works in any time frame you want, but you got to just trade it under that time frame. And any moving average, you just got to memorize which ones work the best. These are the ones I've found the best for me. It's only 5 of them. I'm glad I added this 200 EMA on here. It took away the 50 SMA. So everybody have a great day. We'll see you.